Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, my son. May the 4th be with you.
Happy May 4th. May the 4th be with you.
Oh,
1
also
month.
with you.
1 month.
2, go ahead. Spill the beans. To what?
And to the Independence Day of all Independence Day. The Trader Independence Day of the end of PDT.
Patent
1 month
day trading.
from now. The big day.
Right. After 25 years, son. What have you done for 25 years? Besides wake up.
25 years ago, man, I was going to say I would be, getting ready for like football practice or something, but that was even before that.
That was before that. Yeah, for sure. Yeah.
25 years ago.
It's a long time.
I was
is all I'm
probably
trying to
eating
say.
an Eggo waffle on my bike ride to school. That's what I would be doing right now. So it's been a long time.
Been a long time.
Long time. A lot has happened
long
since
time.
then.
That's nice. 4-time leverage buying power
Uh-huh.
going away. Look at that. That's really nice. Good.
Yeah.
Finally, good job out of Wall Street, I guess, and the rest of everything.
They didn't do anything. They've been lobbying for this forever.
They have been.
The big wigs.
Now they finally got it going.
did something.
Finally got it going.
Yeah.
Well, how was your weekend, son? Besides the patent day trading rule going away in 1 month, how was your weekend?
It was good. I have quite the development.
Oh, do share. You didn't share with me earlier. Go ahead.
Executive member.
Hey, look
Executive
at that.
member.
Look at
No
that.
free ads. Costco is paying me under the table. Free membership.
Wow. And Costco's down $2 on that news, by the way.
Oh, wow. Unbelievable.
Down to 109 or so, 1,009, I should say.
Yeah, so that was my big event, was getting my Costco card. The only problem is I couldn't do any shopping afterwards because my freezer's filled with elk still.
From your buddy who gave you all the elk meat.
Yeah, so I still...
You didn't bring in any for me.
I know you're getting one tomorrow. You're getting a pound tomorrow. Mike got 3 pounds. 3 pounds of ground. He got also a summer sausage as well.
Very nice.
I told him, I was like, summertime, you want to make a charcuterie board? Perfect.
There you go. There you go.
Got some nice.
Just don't tell anybody. Like, I'm sure elk, I don't know if I've ever had elk.
It's venison, same thing.
Yeah, well, you just don't tell anybody. You just slice it up, you make it, you cook it, you make burgers.
Yeah, it's fine.
You
It's
just
the same.
I don't think you're capable of keeping the secret, but you keep the secret to yourself.
I think it's better knowing that it is elk. I think that's more interesting.
Nah, take it from somebody who doesn't necessarily want to eat the elk. We'd rather not know. Ask for forgiveness. It's better to ask for forgiveness than permission.
Well, you're getting a pound tomorrow of the elk.
Okay.
And then I'll have like 8 pounds left because I'm going to make elk burgers tonight. So after that.
You're going to need to go to Best Buy if there is one, or maybe...
Anybody on the team, if you guys want some elk, I'm hawking elk for free.
Free delivery.
Yeah.
Free delivery, too. Yeah. Just sign up for the service.
Organic. Fully organic. I mean,
yeah.
this is
yeah.
as good as it gets.
Did you ask him, like...
You can't even get this at Whole Foods.
Did they field dress it? I mean, they must have, I guess, to get the meat good. I mean, after they kill the elk, they got to
they
tie it up right there.
Butcher shop, they bring the whole thing there and the whole thing.
Elk is big.
It's huge. This thing was huge.
And do you know how big it was?
300 pounds. Like, it was like a huge one. It was huge. Its head was enormous.
Yeah.
It might even be bigger than that.
4.5 feet, and they can typically weigh anywhere between, 500 and 1,000 pounds.
Yeah. But that was my guess, was 350. But it was big.
And you've never seen one in the wild.
No.
And that was just
huge.
That was just your
It
guess.
was huge from the picture that I saw. It was huge. Yeah. I'm no hunter. I
get that.
I can't.
I get that. Yeah. That's okay.
Yeah.
That's all right.
So.
Well, very nice.
Well, you're getting that, though.
Okay.
It's coming your way soon.
I'll bring it home to your brother. I'm sure he'll enjoy it.
He will.
He will enjoy it. He's a fine connoisseur of things like that.
Hey, if he wants to be a chef, you gotta try that.
Yeah, I don't know what he wants to be these days. So I'm just trying to steer away from being a potteria. What would you call somebody who makes pottery?
I think it's a potter. I think it is a potter.
Yeah, potter.
Yeah.
Yeah, it's very good at ceramics.
Yeah.
The house is filled with.
Oh, I still got my ashtray.
Oh, there you go. I was going to ask you.
Yeah, I still got my little thing.
Very nice.
I'll take more. I would take a vase. A vase.
A vase. Yes, yeah, sure.
I would take one.
He's got a few of those. We might be able to make something happen for you.
Yeah.
You never know.
If you need to
careful,
get rid of
be
something.
careful what you ask for.
Yeah.
Careful what you ask for.
How was your weekend?
Weekend was pretty good. Starting backwards, because I think it started worse than it finished. It finished pretty good. We had a hot game last night, tied 3-3. It was a good game. Good game by the kids on both sides. It was pretty nice. But I started the week seeing the Michael Jackson movie. Look at your eyes. Your
Okay.
eyes. Oh, yeah.
How was that?
So I enjoyed it. Like, I liked it. While I was watching the movie, I liked it. I didn't like the ending. I don't want to spoil it for everybody, but they basically are going to tell you that there's a part 2 coming, which I felt a little cheated on. And I felt good. It was Friday night. Felt good, watching the movie. My wife was very happy. She loves Michael Jackson, as a lot of people have and did. And from that era, she's a little younger than me, so she really grew up with it. And I don't know, it was good. She cried during the movie. Yeah, so it was good. I mean, it was a good, entertaining movie. But then she got on TikTok. And you just can't have a good emotion.
You can't have a good time with TikTok.
Can't have a good time with TikTok.
Yeah.
Can't have a good time with TikTok. She gets on TikTok, and she sees Latoya? Who would be Janet. She sees Janet Jackson. Janet Jackson would be the second most famous. And she's not in the movie at all, and I didn't realize it. She's not in the movie at all.
They didn't want to pay her.
No, she wouldn't take the money because she says they're exploiting Michael and that it's completely false, and they gloss over a lot of the things that were really troubling him.
Ooh.
Yeah, they made it a little sensationalized, and Jermaine is just trying to do it for the money. So then I felt, and my wife felt, cheated. So listen to only the first half of what I told you about the Michael movie. Don't listen to the second half and go there and enjoy it. Because it was entertaining. It was good. It was good. The music was good. It was good. It was good. He was, as a kid, as an adult, obviously it was great. But as a kid, you forget. It was great. It was great music. Anyway, that was my weekend. Not too.
That was it. Michael Jackson.
Michael Jackson and a hockey game and cleaning the hot tub.
Yeah, there's no parties yet because it's been freezing. So
for Vinny? He's been asking me to turn the heat on in the pool, which I have it on, but it's not.
Yeah, Natty Gas is at the Lows, so it should be no problem.
Natty Gas is at the Lows. I'm actually long a little.
It's up small right now.
It's up small.
Yeah.
I'm up.
So it should be no problem for you.
Yeah, the 2.6, 2.7 area. I'm a little longer. It's 2.8 now. So
it's like the boat thing. Like if you have a pool, you're not worried about heating it. If you have the boat.
Actually, I double up. You go long that gas a little bit, so
that's true.
Kind of counter to hedge it. That's right. That's right. Yeah, I'm a hedger now.
Yeah.
See that? Perfect. Did you hedge any oil? Did you buy any oil yesterday? Because oil's up $1.50, and it was up about $4 more than that. You have a car.
No, my oil position is right where I need it to be.
Amazing. 104. Trade all the way up to 107.5.
Here.
Down to under 100. What's that?
I kind of want to buy some gold here.
Gold was down big. It's on its just $30 off of its lows, but 45.70 got down to 45.35.
Yeah, we're gonna nibble on that.
And silver's down big too, down 2.5%. 72.60 is the low. It's
3.5%. Do I get some of that too?
It was another $1.50 lower than this. It was down almost 5% at one point. So silver really getting it going to the downside.
Try and get some of that too.
Oh, look at you. Huh.
I know. It looked like, the open was benign on Sunday.
Yes, yeah.
Despite all the happenings that are going on.
Yeah, even the S&Ps were up like 10 or something like that.
Yeah. But felt like we were going to get, the Strait was closed all weekend.
Has it been open?
I don't know. Vecchio's going to.
Oh, yeah, Vecchio's going to come on. We're going to clear this all up.
We have a special edition instead of our daily recap that I usually do, because we do have the Research Corner, our look back segment for the whole week. We're going to bring Mr. Vecchio in, chat with him. It's a impromptu, tasty extra, hear me out, assume the position.
Oh, he's going to do all of it.
All of it.
All of it.
Yeah.
All of it.
So we're going to have him on.
Yeah, we'll see him in about 5 or 10 minutes. Yeah, it'd be great. Great.
But it felt like the news cycle has been getting a little more dicey.
Yeah, but does it have? Well, I guess I should say this for him. It hasn't seemed to have the overall market movement that you would expect. Like the oil itself, huge ranges in between. The news market itself. Although I did get the doji, the gravestone.
I'm going to ask him about that too. I don't know if it's.
We've put this to bed, but we
don't know if it's the gravestone doji or the abandoned baby. We haven't figured it out.
What's the difference between the two? One's worse than the other?
Hey.
I mean, if you're dead, you're dead. I mean, you can't be half
but
dead.
one, I don't know. We're going to have to figure that out, though, because that could be a big one.
That could be a big one, again. And even the S&Ps have had a range already this morning. Matter of fact, they're 30 handles off of their highs, but they're also about 40 handles off their lows. For what you said last night was kind of a nothing opening on Sunday. They opened up 5 or 10 handles on the even the S&Ps, and I mean, Bitcoin traded up to 81,000. It's 79.
I think there was more on the Clarity Act. I think that's like starting to move along.
Which one?
The Clarity Act. It's like, incorporating some of the stable coin stuff. Ryan has mentioned it a couple times.
Yeah.
Where there was that big holdup because Coinbase and all the custodians for crypto want to be able to push through yield, like via stablecoin yield to the consumer, and there's been all sorts of hold up on that. So I think there was some stuff that went through. I don't know the exact.
You didn't go to John Jay College of Criminal Justice. You want me to figure it out for you?
Sure, if you can figure it out. You read the legal documents, you should know.
Yeah.
How many months did you do there? 3 months?
I mean, if you go high to low.
It wasn't a full semester.
No.
So you did a couple months. So you're, you could be like a paralegal.
Isn't a semester 3 months?
No.
Well, I've claimed.
I guess if you do quarters, that's.
Yeah. We did quarters. That's what we did.
Yeah, so you did 1 quarter.
That's right. Okay. One more than everybody else in this room.
That's true. I don't think you get into I guess at John Jay College, it's probably right to the point. You don't really.
Yeah. You don't mess around. No. There's no frat stuff or anything.
No, not that. I'm talking about general education stuff. Because most colleges, first 2 years is just education. Then you get into the stuff that you do.
No. This was city subsidized. They were to the point. There was no BS. Yeah. $30 a credit.
Wow. That's pretty cheap.
That's
about as cheap as it gets.
It was me, a bunch.
You put that
of cops.
If you ever have to make a resume again, would you put that?
I have a feeling I could tell if that was that B. It's coming soon, but yeah, would I add that?
Would you add that to your resume?
I don't know. I'll have to see what AI says.
You should just take off the time that you spent there. Just put John Jay.
Criminal justice.
Yeah. Just put that as the headline.
Right. I got a lot of gaps.
What was your?
I got a lot of gaps in my timeline. I could just leave that there.
What was your major?
I'll just put that there.
What was the major? Do you even?
Criminal justice.
Okay.
Yeah. Oh yeah. You kidding me? I want to be an attorney.
Yeah.
Yeah.
Okay.
I would have been a good attorney.
You should put. You could do that.
I could do that.
You could put that on there. Yeah. I think that
would be a hard sell.
Hard sell. Yeah, but it's so far back that nobody would question it.
Do they look at anything? I mean, again, better to ask for forgiveness.
Yeah.
Permission.
I mean, you probably wouldn't make it past the initial screening, but if you did,
I'd get discriminated because of my age.
For sure. Oh yeah.
Yeah. That's what happened.
Yeah.
I'm destined for. Let me see your card again. Pull it out.
You'll be a Costco greeter.
Costco greeter.
You'll be the Costco greeter.
Excuse me. I didn't see your card.
I'll be like, yeah, Dad, remember me? I came in yesterday and saw you, Dad. I'm sorry.
All right,
That's
that's okay. That's okay. On that note, we'll take a quick little recap here of what's going on in the market, and then we'll get Mr. Vecchio in here. Even the S&P is down 11. Not telling you the whole story. Good range here of about 65 handles. Even the S&Ps have a 32 handle expected move so far at 7:15, kind of early. We'll see how that goes for the rest of the day. NASDAQ's actually turned green, not for the first time this morning that I've seen, but it's been oscillating back and forth here. Russell down 12, and the Dow the weakest of the group. Well, not really on a percentage basis. I guess the Russell's the weakest. Big number, almost down 200 on the Dow. Volatility up 6 cents. What do you think of volatility here? 1975 before we get Mr.
Doesn't go anywhere. It doesn't go anywhere. Even though, like last week when there was a little bit of weakness, volatility has just stayed right here. It doesn't go anywhere. It doesn't move.
Yep. Same thing with bonds. Bonds really haven't gone anywhere, though it does look like they've had a nice little move lower here. 112.27. They've been wrapped around 113, which is about the middle of the range for today. Bitcoin, like I told you, trade up to 81,000. 79.1 right now. Ethereum actually bucking the Bitcoin higher, going lower by 53 points here, down around 2.25. Oil all over the place, down to under 100. Up to over 107, sitting at 103. I don't know. Is this the high end of its most recent range? I don't know. Does that mean? I guess that's the way I would look at it too. Prices at the pump
right now, though.
It is jumping. Prices at the pump. Have you filled up lately?
Yeah, it's horrific.
Almost $5 here. Yeah. Unbelievable.
Downtown, it's $5.
Oh, I'm sure. Gold down 65. You nibbled on a little gold, didn't you?
Yeah, it's 70.
Beautiful.
I'm up like 10 handles right now.
Say again?
I'm up like 10 handles on it right now.
Look at you. Don't pat yourself on the back too hard.
No.
Silver down 2. That's a bigger move.
Stating facts here, okay? This isn't,
And nat gas traded down to 2.75, up to about 2.85, sitting at 2.80. That would be in the middle of the range. And we haven't talked about it, but you mentioned it to me on the break. Chip stocks going through the roof again. SanDisk will be a new high if it trades up and stays here today. 12.18 on the bid after closing at 21. After closing at 11.88. MU is another one that's up big too, up around $16 or so.
Oh, I mean, yeah, it's all about the chips.
We'll talk about those chip stocks. We'll talk about a lot more. NASDAQ.
This move in oil is interesting. Just sold off like $1 in the last 10 minutes. You had the NASDAQ rally. Even the bonds rallied here. You got gold rallying a little bit from the lows.
Yeah.
Kind of an interesting one there. I will say I have two comments that coming in through the chat. And if you got some more questions, we can take some during Confirm and Send. We got one person saying they still have elk meat in their freezer from 20 years ago, which isn't a good sign. Which isn't a good sign for me because I just don't have the space for it. So I'm
gonna get you a chest freezer. I was wondering.
I don't have the space for that. I don't have the space for that either. So I got to just
put it right in the living room. You have space.
I'm not putting it in my living room. So we also have Griffin talking about he's going to reach out to he's in the know in the academia, and he's going to reach out to the people at John Jay College. They'd like to give you an honorary degree. So we're going to get you an honorary degree. Maybe we'll put it on the wall. We could put it like in like the
a little dead space behind me.
The stuff over there. We could put that up for you.
Be nice.
Yeah,
be nice.
So I think that could be something.
Make it work. Yeah. I'd like to be honorary. Yeah. Would you want to be? Yeah, I would be an honorary. Would that? Yeah.
Well, no, I have a degree, so I don't have to. No, there's no honorary thing. I did it. I have one. I've accomplished it.
I'm going to take a quick 90-second break and come back. We got more Tasty Live after this. We got Mr. Vecchio coming in. We've got Confirm and Send with a bunch of questions from you, our viewers. We do appreciate that. We got an option Jive sometime around 8 o'clock.
Research Corner. Yeah, that's the Research Corner at around 8.
That's correct. We've got the Skinny on Options, Abstract Applications with Dr.
Nothing
Jim.
Says Mondays.
Nothing says Monday like that, man. And then we got a market measure with Kai.
Zero DT. It's going to be a good one. We're looking back at April performance.
Okay.
And we've done these like monthly recaps where we just look at the week itself or the month itself, monthly recap. This one, we're going to incorporate some of the rolling mechanics. So we're going to give you a little bit of both. We're going to give you a recap of just if you didn't, the standard, just enter, try close it at 25 to 50%. If not, you're holding it till expiration, or incorporating the rolling, like rolling up the put spread if that helped you this time around. So it's kind of it's a cool one. We're going to show management versus no management.
Yep.
On this
Yep. All right. Well, good job. We're going to do that.
You want me to scoopy this real quick? Or
Scoopy what?
This gold?
You mean sell it back out?
Yeah.
Yeah, sure. Scoopy. Here, look. I know you didn't go to John Jay College of Criminal Justice for 3 months, but Scoopy's buy. Okay?
Oh, it is.
It's only buy.
I thought Scoopy was just like, ooh, I made like 2 handles. Scoopy.
No. I mean, you could, if you bought them and sold them, you could say I Scoopy them and made 2 handles. But you can't sell them and say I'm Scoopying them.
Oh, I thought Scoopy was like, oh, wait, and there it goes for 20.
No, you just say I made a nice scalp, sold them back out.
I
Scoopy'd them well. You could say that. You could say I Scoopy'd them well.
See, I thought Scoopy was kind of like a pat on the back
Scoopy's buy.
For such a Johnny scalp, like a Scoopy, like 1 point.
No, Scoopy is a buy.
Okay. All right. Scoopy.
We're going to take a quick 90-second break and come back. We got more Tasty Live.
That was
after
a selly. Scoopy, then selly.
We'll be back in 90 seconds. Good for you.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Good morning, son. Guess what we're joined by? That's right, this man, Mr. Vecchio. How are you?
Did you say what? Not who? Okay, I see there. Okay.
Let's all wish Josh a happy birthday. Wait, it's his birthday.
Happy birthday, Josh.
Happy birthday, Josh.
Happy 60th birthday, Josh.
Yes. You said 70 on the break.
You did. That was mean.
That was a low blow.
That was a low blow.
It's okay.
Nothing ageist.
No,
Love my elders.
It's fine. It's fine.
Okay.
Is he really 60 though? No.
No, he's 50.
He's like in the like.
He's in his 20s.
No, certainly not.
All right, relax. He's not here. We don't need to make him feel that good.
Seriously,
That's
we're
right.
getting thrown under the bus. He is one though. He'll know about this somehow. He'll know about the discourse that has happened right here.
It's true.
And he will text you in probably the next hour or so and say, I heard that. The walls have ears, that sort of thing. he knows. It's uncanny.
But that's the kind of dedication, Nick. He's on his day off and he's still going to be listening to Tasty
That's
Live.
right.
That's true.
Right.
That's true. Yeah. Yeah.
Not bad.
Mr. Vecchio, how's your weekend? What do you do? You want some elk meat?
Ooh.
Yeah.
Before you answer this, Mr. Vecchio, because he will mail it. It says carefully eating elk or deer, depending on where it comes from. Chronic waste disease, CWD.
Oh,
Chronic waste disease. Like
Yeah.
are you
By
interested in
stocking-
elk meat?
It's like mad cow.
I eat
food.
everything. I eat all kinds of meat. I'm on like an exotic animal kick right now.
Oh yeah, I knew this.
My wife's not entertaining it, so it's a little disappointing.
You know what his secret is?
No.
Exotic-
What is your secret to looking so good since you're 65, right?
66 actually.
66, actually. Go ahead.
Exotic birds.
Exotic birds?
Birds.
You enjoy eating
ever-
exotic birds?
You ever have a peacock, Tony?
No, but I played one on TV.
Saying you're sitting along the shore of Lake Como. You're at a nice restaurant with your wife, and then you get served a peacock. What do? You eat it, and then you go back for more.
What does it taste like? What's like
chicken? Everything's chicken. Everything's chicken.
Really, all the I guess
Most of it tastes like chicken. Yeah.
Okay, that's kind of disappointing. I would expect it to be like.
They got that right in the Matrix. Everything tastes like chicken.
Yeah, damn.
The most exotic I've ever had. I've had pheasant. That's about it. And dove. I think I've had dove.
Dove.
Yeah, my buddy.
That feels like pigeon.
Anti-Catholic. Yeah, I don't know.
Like dove isn't dove just like
morning dove, like morning dove. There.
Dove is just like a pigeon that hasn't been eating like garbage.
It's a pigeon that hasn't made it to the city.
Yeah, right. Like, isn't it?
Your
Morning
dad's
dove is just a
exotic
suburban
bird list.
pigeon.
Your dad's exotic bird list is the 12 days of Christmas.
Yeah.
Like, what's going on here?
Oh my god, so good.
It happens. It happens.
Yeah, this weekend I was delighted to go spend. Got to see my daughter's dance recital this weekend, and she was fantastic. Very proud of her.
Yes.
So that was nice.
Fun time. Go. I know you're making fun, but it goes quick, man. I'm telling you, you're gonna yearn.
I can't
for those
believe I'm
days.
saying next month is her last month of kindergarten. When did that happen?
Yeah.
Right. So.
Well, I remember when Nick was had his last month of kindergarten, and the kindergarten teacher said he might have to do it again. So it's like I might have 2 years in kindergarten.
He liked it so much, he's going to come back next year.
Yeah. Thankfully, he did it in one. He was able to get
made
it
through that.
But
End of the year, you're like, thanks for everything you did for my son. Well, about that actually, we didn't do enough.
Yeah, we didn't quite make it through. Yeah.
It happens.
Too good. All right, well, Mr. Vecchio, let's right this ship here for a quick second. Tell me what's going on. Even the S&P is basically unchanged. Let's call the market basically unchanged at all-time highs here. I don't know what this pattern is called here. A lot of people
we've been asking if it's the gravestone doji or the abandoned baby or neither.
Or do you give a crap? Does it matter?
I've seen discourse of both.
Yeah, there has been discourse of both. I'm going to point out the one thing that I'm paying attention to because candlesticks on the way up, for what it's worth, haven't been that accurate. Just follow momentum.
No, you mean they're less accurate than they usually are? Is that what you're trying to say?
That's what I'm trying to say.
Okay. Yeah.
Insofar as momentum in the market's been very firm since March 31st in both ES and NQ, we've seen closes every single session above its 1 week moving average for both indexes. And even today, we found support there this morning in the S&P and in the NASDAQ on this little brief 6 a.m. Eastern time pullback for that 15 or 20 minute window where folks had a chance to buy the dip.
Mm-hmm.
But that's it. Now both S&P and NASDAQ are hanging about above their 5-day moving averages. So until that changes, there's really nothing to get worked over. There is the structure of this market for the past 5 weeks is still intact.
Okay.
There were a flurry of headlines all weekend. Straight open, straight closed, working on deals. I saw there was some tanker that got shot at, something like that. Is this all just behind us at this point? Does it just not matter? I mean, oil has been bid above 100 for what? Pretty much all week. Last week?
Yeah, who thought we'd be saying like bid above 100 all last week? I mean, oil did look like it had a ceiling around 100 at one point. Matter of fact, I talked about it not getting over 100, so I was wrong.
Is there any part of you that thinks that is going to matter again? Or is it we've just
the market has digested everything, and I think that's almost, I'm a bear, making me bearish. Like I want to see some of the two-sided action. Oil at 107 this morning. I would have thought the mini S&Ps would be down
bonds
100.
113 too.
Yeah,
you got rates higher.
It seems like the news and everything doesn't have any effect. But I'm sorry.
Yeah, what does it tell you about the durability of the equity market then? If oil was back down to 85 on a peace deal or a ceasefire headline, where would stocks go?
On the roof.
The earnings situation is just so outrageously good, and I don't think it's being given enough credit here.
Well, we've been talking about being a very resilient market, and to our credit, that's come to fruition. But at some point, you think you're going to have a little bit of two-sided action, and that point, I thought, had come already.
You would think so.
Well, here's when you're looking at the earnings, right? In any given quarter, typically speaking, you're looking at like 7-8% growth, and is considered a good quarter. Recently, we've been on this run where we've had 6 consecutive quarters of double-digit earnings growth. So in a world where your projected earnings growth is like 5, 6, 7% for the quarter, and then you get an oil shock that could take 1-2% off of S&P 500 earnings, that has a material impact on the stock market level. But Tony, the earnings going into this quarter, we're looking for 12% earnings growth. We're at 27.2% right now. So yeah, we can maybe have a 1 or 2% pullback in margins because of oil, but that is still subsumed by the other 20-odd% of growth that's coming.
Right.
And so maybe that's the reason why. It's just fundamentally such a different revenue environment for companies these days than it was during COVID or Russia, Ukraine, or anything happened to any other previous oil episode up until now.
I can buy it, but at some point, isn't it? The velocity of some of these moves, we talk about like the memory stocks all morning and some of the chip stocks. I know they're obviously
Korea was on fire last night.
They're the biggest headline, and they've been unbelievable. SMH I think was up 40% last month. Something around there, 45%. These moves have been huge, and the numbers have gotten huge, and there's a lot of gamma there. There's a lot of people speculating on the upside. Is that like a pinprick away from a reversal? You have all this, everybody is on the same side of this trade of a upside, tail move. If that doesn't materialize, does that mean anything? Is that what stalls us out a little bit? Is there any fear of that? Of just the constant
maybe in the
buying?
short term. Maybe in the short term, but one of the, looking through through publicly available volume data about how different groups are trading. That could be a CFTC COT, reports put together by Citadel, JP Morgan, just generally keeping my ear to the ground, so to speak. You've seen retail trading volume hasn't died off since the war started. It's shifted where it's gone. It's moved away from single stock trading. It's moved more into index level products. And over the past 2 or 3 weeks, when we've seen earnings come up, for example, that's when those kind of names have risen in the leaderboards. You can use something like a sentiment check from Wall Street Bets or just go to the OCC. But what we'll see is that there's retail traders, and a lot of people are still just trading the index level products. They're only going into the Apple when it's Apple earnings. Only going into Palantir when it's the Palantir earnings.
Well, Palantir has earnings tonight.
Today.
Tonight
after hours.
Close. Yeah.
Part of me thinks that, and I was talking about this with Ilya yesterday. It was one of my weekend reflections, Nick. I had an hour and a half in between my daughter's dance itself and then the end of the show.
Mm-hmm.
Okay, so I had a lot of time to think about things.
Yeah.
One of the things I was thinking about was, one of the structures of the market today that was not in place 5 or 10 years ago was the fact that you have all the 0 DTE trading volume right? 29% in February, for example, I have to check the March figures again, but 29% of options volume, or rather all volume in the market, was 0 DTEs and SPY, which is an incredible number. 5 years ago, 10 years ago, that wasn't the market structure. So if you're a 0 DTE retail person, what's the incentive for jumping in the pond full feet, just the way that you were, say, 5-6 months ago, when you're a tweet away from having your entire day ruined? So you're probably not doing that right now. You're probably taking a step back, doing a little bit more duration, not doing idiosyncratic risk. And until that changes, until the Iran war ends, we're probably not going to see that type of 0 DTE activity and structure to the degree that we had previously. But that means it's on the sidelines right now. And there's a lot of bullish potential short-term capital that's just waiting for a signal to come in. So I think that when the war ends or we get some kind of headline there, it's not going to be buy the rumor, sell the news initially. You're going to see people go, oh, I can finally go back in and buy my 50 Delta calls and go fishing because we're getting back into the summer months and low volume and low volatility and blah, 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 blah. And I don't need to be worried about the Iranian or the American propaganda hitting my newsfeed and screwing up my 0 DTE trade. So I think we need to.
So it's all about the 0 DTE trade.
Yeah, I think the market structure has legitimately changed in the past 5 and 10 years. And so talking about previous episodes compared to how people operate now, do any of us take seriously the 1929 comparisons? Never.
No.
Because the market structure is completely different. So
wow, I never thought a quasi pseudo technician would say that 1929 is different from now, 2010 is different from now. Everything is different from now because the market is bigger, different. Everything changes. That's why it's ever evolving. And you are right. I mean, retail investors have embraced the 0 day, but I don't know if that's indicative of a retail investor. Like, I don't know if that's my neighbor.
Your neighbors, maybe, yeah. Not mine and Nick's.
Yeah. I have a lot more degenerates in my building that are in the suburbs of Chicago and Glenview.
So do they trade 0 day options?
Well, I was gonna push back a little bit because I think the 0 day stuff is actually, when you're a little Johnny trader, I think it's looked at as less risky than something further out because it's so cheap. Like I could see the story being 0 DT is off the charts because nobody wants the tweet risk. It's all today and it's over. And then tomorrow, if there's a tweet, you don't have a position. Like, it's done with. And so I think a lot of the whippiness that we're seeing in single name stocks in the market as a whole is a reflection of just the short-term trading rather than, the longer term positioning. And that worries me a little bit, where I agree. I think an actual ceasefire or something, resolves with the situation in Iran. I think the first move is obviously higher, but I don't know how much that lasts.
I'm not sure it would last that long. I think people are going to want to try to take some profit. But then again, early April, we get this turnaround. And at the end of March, everyone's sold out, just like at the end of last March and April. So I'm going to stick to my little shtick here, which I was on last year. And now I'm going to get on this year, which is this is a chase market. Yeah. Just need to pull up the leaderboard on Bloomberg for the top performing hedge funds this year. And you'll see a lot of names that are underperforming the market right now. And it's because of when they decided to get out and get in. And that creates the chase incentive again through the summer months, which, Nick, I know we've talked about May seasonality here before, but I suppose I should just do it once more as we wind up our 20 minutes together. May is typically a good month. It's not a great month. You're really thinking about the stretch April, May, June, July as why you want to kind of stay long stocks, at least over the past 10 years. Past 11 years in a row have given you a green month of July, 100% of the time. Oof. So sell in May and go away. That's really when that term becomes popular, to take a step back from calling people who use it evil, which may be a little strong, as I've been told. But if you go back to when this phrase becomes popular in financial media, it's in the 2010s, in the early 2010s after the global financial crisis. And sure enough, in the preceding 10 and 15 years, you get this window where there's like a few years that are good, but when it's bad, it's really bad, like 6, 7, 8% drawdowns. But then that's when the road ended, like 2010. Moving forward, maybe becomes a normal month again. It becomes good. So it depends upon the time series you're looking at, the window with which you're viewing this. Recently, May, June, July have been very good months. There's no reason to get out of the way. Ilya's been taking issue with the volumes in the market, Tony. Nick, I'm going to just generally say over the summer, when there are lower volumes and low volatility and positive technical drift, the market tends to go up. So volumes be damned, you're still going to get paid if you're long and the market's running higher. Just like you get paid if the market's going down and there's no volume. It's not the end all be all.
You don't want to sell the creeper as
we've talked about that too.
Yeah.
I mean, these are nice sayings that, come to fruition half the amount of time, maybe a little bit more because there's some validity to them. But this has been one hell of a resilient market.
Unbelievable.
I mean, Vecchio,
baby.
Say again?
Earnings,
baby. 27%
earnings are always good.
It worries me now that we've gotten through all the
never had
earnings.
a quarter like this.
It's all in the market.
Oh my God, we've been waiting for earnings allegedly.
know,
Now we're through earnings. That's
what I'm saying is like
there's always something.
Yeah,
there's always something.
Well, now we have the
One
war.
battle after another, Tony.
But the war didn't go away. It's been there.
I know.
We still have one in the Ukraine for the last 4 years.
Yeah, that one doesn't matter.
That one doesn't matter anymore.
Vecchio, before we
Can we
go,
have world peace for just 5 minutes? Is that
before we go, Vecchio, I have some people saying in the chat that ostrich actually tastes a lot like steak. So they're pushing back on your everything tastes like chicken. Is an ostrich in the bird family?
It doesn't fly.
Yeah. It doesn't. It's not a. Yeah, it doesn't fly. Yes. Can you confirm if that tastes like chicken as well?
I'll get around to it. I've had ostrich eggs before. They're enormous.
Those are enormous. Those are
heaviest living species of bird in the world.
Oh, it is a bird. Okay, so you haven't had ostrich.
That is one I have not, but that doesn't seem that exotic,
Could you imagine opting, if you're evolving, opting rather to run than fly?
I don't think you have much of a choice. Okay.
No, sorry.
Mr. Vecchio, I'm going to let you stick your head in the sand because I don't believe a word you just said. And we're going to take a quick 90-second break. Come back. We got more Tasty Live. That's your new nickname, the Ostrich. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. We're going to go back to
Confirm and Send.
Confirm and Send. We'll be back in 90 seconds with Tasty Live.
Thank you, Chris.
Good job, Chris.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nikki, we are back, son, on this May 4th, as you pointed out. And our team actually pointed out in the back there. Great producers, thank you. That it's 1 month
to Trader Independence Day.
Trader Independence Day when patent day trading rule goes away.
Yes.
You got the
big day.
Countdown has begun.
Amazing.
But all that means nothing right now when we go to Confirm and Send. We also have some earnings, Palantir, VRTX, Shop, PayPal.
Ooh.
to name a few for you? Well, let's get to confirm and send, and then we can get to.
We had Norwegian Cruise Line this morning, as well as
I did not partake.
Berkshire Hathaway.
I did not partake.
/B.
Yeah.
What's that doing? It's up small.
I thought they were going out of business.
Berkshire?
Palantir is up $3.
Or Norwegian. Berkshire, I don't think so.
No, Berkshire's not going out of business. No.
Yeah, right. Norwegian down $1.
That's the one I thought was going out of business. All the
cruise lines.
Yes.
They've been going out of business for 5 years.
I was led to believe that. I was sold a bill of goods. Go ahead.
Don't look at Royal Caribbean. It's
sold off last 2 months or so.
Yeah, but you remember in the heat of the pandemic, it was at like $15.
Yes.
Maybe not that low, like
crazy.
25, 30.
Yes.
At 300 now, 260.
First one, please. What is an acceptable percentage of buying power relative to net lick to use in crypto?
Ooh. Well, I think it's a little different if you're using like an iBit or Ethe versus spot.
Okay,
I think spot.
That's fair. So if you were to answer it for the iBit, that kind of thing, you would stick in that
same sort of
like any other trade that you would make, whatever 3%.
Yeah,
1 to 5%,
2 to 5, 1 to 5, whatever.
Yeah, depending on account size.
Yeah, and your own risk tolerance and how bullish or bearish you are on the space. I think that'll reflect there. If it's a core position, you could have it be a little bit bigger. So using an iBit or an Ethe, I think it's a little bit more in line with everything else we do. If you're just doing spot allocation, I think in general it's just tough to do that because it's all cash secured. Not that PDT is going to matter that much in a couple months from now, but if you are in the smaller sized account, anything that you allocate towards crypto doesn't go towards your net lick in relation to PDT. PDT, it only applies to like your option portfolio capital usage. So like that money is basically in a separate account.
Yeah.
So not that that'll matter in 30 days, which is great. Mm-hmm. But I would say the spot trade is just really, really hard right now. I think it's really hard to make an argument for spot crypto unless it's a set it and forget it situation where you have X amount of capital that you just want to just park and not look at, touch, or do anything with. I think it's a really hard trade. I think just if you're looking to trade crypto, the leverage aspect of an iBit or Ethe makes spot almost useless. If you're looking at it for a trade.
Yeah, I would stick. We've talked about it as like 1%, and I'm going to stick with that. I mean, if you're in a smaller account, that under $25,000 account, I don't know if spot crypto, to your point, has a place.
Yeah.
If you're in that, I don't know, margin type area where you're in the portfolio margin type account, I think 1% is warranted. 3% is probably heavy. That's the way I would look at it.
I have some people saying that ostrich is almost like a turkey-ish. And then I have some.
I was reminded by my friend Joe Mama that turkeys don't fly either. So
that's true. There's a lot of birds that don't fly. That's good. That's a good call out. I also do have another one that ostrich doesn't taste like chicken. Crocodile does taste like chicken. I've had crocodile before.
Yeah, I don't find the allure of it. It's a little chewy.
Yeah.
Next question, please. Oof. It's a good thing you're reading this.
So is a put diagonal the best hedging position to hold in fear of a pullback from all-time highs? Does it make sense to always have a put diagonal on in the Qs or SPY to balance out a generally bullish portfolio? Or would something like a 15-day, 15-point wide butterfly to the downside work best to hedge? During the uncertainty with the war, Mikey B was putting on put butterflies in SPX to hedge his portfolio. When does it make sense to consider doing that to protect yourself to the downside? So talking about like put diagonal spreads versus butterflies, or a combination of the two as kind of a downside hedge. Does that?
Okay, yeah, because they're in a bullish portfolio.
Yeah.
So they're leading with bullish delta.
You're net bullish, you're
Right.
net long. You're putting on these, kind of dynamic positions as a hedge to the downside.
So both will work I'm talking about the put diagonal, not a call diagonal. Put diagonal, it's a short delta. You can have around 20 delta on entry. And the put butterfly, which is going to basically have 0 delta on entry. So now that should be your key right there, which one I'm going to prefer. I know I prefer the put diagonal because you will get paid on any kind of move lower, especially if you do them the way that we've been doing them on the show here, where you would be buying a put that's closer to the money and selling a put that's further out of the money, giving you long delta no matter what happens on the down move.
Short delta.
Sorry, giving you short delta because we're talking about puts here.
You're buying the long.
Yes. Giving you a crash scenario where we go down standard deviation or more, you're going to make money. We slowly go lower, you're going to make money. If we sit, you'll probably break even, lose a little bit of money. If you go up on a put diagonal, you're going to lose money. Butterfly, if you go down slowly, you're going to maximize your return on that. A little bit of capital put in there. Now, he is using SPX to hedge the portfolio, which is, so you're taking a very small position. I said basically 0 delta. Let's call it 1 short delta. On SPX, it's going to be equal 10 short delta to your overall position when you beta weight it to SPY. So he is making a small position greater by using a bigger product like SPX, but I still would default to the diagonal spread as my answer there.
Yeah.
Both would work in a slow moving kind of hedge. The problem with this trade is when do you take it off? Because you're leaning long. You are leaning long and we're going lower. You lose $300 for argument's sakes on your net portfolio because you've been leaning long, and you make $60 on your hedge. Is that the time to take it off? It's like when do you take off your hedge is so hard. I would rather you almost trade less long delta, 200 deltas, argument's sakes, on a $1 move than 300 deltas and put on the hedge. But it all works either way.
Yeah. I mean, the hedge is interesting because it's dynamic in that you have, your long volatility, you have some gamma to it, you're short some short-term volatility. So there's a little bit of flexibility to it with the diagonal spread. With the butterflies, using a 15-day butterfly, it is going to move a little bit faster than the further out, 40 some odd day butterfly that is really not doing anything for you in the short term. So I think to your point, one of them is going to, the butterfly is going to be really cheap.
Yeah.
It's going to be a low delta position.
It's not going to give you any help on a sustained move lower.
Yeah, on a sustained move lower, it's not going
to move.
But it could help you on a small move lower in a week time frame. If you're trading them on like a weekly, 1 week or 2 weeks out, it can hedge you a little bit. But I think both are a good way to get a little bit dynamic with your delta exposure, especially in a smaller size account, because both these trades, you're talking about dollars. Like put diagonal might cost you $800, $900 if you're doing 50, 20 day on SPY. A butterfly is going to cost you $1, $2.
That's correct.
15 points wide, 10 to 20% of the width.
That's correct. Oh, I forgot to mention to you, I did have some of your Jardinera this weekend too. Yeah, so I'll save some for the elk. I have a feeling I'm going to need it.
Perfect. I gotta figure out how I'm gonna do that this year. The Jardinera, tough one.
Next question.
Takes up a lot of space. The vinegar from the pickling, it sits in my condo for days, like a vinegary smell. Burns your eyes a little bit.
Do it out on a balcony.
I know. I was actually thinking about renting a storage unit.
Well, you have use the commandeered storage unit that you have.
Which one?
Didn't you take some empty space in the?
No, that's in my parking garage. I can't do that.
Oh no, you couldn't do that on the land that you don't own. Of course not.
No,
that's you.
I would do I was thinking a little storage unit. You get in there. I could get
$100 for the month or something.
Yeah, $100 for the month. Yeah. I wouldn't need I wouldn't do a fridge. I think I would just buy bags of ice and use to be my fridge. I don't know. We're thinking. It's a tough one. It's a tough decision. I want to do it again.
Next one, please. There you go. Since we close or roll at 21 DTE, days to expiration, because the risk is too great relative to the premium left in the trade, does it then make sense to buy options at 21 days? We've got this question often. It seems like it might be an inexpensive way to take directional shots. Boom, go.
I mean, it's not that the risk reward is certainly skewed against you at 21 days, and you usually have profits on the table. So the profit is also a risk because you can lose that money that you've gained. It doesn't necessarily mean that long options perform better in that time frame. You're still buying that premium, and that premium is going to decay in some way. So it's not that, like it's not a zero sum on every trade. Like just because you close a trade because there's a lot of risk doesn't mean that opening the opposite trade is more advantageous. It's just that both of those occurrences are different than what you're looking at 45 days till expiration. When you put the trade on 45 days, you have volatility exposure, you have time decay. It's not going to be as volatile from a gamma perspective, like moves in the stock. When you get closer to 21 days, those dynamics change. And so it's just a different trade. And so it doesn't necessarily mean that flipping the cards and going long that premium is better than being shorted. It's just that being shorted doesn't make the risk reward doesn't make sense at that point. And especially when you're managing a trade.
I don't mind what you're saying here, but I think you have to take it one step further. Look at, like we just talked about, a diagonal spread. I mean, buy the back month and sell the front month with long delta if that's what you want to do. And you get the directional, you get the premium erosion, fast erosion inside the 21 days. You got the directional risk that you want. Just buying the option to me is anything that's really easy to do is usually not the easiest way to make money. So I would abstain from that, but be selective, be a little, think outside the box a little bit here. Take your directional delta in that way. Find something else that, do a butterfly if you want to, risk even less to get the upside. That's the way I would look at it. Next one, please.
Does mainstream financial news media get anything right?
I think they get it right every day. The fact is they're just regurgitating what's happened already.
Yeah,
you know what I mean?
It's a look back.
It's when they step outside the box and try to think about what's going to happen in the future that they really get it wrong. Because they're not. To be fair, it's not their business. Like their business is news.
His eyeballs.
Their business is regurgitating what's out there. It's not risk. They've never traded. Most of them don't have positions in any of the stocks that they talk about. I mean, they'll hide behind, they're not allowed to, which is bullshit. There is no law that says you can't.
Yeah.
But they'll do that. So I mean, do they get anything right? I mean, I think they do a great job of regurgitating what's happening, but the rest of it is all BS.
Yeah, well said. I think the not having skin in the game is a big issue. I think that, it forces you to have an opinion and to go outside the box and at least think about something other than just regurgitating the headline.
Perfect.
Yes, I agree with that.
Next one, please. Which volatility product do you rely on for gouging overall market volatility gauging? Just kidding.
So we talk about, obviously, vol futures is kind of the main one.
/VX, is that what you're talking about?
Yes. So I put together this watch list that you can do on your own as well, where you can put all the vol futures through the end of the year in there, and you can go on even further, and it'll populate once they become active. I also like to look at VVIX, which is volatility of volatility. So kind of measures the volatility of the VIX itself, which I also have in there as well. You can also put all these VIX, these new CBOE, CBO products. So there's the VIX 1 day, the VIX 9 day, the VIX 3-month, and then the VIX 6-month. So this kind of just aggregates. If you're looking at the futures, you could do this. You could kind of see this easily. But like if you look at the VIX 6-day, it's going to be the same or right around, the end of the year volatility. As you can see here, 22.69, you have 22.65 here on the vol futures. But that's just kind of an easy way to put together a vol watch list. You could put I should probably put OVX in there.
OVX : CGI, you mean?
CGI, yes.
For oil volatility?
Yeah. So
which we'll look at after the opening for sure.
Yeah, so you could put that in here too. You just have to type it in with the CGI there.
Wow, look how easy you added that.
Yeah, you got this little add symbol button right here. So you can put whatever you want in there. If I want to add BE, put BE in there. I don't want to see that though because I need it down $50.
Very nice, very nice. Yeah, I look at /VX for a quick little answer. I don't look at VIX really at all during the day, but a lot of people do. I have no problem with that either. I think /VX is the best indicator of what the daily movement in volatility is in a step-by-step fashion, meaning, in real time.
Just got our biggest move.
Yeah, even the
Oil
S&P's
just rallied $1 and E-minis dropped 20.
Yeah, that's right. Even the S&P's down 18. Oil, you just mentioned, flirted with 104 just a second ago, up $1.70 and change. Volatility upticked small, and bonds are down.
Try and scoopy my gold again.
Oh, you doing it again?
I did scoopy it this time because I bought it. I scoopy'd gold.
You scoopy'd gold, and then you let it out. Now you scoopying it again.
Yeah.
Good job out of you. Next one, please.
And the dip spot.
And what?
The dip spot.
And the dip is bought is right. Even the S&P's down 12. NASDAQ, which was down 50 a minute ago, down 14.
Mr. Bat, what is a butterfly? You buy a put and then sell 2 calls and then sell a call or something. What's the benefit? I can't figure those things out and how they benefit you. What is a butterfly?
Okay, so a classic, you could look at any synthetic position and say it's a butterfly.
Iron condor, iron fly, broke wing butterfly, all the same.
Yes, you can synthesize it out to show on a risk graph, if you look at a risk graph, that this is like a butterfly. May not be a butterfly, but it's like a butterfly. Classic butterfly is 3 legs. The middle leg is short 2 strikes, and the 2 buys are further out of the money, usually equal distance away.
Yeah.
So if it's 100, you're long 1. Short 2 105s, long 110. That's a classic butterfly. You want the stock to land and close at expiration right at your short strike, which would be your max profit. That's a classic butterfly. Now, you could buy or sell a put spread, buy or sell a call spread on the same short strikes. That too would be a butterfly. There are many iterations of a butterfly. But a classic one is 3 legs, all in the same option series. All calls are up.
I think it's a good call out because I think a lot of people get caught up in the name or what do you call this strategy. Yes. It's really like the names are a way to identify kind of what you're doing.
Strangle, straddle, swap would be another way of doing
it's a butterfly with some duration on it. It's all, even a put diagonal or a call diagonal is sort of a butterfly because you're defined risk and you are playing, like you have that. See, when you look at the risk profile, you'll understand like I had an email about put condors. Like what? I heard put condors are better than iron condors. I said, well, it's the same exact trade.
Yep.
Like a put condor is an in the money put spread instead of an out of the money call spread, which is the same trade.
Yep.
And if you do it out of the money, it's actually a butterfly because that's what a traditional butterfly is a long spread and a short spread, at whatever strikes you want to use, but it's out of the money. So they're all kind of the same. When you understand options and when you get into more than just one position, like one iron condor on a trade, everything starts to look like a butterfly, and it's all about the risk profile of where all of your positions kind of start to work best. And that's what a butterfly is. Butterfly is that everything works best right at the short strikes.
A rose by any other name.
Yes.
Just a butterfly. Next one, please. All right, last one. I put on an iron condor on SPX some time ago where the verticals were in the 20 delta levels. I closed the put side and now have a defined risk position on the call side that is deep in the money. I am now under 21 days till expiration. How can I recover? I have tried to roll the position, but it was always been at a cost, so I have not done that. Roll up and out or just take the hit as I was willing to take. Thoughts? Nobody's willing to take the hit.
Yeah.
Now, you may have position sized it to fit your account.
Yeah.
Nobody's willing to take the hit because nobody wants to take the hit because that's not what we're here to do. But go ahead.
I mean, into a historic move that we've seen. If you've traded anything on both sides of the market, you are short delta here, and this is short delta. And you are probably tested on anything call spread that you sold, anything between the last month and couple weeks ago.
Yep.
Anything in that time frame, no matter what you did, and you probably had minimal time, if any, especially when you think about the sentiment and just like your feel for markets, there's no way you could have done anything to manage the trade. It just went too fast, too far. It was just too much. So at this point, those spreads, and I know you're saying they're deep in the money. It's probably not that deep in the money. It feels deep in the money, but a 100-point move is way different at 7,200 than it is at 6,300. So you're probably kind of on the dance floor.
Yeah, but okay.
Yeah, it depends.
Yeah,
Depends.
right.
But I'm saying
you're not. It's not unreasonable
to have a 100-point move.
To have a 100-point move.
That's not unreasonable. That's probably what the week is.
20-ish time frame that you're looking for.
Which might, even if you're in the money, it might be at the money on a 100-point down move.
Sure.
If you're short the 7,000, 7,100.
So you might get a chance to roll for a small credit.
Yeah. Well,
even on a down move.
Yeah. At this point, though, the spread probably trades for, a half to 3/4 of the width. The risk is already there. So now you can look at it like, all right, this is my downside hedge. Maybe this comes into play if we get a little bit of a sell-off. Ultimately, there isn't anything you can do with this trade.
Yep.
Is the problem.
Yep. Okay. Let's take a quick.
Unless you know some magic.
No, I don't know. I wish I did. I would tell everybody. I'll tell you some magic. Like you just said, the
dip
market the dip was bought. Nasdaq
oil just sold off a full out. Things are moving.
Things are moving fast. It's going to be nimble. Today's going to be another nimble day.
Yeah, no doubt.
We'll take a quick 90-second break and come back. We got more Tasty Live after this. Option Jive.
Yes.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility.
Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
It's options. Jive. Nikki, that's right. It is time for an option jive. As all things getting weirder and weirder in the market. Did you have this in your cards? GME.
Mm-hmm.
Thinking about buying eBay.
I don't understand the math. But
GME, $11-12 billion company, looking to buy eBay, a $46 billion company, and they say that they can issue stock to buy it. No.
I don't know.
No. To quote Mo Green, I believe, in The Godfather.
They can issue stock because they were.
I buy you out.
Yeah, that's what it seems like.
Just before Mo Green gets it in the eye. You ready for the research corner?
I'm ready for the research corner. Let's do it.
Option jive. Do it.
All right. So last week, a wild one, as it has been for quite some time now. The NASDAQ surged 15% in April, 15.64% in April, ranking first out of 251 months over the past 20 years. I thought it was second, but I guess it was the first. Or maybe we're wrong. It was first or second. It was an amazing April.
Right.
The Fed held rates steady at the FOMC meeting. That was, priced into the futures. Pretty non-event in terms of rates. With the confirmation approaching as the next regime shifts. No worries though, because Daddy Powell will stay on the board just to supervise and not, he's not going to put his neck on the line, but he'll be there.
There you go.
Yeah, and obviously pressure in the oil markets. California gas reached $6. That's a big number.
Yeah, it's a big number.
2023.
Yep. Yeah.
63%.
I think that's actually. That's for California. I think that's the average. I mean, there are some that are a lot higher than that. Sure.
63% of the S&P 500 companies reported Q1 earnings. 84% beat the EPS. 81% beat revenue, marking a historically strong earnings season, as Vecchio alluded to earlier this morning.
Very good. This
week, not much on the horizon. Not the bigger earnings have kind of passed already. I mean, you got some PMI employment numbers and Fed speakers. You got a jobs report coming on May 8th, but nothing like the Super Bowl that we had last week with FOMC and mega cap tech earnings. This is much less dull, or much less eventful.
No, but I mean, it is good to know. I mean, that since you're on the slide about it, if you do have Palantir, I mean, it is going to be, I don't know if it's a whole market mover, but it's certainly going to have an effect on a sector or so. Palantir is always one in the news. It's 144. It's actually trading 147 now, up around $3.5.
It's also the first week of sell in May and go away, which has now been.
Now you got an opportunity.
No. The Tasty audience knows that that's fake news. The suits want you to sell in May and go away because it's buy through July. So you buy through July,
Mr. Vecchio,
and then you sell.
That's right, has said and didn't say it today when he came on the show. After him with a wet noodle. Go.
Buy through July.
VRTX, Shop, Williams, WMB, if you're interested there.
Couple names.
Mm-hmm.
When we take a look at last week, so strong end to April there, 0.9% to the upside on the S&P. You got 1.5% on the NASDAQ, the Russell, 1% in the Dow, 0.6% to the upside. It has been the weakest of the group. It kind of caught up with some of the earnings at the end of April. Eli Lilly and Cat, those were two of the bigger movers of the Dow, and so that has helped kind of move that index a little bit higher. But everything was strong. You couldn't really miss over the last month if you were playing to the upside.
Which is typical of a down market or an up market. I mean, it's usually all rising tides lift all ships and bring them down too. So that's why it's so hard to find diversification in a portfolio. You can get strategy diversified to find diversification in a portfolio, but it's very hard to get stock diversification. Just buy or sell stock.
For sure.
But I mean, I guess if you use an inverse product, you certainly could, but then that has its own kind of drag to it. Yep.
Expect to move this week, 98 points here, so a pretty tight expected move. Not a shock with volatility futures, 1970 of the VIX itself below 18. So all these numbers are going to be coming in here. So it should be at least projected to be pretty tight range this week. When we look at volatility, you've had a little bit of an uptick in volatility in the market as a whole. You have bonds a little bit higher. Some of the currencies have been flying around. Gold volatility has been very, very, very compressed here. Gold and silver volatility have come in really bigly. Crude oil, obviously, volatility has been kind of a whippy back and forth. OVX settled in around 75 at the end of last week. Natty gas volatility has come in. It's gone lower. Bitcoin volatility has been all over the place, but a little bit lower as well last week.
Yeah, I mean, I can't add too much to that. That's 100% true.
When we look at the biggest movers, it's been the momentum stuff to the upside. All the memory stocks, you have SanDisk and STX. Those are the two biggest.
Continuing the rally today,
moves.
right?
Yeah, any price is too cheap. Intel has had just an unbelievable run, ripping my face off into that move. Google, huge move on earnings. Qualcomm, huge move on earnings. To the downside, it's really been, like consumer staples, stuff like that. You have some of the miners in there, Newmont being one of them. Robinhood has been super, super weak. But these moves have all been, more jarring to the upside than they have to the downside, certainly.
That's true. Hood up $2. Intel unchanged down small. Google unchanged down small. As you mentioned, SanDisk up big.
When you look at the NASDAQ here, April's 15.64 gain was the strongest month for the NASDAQ 100 in the past 20 years, ranking first out of 241 months, narrowly surpassing April of 2020. S&P 10.4% among the top 5 months in the past 20 years. So it's just been absolutely historic. In contrast, TLT had its fourth narrowest month range in 20 years, showing minimal movement. Bond volatility has felt day to day like you're getting these big moves, like full point in one direction. But the overall move, it's gone nowhere. It's kind of just chopped between 12 and 14 the entire time.
Yeah.
Currencies have been wild. So you had a intervention event, currency manipulation, whatever the hell they call it at this point. It gained 2.48% on Thursday. So the largest single day move since 2023 is a huge move in the yen, and currencies in general have been very, very volatile. Only 15 trading days in the past 20 years had a larger move. This was a 99.7 percentile here. So a huge move. It was a 3.94 standard deviation move, almost a 4 standard deviation move in the yen overnight.
And you lived through it. So tell us about your experience.
I survived. I think I was able to. I think I might have closed my position just before this, which would be indicative of trading the yen. You just it's death by paper cuts until one day you get bailed out by some whatever we're calling this, and then all of a sudden you scratch the trade because it was just paper cuts to death into that.
Okay, fair enough. Well said. How do you like trading Forex?
I hate it. Hate it. It's too quick, and it's just too I gotta listen to some European Fed official, their version of the Fed, whatever. I can't do it.
Earnings review, large mover. This is what Vecchio was talking about.
Yeah. So a lot of it has been momentum. You have B in there. Some of the chips like NXPI, Qualcomm is in there. I mean, these have just been astronomical moves to the upside here. Google is just off this list, but it would be the biggest of the group with a 10-15% move to the upside. Hood, Lemonade, Roblox to the downside. The moves have been, it's felt like you've had big moves. I'm sure our look back of the whole batch is going to be pretty inconclusive when we look at that too.
I haven't. So I have a Hood position that's kind of giving me some long delta. I did this in
move today should be good.
Yeah, today we've got a little bit move higher, but I did this in Nike too after earnings, which hasn't really moved after earnings at all. I'm basically unchanged, maybe down a quarter in Nike and Hood. I'm up a little bit, but I haven't looked at Roblox, which in quite some time that stock has fallen out of favor.
Huge move last week on earnings.
Yeah, Lemonade is down too, but down near its lows. Roblox is making new lows. Maybe there's something to do in there. So I take this slide with some appreciation. So thank you.
You give it a blessing.
Give it a blessing. There you go. That's what I was looking at. Next one, please.
So when we look at the whole batch of earnings here, it's been pretty 50-50 as it always is. A skew to the upside, no doubt. Average return of about 0.4% from last week. The batch as a whole, slight upward skew on earnings, which is certainly what it has felt like. Feels like it's been a pretty upside skewed earnings season for most of the trades that we've done. I think about like Intel and B and AMD that have just ripped my face off.
Yeah. Okay. Good. Very nice.
As for this week, you
50-50 again, though, right? I mean, that's where
so that's the number one
into
takeaway
the biggest, the Super Bowl you called it of earnings.
It's going to be your perspective of earnings and earnings trades are going to be influenced by the ones that you do specifically. Because when you look at the batch as a whole, it's very much 50-50. Maybe there's a slight upward skew, but for the ones you trade, those are going to be the ones that how you think of earnings season. I think of it as a bullish one this time around. There are more earnings coming up this week. So you have Palantir after the close today. That's the most interesting one of the group. PayPal and Shopify before the market opens tomorrow. You got AMD in there. Strategy in there as well. SMCI. Disney and Uber before the market opens on Wednesday. Got a couple after the close there. ARM, DoorDash, INQ, Snapchat, McDonald's later this week. You have Coinbase later this week, Airbnb, Affirm, Lyft. Got a couple names there. Cloudflare, which is Net, Square. So definitely some interesting ones still on the docket.
Yes, we do, and you still have an interesting market here. Throwing out whatever happened last night, you've got E-mini S&Ps hanging out here down around 10 handles for most of the session that we've been looking at. NASDAQ's been a little bit of a buck here, up 11. Let's call them both unchanged. The NASDAQ down around $7, and the Dow, your biggest loser, the downside, down 180. Volatility, 1970, hanging out in the middle of its range from last night, but really right here for most of the morning. Bonds down 11 ticks. That's on the lower end. Covered my bond puts from the other day when we traded over 113 and change. Maybe we'll look for more bond trades, for option trades today, every Monday through Friday. Maybe we'll do that. Bitcoin hanging in there at 79,000 and change. Ethereum kind of was a bucker. Now it's up around $33. Oil up 47 cents. Nothing to see here. Although you did have a big, almost $7,
$8. $3 range this morning.
It's at a $3 range this morning, $8 overnight. It's been a big range in oil. I looked at like XOM, which I have a position in, to see maybe it was catching a little bit of a bid here. It's not really. It looks like it's basically unchanged. But we'll see how the market opens. We'll take a quick 90-second break and come back. We got more Tasty Live after this.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Nicky, we are back, son. And you know what that means. Time for a little bit more Tasty Live. That's right, with the opening bell imminent in about 2.5 minutes here. Even the S&Ps.
About time.
About time is right. Even the S&P's hanging in here down 8. NASDAQ is the only bucker to the green side, up 16. Russell's down around 7, and the Dow's down around 190. Volatility unchanged at 1970. Bonds are down 9 ticks at 112.26. Bitcoin at the same price. I've been kind of quoting it all day, around 79,000. Now on the north side of 79,000, 79,280. Ethereum also on the north side of its close, 23.50, up $33. But really, oil's the big player here, up around 82 cents. But you can see oil has had some volatility to it, at least in price, if nothing else. We'll look at OVX. CGI for you after the market opens. Volatility 75.5. We'll see where that opens. I would imagine volatility is going to uptick in there. Gold down 70, trading right about where you bought it last time and scoopied it, as you like to say. Net gas up small. We'll take a look at some of the stocks when we open in about a minute and a half here. What'd you think last night going into sleepy time for you? It's going into sleepy time for you, and then the opening here.
There wasn't a dip to buy. I'm surprised that we just started, up on a Sunday. I feel like Sundays, MO's been, little dippy do.
Yeah, but the overnight market's been dippy do.
The
we
overnight
actually opened higher last night.
First time in.
So I thought we were going to open higher this morning. And go lower.
That's what I'm hoping.
So when I went to bed last night, that was my game plan.
Yeah,
we're going to open higher, and BAT is going to be a little bit aggressive to the downside.
Yeah.
Now
I would have liked that too.
I'm back in your
no man's land.
No man's land.
Yeah, you're no man's land. You have the ingredients for a little bit of a sell-off today. You got bonds moving lower. You got volatility up one little tick.
Yeah, oil up.
Oil going nuts. I mean,
you talked about this on Friday. We were getting the ick a little bit in the market.
Yeah.
It was like a Friday felt like a down day, and we were up.
You're not going to get it when the chip stocks are going.
No, you're not. No, you're not.
Like it's too strong.
Too
Too strong. You can't fade
Too
it.
strong. Can't. Oh, there you go. There's your opening bell. I'll wait then. There you go. Didn't realize the time. There's your opening bell. You mean the S&P's down 7, NASDAQ up 20. Floating your boat?
No, I'm getting hurt by some stuff.
By what?
Some stuff. Like I got this BE position is a thorn in my side. This stock, it's at 300.
BE was up also this morning, right?
What's
yeah,
Intel's probably up like $10.
No, Intel's unchanged,
wow.
I think. Yeah. BE up $10, new highs 103 and change if it's able to close up here. Intel trading 98 and change, down $1. Scoopy. See how easy it is to use
I can't
that?
scoopy $1.
Let's see what's moving this market. Lilly on the downside, down about 10. Car down 5 or 3 to 4, trading 180 and change. Caterpillar down 4. Costco on the rumor that you are now a Costco executive member, down 4. Meta down 3.
Yes, top tier executive member. I actually thought about the Costco credit card as well, just line of credit there as well. Didn't do it though.
Tesla down 2 or so. JP Morgan down around 3. Meta down 2 and change. GameStop down $1 and change.
Oh no.
$1.70 there. Tesla down $1 and change, although traded down to 87, up to 92. Let's see what the upside is looking at. SanDisk, as you mentioned, about $10 off of its highs, up $40. Light up $32, although it is about $15 off its high. So some of these stocks have opened on their high. We'll see what they do here. Circle up $10. Coin up almost $10, over 200. That's the first time it's been there in the last week or so when it flirted with its highs, most recent highs around 215 or so. eBay up $6 on that news that, or I don't know, event that GME might buy it. I don't know. I never thought I would see that in my lifetime, but go figure. Yes.
We did a circle diagonal spread, I think, on Friday. What is the first? Friday was the first.
Friday was the first.
832 to 1175.
Yeah, you did it right. You did it right in the morning. It was like your first trade. You bought it at 8:43, and you just sold it at like 11.75. You can see the markets are a little bit wide in there. Turned out to be a great trade. Again, that would be an example of kind of
taking the money and running.
Yeah, and you did it with 45 days versus 74 days. I had just done a 75-day trade, and you made fun of me, and then you go and do a 75-day trade, and you make money on it. So this is what, my idea, your gain. So good job out of you. That's okay. Gold, which you've traded back and forth, is right where you bought it last time, maybe a couple of pennies higher.
That's a CrowdStrike Iron Condor. I think this was a fast market or what's your assumption trade. I took $100 out of that. Just trying to take off a little bit of risk.
I don't blame you. Crowd up $6 and change.
Do you sell puts into this crash in Intel? Is it time?
Anytime Intel's been lower, if you sold puts, it worked for you.
That's what I'm saying. Oil
volatility up almost 3%, $2 to 77.44. So you do have oil volatility upticking a little bit, as you would think with oil going higher. Usually commodities increase there, and the two-sided action and movement that we've had in oil helping us there too.
MicroStrategy. So we did this diagonal
MSTR
on the 21st at 1090. I scalped out of the 200 strike call for $1.65, then sold it back out on Friday at $2.66. Closed the whole thing for $14.89. It's $500.
Great trade. You maximized.
I know. I feel kind of dirty closing it because I think obviously if Bitcoin starts moving here.
Oh, Bitcoin has moved. It traded up to 81 last night. It's 79.3. It hasn't moved right now.
Yeah.
Good job out of you so far.
Good job out of you.
Good job out of all of us.
What else do we have here?
What else do you have here?
I think
Robinhood up $3 and change. I'll have to take a look at my position when we go to break, see what's going on there. If I can get out of that, something.
Yeah, I got to do some in there too. Closing some of these MP diagonal spreads. I've done these at like 3, 5-ish. My net is somewhere around 4. I'm closing that at 6.
Oh, nice.
I'm just taking some
very nice
running on that position. I do have to do something in hood. I have covered calls here, which will be nice if we can close above this mark here.
Okay.
But I also have some diagonal spreads. Might leave on. You got.
Oh, look at you leaving it on now.
I'm gonna put diagonal spreads on because I have at the money. I have the 75 puts. I'm short the 75 straddle. It's a covered call on the upside, but the downside is a put diagonal. I'm long the 80 puts in June, short the May 75 puts against it. So I have like $5 of extrinsic value right at the money, covered to the upside. It's almost a closed position, but if we stay right here, which we have been right around 75, I've got some extrinsic value to capture there.
I'm in a similar position, but I'm 45 days versus 74 days. That was my one I was telling you about in hood, 75, 85. So I'm in the same boat as you as we sit here. Gold GLD down $3.80. Nike down 20 cents. Nvidia up almost $3. Palantir up almost $5. That's a good one.
Yeah.
Palantir.
NASDAQ rallying here a little bit.
NASDAQ is rallying a little bit here. I think I got filled on my Palantir, but I will check that in a moment. Even the S&P is down 7 or 8. NASDAQ down, NASDAQ up 10, sorry.
That was a Walmart 1x2. I think that was another like fast market trade. Took small profit on that.
Okay.
Is there anything new to put on? Like, is there anything that
you would think after all these years in the market, I would find
some of the defense stocks moving a little bit here.
Some of the defense stocks are moving. Yeah, some
like LMT just rallied like $5. RTX is stronger. I got a position there.
My buddy told me container stocks are moving too, but it's
container stocks.
Yeah, it's a hard one to trade.
Oh, what do you? I
don't even know one to be honest with you.
Sale Point, isn't that one of them?
Yes, yes, it would be.
Isn't there an Israeli one too?
I'm sure there is. Yeah,
Zim. That's the people trade that one. Zim Integrated Shipping Services.
ZIM?
LTD. ZIM.
LTD?
Zim. Aren't you learning so much from me? I know all these stupid things.
Larry, Tom, David?
Z. Zeta, Island, Mommy.
Zeta what?
Island.
Oh, because I would be E. But go ahead.
Island.
Got it.
What else do you say for I?
Mommy? Zim?
Iguana?
Zim down 7 cents. Earnings are coming.
I swear, this market will make you go nutty.
It will.
It really will. Like, you look at it's just, it's beautiful. It's great.
Palantir, I closed. I bought it at $760 on 423. Sold it at $860.
Ooh.
Today.
How does Daddy do it?
That was an 11-day versus a 45-day. So I was looking for a shorter time frame move in Palantir and got it. So I got lucky. So took that off.
Those are some calls left over from a call ratio spread. I took like $50 or $60 a contract on them on SoFi.
Very nice. The problem is, what do you do now?
Well, that's the million-dollar question. Now I'm just long the stock here at the lows, but it's bouncing a little bit today, so I figure I'd take some
Yeah, you can go to your Ivy rank list. Intel down 2 and change has the highest Ivy rank with no earnings looming. And then the rest of them, still have earnings looming. You go to post earnings trades. That would be probably the best thing to do. STX is up $15. It has a high implied volatility. You can get trouble there if you like.
God. Yeah, the memory stocks, the upside volatility is just through the roof.
Through the roof.
That even if you're like doing a calendar spread, it's going to cost you $20.
Yes.
To put that trade on.
Yes.
Diagonal spread costs you 30 or 40.
That's correct.
It's really hard. Like to be completely honest, the way to trade these,
please be completely.
I think is just straight up butterfly. Like you try to do
Now you're stealing a page from your boy.
Dr. Jim does
Dr. Jim, Mike would be another one.
Yeah.
But
even these butterflies, like, what do you think? I mean, you should know this because it's always the same. But a 50-point wide butterfly, in the 11-day, what do you think it trades at?
In what stock?
In MU.
50-day.
11-day, 50 points wide.
How far?
Like 600, 650, 700 stocks at 575.
It's going to trade 90 cents.
No. 50 points wide.
Oh, 50 points wide. $9. Sorry.
Yeah.
Yeah.
Like $7, $8.
Yeah.
But I don't know. You do one in the 4-day. You want to take a YOLO shot?
Sure. YOLO. Sure. If I had your money, I'd burn mine as worthless. It's basic. Oh, look at you.
There you go. $3. Right at the expected move. 25 points wide.
Good job, Pikachu.
Thank you.
NASDAQ up 38. Can't keep a good NASDAQ down.
They just
Dow, on the other
volatility.
hand. Yes.
I mean, not smashed it, but it's down.
Down 20 cents.
1%.
Yeah. And the Dow trading closer to its lows, down 270 for the day. And NASDAQ for the day trading closer to its highs. Not the highs from last night. I'm just talking about since we've been open for the last 10, 12 minutes or so.
Yes, you just can't. You can't get a dip. There will
get a sustained market.
You will never get a dip
lower
in my lifetime.
Oh my God!
Every single day.
You sound like my buddy Shark Jive.
Oh, he's on that train now. Shark Jive, I love him, but
you should because he's a wonderful man.
I would say bullish. He would call you. What is he smoking? What's this kid smoking? Now he's all on the train.
Wow.
You see,
wow,
Shark.
Wow. I'm gonna do
You can't be dogmatic. You can't marry your positions. Okay.
I'm gonna take a quick 90 seconds.
I'm gonna sell some puts in Intel.
Just to help the move lower.
If I get tested, I'm doing May. Okay. 11 days at the 90 strike for $2. If I get tested on this, I'm going to be...
They're $2.40, so don't sell them at $2, $2.45.
Yeah. I mean, I need Intel down, but if I get tested on these and miss out on the 20-point sell-off in this stock, I'm going to be a bad day. It's going to be a bad day.
It's going to be a bad day.
It's going to be a bad day.
It's going to be a bad day to... So this is a hedge trade for you, right?
I'm selling puts. I'm basically short stock.
Yeah.
So...
Yeah, you got to do something.
Yeah. This is something...
You did the MU butterfly for around $3. You did the 600, 625, 650.
Yeah. In all seriousness, I hope to get tested on it because my position will be a lot better. But
okay.
It would make me mad.
Okay, that's fair.
You do one of these stupid butterflies in SanDisk too?
I mean, you like throwing away money? Sure, why not? Yeah.
See, the problem is that's going to cost you $8,000-$9,000, something like that. You can't. It's I don't know how you trade it. Ooh, this is helping.
What's this?
AMD. Off a little bit.
AMD. Down $10. AMD after trading as high as 360.
Has earnings this week too.
360. Yeah, you're right. Their earnings May 5th, I believe, after the market closes.
That helps.
AMD down $10. AMD low is right here, about 348 or so. It opened near its highs around 360, 361. trading under 350.
And I legged out some of those gold calls too. I don't think I mentioned that. I sold them at like $3. They're marked at 90 cents.
Yeah, 92 cents. You bought them back. Yeah, and gold's hanging steady, right? We bought it last time around 45.70 and change. All right.
Yeah, good.
You ready to take a quick 90-second break? We can come in. We could talk to our man, Dr. Jim. You want to do that?
Yeah.
All right, let's do that. We'll take a quick 90-second break and come back. We got Dr. Jim, the skinny on options, abstract applications. Nothing says Monday like this man. We'll be back in 90 seconds. Let's taste it live.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement. Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, tastylive, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nicky, we are back, son, and you know what that means? Well, that music means only one thing, and nothing says Monday like this, man. I'm talking about Dr. Jim, the skinny on options, abstract applications, a.k.a. Mr. Monday. How are you, my friend?
Man, what's going on? We made it. We made it to the show. And so what are we doing now, guys? So now we're trading container stocks. Like, is that what we've gotten to? So now we're trading We're trading Israeli container stocks. Like, that's what we're doing?
I don't know. We didn't even do that, but we did look at it. We did look at it. I mean, he's
it's crazy
trading,
that we no. But it's crazy we even have to look at it. It's crazy we even have to think about it.
Agreed.
That's wild, man.
Yeah.
Listen,
look at this. Look at this. He's gone so far as to emulate and copy you, Dr. Jim. He's doing butterflies in MU and.
Well, I was gonna say that was his first taste of the craziness, because previous it was like hit them in their little bubble. They like it was kind of
course
it wasn't really in the know. When I told him about the Korean memory stocks, I saw his brain almost implode. It was like this.
I can't lose what little I have left.
He was like, is Korea Thailand / Taiwanese? It was kind of all grouped together, and I knew I really had him there. That was really problematic for you.
No, I love it. I love it. Yeah, we do a little Korean memory stock, a little shipping container pairs trade. Like, I think that's got to be, I mean, that's what we need. Like, that's what every portfolio needs. And Nick, just to help you out, by the way, come on, man. Like, I is indigo, bro. Like, I is indigo. Like, that's basic stuff. Like, I understand if you might struggle with like a V, or like an F or something. But I is very clearly indigo.
In the moment, I was struggling.
No, you buckled. You buckled under the pressure. That's okay. No, we've all been there.
Yeah. I tried. I is an island. I think that's not as good. Indigo.
It's not bad.
Indigo.
It's not bad. It's
Indigo's pretty
than
good. But more importantly,
M for mommy.
More importantly, Dr.
Mommy
Jim
was bad too. The mommy,
Mommy was bad.
Well, you got Mother's Day coming up, so I'm just thinking about my mommy.
There you go. See, look at that save. Look at that save right there. Man, that's it right there. Yeah, that's good stuff.
Jim, I do have a serious question for you, though.
Yeah.
Elk meat. Are you interested?
Elk meat?
Are you an elk meat guy? Have you ever had elk meat? Can I send you a care package?
Have you been watching too much Joe Rogan?
No, that's true. I didn't even think that angle.
That's right up his alley,
Is he
man.
elk meat?
No, but they do,
he eats all that stuff.
Yeah. Yeah, like raw, like Liver King style.
No. Like it should still be warm. Like if it's not still warm, like you're doing it wrong.
Yeah, exactly. Yeah. Just in the field, you have to eat it after you shoot it.
I've never had elk meat. I've not thought about elk meat. It's not really.
It's got to be high in protein.
Wildest, of course, all that stuff, all the animal stuff is going to be. But I would say the furthest I've ever gone, and this isn't even that far, but the furthest I've gone in terms of like going down that direction on the spectrum is probably bison. I think bison's probably the furthest I've gone.
Yeah, I like a bison burger. Bison burger.
Yeah,
I can do that. Okay.
So are you talking like elk meat, like venison?
Yeah.
Like, what are you talking about?
Yeah. So I've acquired 22 pounds of elk meat. It's currently in my freezer.
I've acquired. Like there was a fight for it.
No.
Yeah.
I was somewhat forced to take upon this batch of meat. And so I'm trying to disperse some of this meat around to anybody.
Oh, you're looking to pawn it off. Oh, okay.
Not pawn it off, gift it. Gift it.
Okay. 22 pounds. Yeah, but 22 pounds. Now I understand why you were looking into shipping containers this morning. Like,
exactly.
That makes sense. I mean, that's a lot of elk meat.
It's a lot of elk meat
that you got to get off your hands there.
It's not. It's a lot of elk meat. So that's really where this came from. And so it's
pretty interesting. I would love to hear the story behind how you got forced into a position to acquire and take upon yourself. I mean, were you long a bunch of elk contracts and you just let them expire in the money?
No,
you had to take delivery.
I have a friend of a friend who is a hunter, an avid hunter, and hunted the elk, and has now acquired the said elk meat,
and now has to give it away.
And now, they also have the similar problem, but they have like a trunk freezer, but the entire trunk freezer is filled with elk meat. So now
he wants to go bear hunting.
Yes, and so the other part of it is he has a ranch out in Montana. His family has a ranch out in Montana.
Congratulations on your wealth, my lord.
And he's been tracking a bear on his ranch, and so he's flying out to go hunt the bear. So he has to clean out the freezer with
Why don't you go with him?
The what?
Why don't you go with him?
No. No, I can't do that.
I mean,
watch that movie. Watch that movie with
Leonardo.
With Leonardo DiCaprio first before you go.
The Revenant.
The Revenant? Yeah, it sounds like you just laid out the plot to The Revenant too. Like that's what it sounds like to me.
Pretty much.
You just kind of took out the sequel to The Revenant. Yeah. Okay. All right.
My buddy Peter just told me that and he gave me a whole list of all of the phonetic alphabet. I is India. M is Mike.
No, that's wrong. It's indigo.
No, it's India and Mike.
I don't know if I believe.
And my other simpleton friend wants to rebut back to you about Korea and Thailand. They're just undercover Chinese people. So just remember
All right,
that.
well, let's get to some
Yeah,
finance.
we're
Hey,
All right, let's
before
go,
we get to
man.
that, Dr. Jim, thank you for trying to save me. How about your Buffalo Sabres?
How about my Buffalo Sabres,
That's
man? I've been
right.
telling y'all about. I mean, we've been focused on elk and bear. That I completely forgot about my buffalo. But
Yeah.
look at
That's
my
right.
Buffalo Sabres,
That's right.
man.
There you go.
Yeah.
There you go.
I'm just saying.
Good job out of you.
I mean, look at that. Day one. Check the tapes. All right, let's go to finance. Okay.
Let's go to
So
finance.
can we trust the probabilities? I don't know, guys. I think this might be the most important question.
Okay.
Like this might literally be the most important question for us as active traders inside of a tasty ecosystem. Can we trust the probabilities? I don't know. You guys, what do you guys think? Can we trust them?
I think we have to.
That's all we got.
I agree. I think reluctantly, we have to at least give them a shot. Okay,
Yeah,
high
sure.
probabilities are at the core of what we do on a daily basis inside the tasty ecosystem, and the combination of managing winners and giving losers duration produces an environment where there are plenty of winners to manage. But as you study the findings around probabilities, it's natural to ask, how do I know that the probabilities will work out for me over time? I mean, this is a very natural question. I get it all the time. I'm sure you guys too, because we see all the studies and all the market measures, options, Jives, what have you. And it's like, man, like the numbers look so impressive. The empirical numbers look so good. That's very natural to wonder, like, is this actually going to work? Like, is this actually going to be something that I'm going to be able to kind of tap into? I mean, do you guys find yourself kind of fielding a question like that on a regular basis?
For sure. I think the other side of the coin is I see this super high probability trade. Why not just do this one? Why not do the 95 pop?
Right.
90 set, that's the other side of the coin. But yeah, I think this comes up a lot. This also comes up a lot when you have people trying to do a zero sum. I make $1 90% of the time. I lose $9 10% of the time. I'm a net loser.
Baby.
Every
So why don't you kill me? God, it's a song.
yeah. So it's the other side of that coin is like, the zero sum, all or nothing, all winners, 100% winners, all losers, 100% losers. That's the other side of the coin, especially with the defined risk spread traders.
Of course, yeah, absolutely. And maybe that'll be next week's segment because, yeah, that's another aspect to this that is very closely related, but it's kind of a separate discussion in and of itself with the zero-sum game aspect. I think it would be worthwhile to kind of dig into that.
For sure.
But yeah, no, that's 100% right. And you're right. I mean, pushing the super high probabilities. We talked about that just recently here on this show. I think it was a couple weeks ago. And so this is a different direction. Okay, so the key to answering this question and to understanding this question is we need to know the difference between a sample and a population when it comes to statistics. And that's what I want to talk about here this morning. So go ahead and bring us to the next slide. There you go. Okay, so the answer to this question is sample stats and population stats. So if I take a sample, so in our there's a million different ways we could do this, but I wanted to do something that was relevant for us in terms of active traders. If I'm looking at a sample and I'm looking at 45-day trades in my portfolio, just take strangles or short puts, like something really simple, right? I might have 12 of those in my portfolio, like right now or like over the last month or whatever, just some small sample that is in my personal portfolio. And I'm trying to figure out, okay, I'm looking at the study in SPY, QQQ, Apple, NVIDIA, whatever, and I want to know 5,000 observations, 10,000 observations. Like, is that going to translate to me at this very small scale level? So my sample is my 45-day trades in my portfolio, but the whole population of whatever strategy this might be, a strangle, a short put, whatever, that's going to be like what you see on a market measures. That's going to be like what you see when the team goes back 10, 15, 20 years, whatever, and they show, okay, we looked at 5,000 strangles in the SPY over the last decade. Right, that's going to be the whole population. Okay, so when we start thinking about will the probabilities work for us, we need to understand, first and foremost, you have a sample, you have a population. The sample is kind of the micro level. The population is kind of the macro level. And so again, we need to think about, when I'm looking at this through my lens in my portfolio, can I translate the results to my portfolio? And the answer is yes. Do you guys know why? So a little pop quiz this morning. I know Nick's trying to, he's focused on unloading this elk meat, but let's see if he can remember the reason why this is true.
I'm not of little help here.
So
I'll give you a hint. You both should know.
That's the hint?
Yeah, I don't.
Are you belittling us? Is the hint?
No. Well, no. Not belittling. Not
You know that
belittling
the
you at all.
sample isn't indicative of the population.
Well, no. So actually, we need to go in the other direction. So what we want, right? Like if you look at a market measure study, right?
Yeah.
The population is thousands of observations, and you see the results, you see the P&Ls, you see whatever. That's what we all want.
Yes.
So we actually want the sample to mimic the population. So my question is, will the sample mimic the population? The answer is yes, it will. But how do we know that it will? What is the bridge? What is the pathway that's going to take us from theory to practice?
I don't know. You have me.
You have stumped. You have
I'm
stumped.
thinking. I thought the angle you were going was that the variance of a sample isn't always going to give you the outcomes of the population. The population is like, if you're at a roulette table, you get 10 reds in a row. It defies all probabilities because it's just a tiny little sample. It's not indicative of the actual statistics of a population. That's where I was thinking. Am I off?
So we could definitely go that. We could go that route. That's a different route that I'm not going to take. But I'm actually curious now. So you are at a roulette table.
Yes.
Both of you guys. You're at a roulette table. You see 10 reds in a row. What is your next bet? Red or black? Because this will tell me a lot about you as a trader, as a person. What's your next bet?
Do I have to bet red? Can I bet a number?
I generally
no. What's your next color bet? What's your next color bet?
See, I bet black if I'm doing a red or black bet because I want to be in the black. I don't want to be in the red. So that's just my.
Even though it's almost a 50-50 shot on either one if you throw out the double zero, sure.
So I would go black.
Okay. But you're doing it. It actually doesn't matter what the board shows. You're going to do it anyway.
You could put some gambler's fallacy into it. You want me to go gambler's fallacy? Yeah.
Well, no, you're putting your own juju on there with the black versus in the red. Like you got to do it. I love it. Tell me, what are you doing?
Yeah. What do you do?
I hate the trade.
You go green like a.
Tony looks like a green guy. He's that guy.
Sosnoff would go green.
He's a green guy.
Tom would be the only winner on the board.
I don't want to go
green. That's what he would be.
I'd be the asshole. I'd go green.
Okay.
Well, now they add the third zero. Now they have the triple zero. So now you're even better.
Oh, do they really? Oh, they're really doing that to us now?
Oh, that's
dude, that's nasty business, man.
They're not making enough on the $25 drinks at the pool. They need to get another couple dollars out of you. They got triple zeros now. Really, it is sickening. Should
I don't know. So I don't know. I don't know what's worse, the triple zero or the fact that you now routinely have to pay to select your seat on an airline 100% of the time. Like it's no longer like if you like register or buy your ticket early enough, you got to pay for it. Like it's another 30, 40 out of your pocket every time.
That's not, I can understand that one. The triple zero, there's no need. They're still winning with 2 zeros. There's no need. You want to buy the extra seat, the little extra leg room, a little closer to the front.
It's not extra leg room. I'm just trying to buy a seat between the chickens and the cows, and they're making me pay for that too.
Well,
it's like that's crazy stuff, man.
I mean, you could sit Johnny in the back towards the bathroom. Those are still free.
Okay. Okay. All right. Fair enough. Okay. All right. So what is the answer? Okay. So bring us back to the deck. Okay. The answer, gentlemen, go to the next slide. The answer is in statistics, and it's of course in the central limit theorem, gentlemen. Gentlemen, we've talked about this so many times. Right, Nick, don't you have CLT tattooed on your shoulder?
Yes.
We should.
Yes.
I mean,
we don't.
I don't know how you can't at this point.
I write this out on my mirror so that I see it every single morning.
Give me an LLN, the little law of large numbers. Give me something.
Yeah.
So the central limit theorem is actually the bridge that connects the sample to the population. And this is honestly one of the most remarkable kind of implications of the central limit theorem. And it's essentially this. This is the equation that governs the whole kind of relationship. If I'm looking at my sample mean, so my sample average, so my little portfolio, right? My sample mean X is actually going to approach mu, which is that funny looking U. So it's going to approach mu, which is the population mean, but it's going to do so in a way that is normally distributed. That is what the capital N means there. And it's going to have a variance, which is sigma squared over N. So there is going to be volatility. It's not going to do it in a straight line. And this is kind of what you were alluding to a couple of minutes ago, Nick, in terms of we could have gone down that direction, but I didn't want to go that direction here this morning. So there is going to be a convergence. So there actually is going to be a convergence of my sample on the population. And this is why, and this is another thing we hear all the time, traders reaching out to us and emailing us and whatever. They're like, man, like I've been following you guys, been doing what you guys do, whatever. And it took me a little while to kind of get the hang of it. But now I'm 3 months in, I'm 9 months in, I'm a year and a half in, whatever. And all of a sudden I'm starting to see consistency. All of a sudden, like everything is kind of falling into place. That's because the convergence is beginning to kind of take shape in the portfolio there. But there's two very important caveats. So let's go to the next slide. In order for this to happen, there's two things you have to keep in mind. Number one, you need a large number of independent observations for this to be true. So this is tricky, right? The large number of observations, not usually a problem. And large in this context usually means 200 to 300 at least. So 200 to 300 observations, and then you'll start to see some convergence. But it's the independent nature of things that gets a little tricky. And we talked about this recently in other contexts too. But it's like so many of the things that we do are so interconnected. It's very difficult to get truly independent observations. And that is just it's a concession. It's just something we have to navigate, something we have to work around. And so, I'm curious what you guys do. You've got a lot of tech positions, you've got a lot of whatever positions. How do you guys navigate kind of a lack of true independence in your portfolios?
We talked about this briefly this morning. I touched on it where I said you really can't get diversification unless you get strategy diversified. You have to take it to the next step as, all stocks go higher, although you've got Apple lower today and the NASDAQ higher, but most of the time, all stocks go higher, all stocks go lower, generally speaking. So you got to go that one step. Maybe it's that funny looking you have there where we get strategy diversified. That's what we're looking for.
Yeah, I think from a probability standpoint, it's another one of the things where I understand the probabilities and I understand that over a large data set, they are going to work out to be that probability. I think as a trader, you have to understand that in the short term and in the how it feels in the moment, those things aren't always going to line up. And I think it's just something you have to be comfortable with trading and uncertainty and variance that you see day to day. That if you're doing I have 3 pages of positions and they're all 50 to 70% pop. There's going to be days where they're all going against me. And that's just
and all going for you too.
We're all going for you. The variance is going to work out in your favor some of the time and against you some of the time. And when you net it all out, it's probably right near that probability that you're expecting. Mm-hmm. But it doesn't feel that way because the losses hurt more than the wins. The wins are a little bit easier. You take the money and run. There's just so much variance that comes with day-to-day trading that I try not to focus too much on, am I hitting the probability?
Right, exactly. Right. But in the end, that's the key. In the end, we can have a tremendous amount of confidence that things are going to net out. But day to day, it doesn't feel like that. And you can very easily and quickly lose sight of that. Yeah. Especially with kind of the second point that I put here. If your portfolio is heavily skewed to one side, like if you're heavily bullish or heavily bearish and you're wrong, man, there's no statistical theory that's going to save you in that scenario. Like you're going to have to embrace your seat in the pain cave. And that's just the way that it is. Well, like if you're taking a shot directionally, which we all do it, and I'm not even saying it's wrong to do it, but I'm just saying you have to understand what you're signing up for. Like if I'm going in this heavily directional to one side and I'm right, then I'm the greatest trader that's ever lived, obviously. But if I'm wrong, man, they shouldn't even give me a mouse. Like they should get me away from the mouse immediately, right? And we've all been there, of course. This is very common stuff, but I'm just saying, if you're playing the probabilities longer term, but you're taking some shots along the way, that's going to skew the results significantly too.
Yeah.
Well, fair.
Beautiful. All right, let's get him a few takeaways, man. Let's go. I got to brush up on my my call signs A through Z because again,
Yeah,
I'm
being told we missed the very easy I of Italy.
Oh yeah, right. Yeah,
India,
obviously.
like that's okay, but you got two Italians here.
And we missed the M. You had the M right there. You already went mommy. You had Mamma Mia. It was right there.
Mamma Mia,
like, it was
that's
right
a good
there
one.
for you. Like, man. Anyway,
This is what happens when markets are boring.
I know.
Yeah, I mean,
Even
we're
though you've
trading
got big
container
movers
stocks.
in here. Yeah.
We're scalping container stocks, guys. This is what we're doing now.
Yeah.
Don't make
This
me
is
sell
it.
some Zim puts.
I'm just saying. I mean, I'm going to do some Zim. I didn't even know it existed until 8 minutes ago. And so I'm ready to go. Oftentimes, it can be hard to trust quantitative theory and mathematical modeling as it very regularly feels like a bunch of abstract equations that have no connection to reality. But the mean convergence from the central limit theorem is one of the more reliable implications from all of statistics.
Great job as usual, Dr. Jim.
Thank you, Doc.
You stumped us. I appreciate it. I appreciate you.
Check your mail. You got elk on the way.
Nice. It better be warm. That's all I'm saying. It better be warm.
I got assigned an elk contract. That's what the chat's saying. So I might have to ship some your way.
Did you ever get your fence painted?
Oh yeah, dude, the fence. Matt get comments on my fence all the time. The fence is stained. It's ready to go. Oh yeah. Now if we have an extra 60 seconds, my guy did a phenomenal job. However, there was a little collateral damage, as you might say.
Okay.
So on the one side, one of my neighbors on one side has a white vinyl fence. Ooh. Well, there was a little splatter on homeboy's fence. Now he hasn't said anything about it yet. He's a really nice guy. And my guy's coming back to clean it up. He's already coming to try a couple times, but I don't know that we're going to be able to do it. So,
I think you're all right. They're waiting for you to clean up. They're giving you some time before they start lobbing over some Scud missiles onto your property in the form of dog feces. We're going to take a quick 90-second break and come back. We got more Tasty Live. Even the S&P is taking a little break here. They're down 1. NASDAQ up 57. The big mover for me right now is Volatility in by 46 cents. Really signaling some strength to this market after trying to lift its head. Bonds, on the other hand, are going lower. They're 112.18, down 17 ticks. Oil basically unchanged, 102 and change. Gold rallied gold sold off a little bit from the last about $10 or so. Weird market. Apple down $4. We'll be back in 90 seconds. We've got Market Measure with Kai coming in here. We'll be back in 90 seconds.
GT.
We'll talk more about these markets too.
Good one.
We're back in 90 seconds. Tasty Live.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right. We've got, well, first of all, we got even the S&P's up $2.25. That's about as high as I've seen them since the opening bell. NASDAQ up around 53, Russell up around 9, Dow the only bucker down 200. But I think the most surprising thing is volatility in by 49 cents, which has got to be helping the zero-day trades, which my man Kai is going to talk about on this market measure. We missed our zero. We didn't miss it today. We got
sponsored by CBOE.
Sponsored by the CBOE, of course, just like
the king of zero DTE.
The king of zero DTEs. That's correct. That's correct.
A lot of pressure.
A lot of you pressure. Can handle it.
Oh, I have to outperform.
You can handle it. I got.
You're always outperforming.
Yeah, I got confidence in you.
Yeah.
Yeah. What's going on, Kai? Talk to us about these 0 days. What'd you do?
Not much.
Hold on 1 second. What'd you do?
I put on a put ratio spread in AMD.
In MD?
AMD.
Oh, AMD.
Bearish?
Gotcha.
Bullish? Positive delta?
I have short delta. I am short the 300 calls. So I did the 320-300 put ratio spread in the 11-day. You have earnings coming up. Need the stock a little bit lower.
AMD down $16.
If we get 300 after earnings, I'll be happy.
I still have the 240, 250 diagonal, which is trading at 360 now.
See, but you do them all goofy. You do them goofy. You do them. You're not
taking advantage of the move that you can get.
Yeah.
You got to manage your quick.
You got to put a little risk on, okay? Can't just do everything for like small credit.
Being a 0-day trader, you really are a Johnny sometimes with these diagonal spreads. You know that, right?
Yeah.
Take all the risk in the 0-day, which you love to trade. You have been actively trading them.
Oh, I'm a junkie trader.
Yeah, so I know that.
Trading.
I know that.
And also, I always put on trades if I want to do the study.
Yeah,
I don't do study that I never traded.
Good.
I have to have personal feelings. Know where the risk. Then I do the study. Yeah.
Good.
I would never recommend or do any analyze that I never trade.
Awesome.
Good.
Well, it should be. Good job, buddy, man.
Yeah.
We aren't a fake news media network. Okay.
That's right.
We're doing our thing here.
We're doing it and doing it well.
Yeah.
Exactly. All right. So today we're going to do the A Pro review. Whole 21 business trading days for 0 DTE. How that looks like.
Sorry. That was the put diagonal and hood.
Okay.
Closing that one.
Well, who'd you close that one?
Yeah.
Oh, very nice.
I got the covered call left.
Gotcha. Go.
All right, you guys ready?
Yep.
All right.
Yeah.
So
what do we got here? You got
a little bit market review. Definitely April was one of the strongest months in the past 20 years. We already saw from the research corner. And for SPX, it's the 5th best month in the past 20 years. Not only April, the 5th best month.
All of them. 250 some odd months.
241 months.
41.
Yeah, the fifth of the best month. Nasdaq's the best. So yeah, we don't have to repeat too much. Very strong, one directional move. So that we had a review 2 weeks ago. It pretty much challenged our call side majority of the time. Yeah. Zero time on the put side. So we're gonna take a look at what happened in the second half and the overall month performance. And by the way, the VIX dropped from 20, like north of 25 to below 17. That was the lowest point since February 1st.
Yeah, and we had that other market measure the other week where we looked at the last 5 years. 25 has been like somewhat average. Like that's been kind of the average for the VIX.
Unbelievable
So-
for the past 5 years.
Yeah. So
Before COVID, we're talking about average is 14.
14, 15 with like 18 being high.
Yeah.
Now we're in a whole different world.
Whole different world.
It's unbelievable. But right now,
It's amazing how much the market changes almost dynamically.
Is it? Isn't VIX trading around 25 back to your days, trading much higher than the 2010s, right?
I take umbrage to in my day, but yes, you are correct.
Or 20 years
So
ago.
it's not our day. Yeah, it's not like my day.
Not the zero DT era.
You're right. You're right. You're right.
So, okay, so let's take a look at the whole month's performance. So the second chart is the daily P&L. So we still only have 3 losses that generate in the first half of the month. So we already saw these 3 losses. There's no way we were able to manage them because the movement is so strong.
Yeah.
The good thing is every single trades in the second half were winners. So we actually not increase the P&L, but we reduce the loss by $1,300 from 31 at the mid April. So the overall performance 1805 for that 21 trading days. On average, it was negative 86 P&L. It was not good. It was still ranked at the bottom in our database, but it was much better than what we saw in the first 14 trading days.
And you could see all the losers because of how big these moves have been to the upside. The losers were essentially full losses by noon.
Yeah.
I mean, like
it never came back.
They never came back. You never had a chance. It was, if you put it on, it was max loss in a couple hours. Like that's kind of the speed and the magnitude of the move that we had.
And I tested it. If you enter at 9 a.m., it does help to see the losses coming a little bit late, but it's still, you don't have a chance to manage at 25%.
Nothing.
It's going to be pretty much full loss as the same thing.
Got it.
Yeah. So the next one we're going to see. So we already analyzed those 3 losing days by looking at the strikes. So these are the 3 most challenging winning days.
Okay.
So which means either it takes much longer to see the profits at the very end, like in the last 1 hour and 1 hour and a half.
Okay.
Or something like in the middle, which is last Wednesday, it was the FOMO day. So FOMO day is one of a very classic high implied volatility. The premium didn't decay before noon or close to 1 Chicago time. You can see in the March 29th, the last Wednesday, the price didn't move that much. But the premium didn't come in, 25% didn't come in until almost past 1, right after the announcement. The premium got crushed. You're able to manage them.
We saw that too, because didn't we trade FOMC? I think we actually.
Yeah, we did trade FOMC.
Well, we've been
it worked out
taking-
well for us.
Yeah, because we've been doing, your target is 25% on these, right?
Yeah.
We've been doing like more like 10%.
Much quicker.
And we were talking about it in the morning. We were like, volatility is going to probably stay big. You have the FOMC meeting later today. And a couple people chatted in. We're like, yeah, FOMC days, you don't do the 0 DT because you don't get any of the decay. We did end up closing at like that 10%-ish mark within about an hour or so.
So you don't have to wait another 4 hours to see that.
No, we didn't, but it took a lot.
It took
longer. Like
yeah, of course.
The market went nowhere.
Market went nowhere, and we
was
didn't
like a
get
10-point
paid for the risk. So the research stays strong. Usually, when we don't have an FOMC meeting and we put these on, the market does what it did on that day. In a half an hour, we're taking our profits, and we hate that we take our profits because it gets smashed even more than that. So.
Yeah, but every single time when the past the 1 or 105, you see the premium just got crushed.
Yep.
Yeah.
So the other 2 days, April 17 and the very last day of the April, which was the last Thursday, we see the huge upside move. These 2 days were challenging, but we're still able to manage at 25%. One of the reason is that big, like one directional move, only lasts half of the day. So either early in the morning or later in the afternoon. So you still have enough time. Whenever we see one pullback, you're able to manage at 25%, either early in the day or late in the day. It really depends on how the market moves. So one of the takeaway is as long as they're mean reverting actions, you should be able to take off your profit for majority of the positions.
Yeah. Another reason why you have to put in those take profit orders too, especially if you're not like watching the market, because you could have like a 5-minute, 10-minute stretch of time where you could be eating lunch and you know, and you miss out on closing a winner that turns into a full loser at the end of the day.
I remember last Thursday, that big move, you only have about like a 30 minutes so to manage that. And after that, after 11 or so, 12, it's just like...
It was straight up.
Yeah.
Yeah. So it's,
I mean, you know, listen, I don't consider it lucky or consider it good or whatever it is. You know, sometimes your mechanics save you. There are other times where you get whipsawed. I mean, like, you know, it all comes out in the wash. But consistency is the key.
Yeah.
And you don't know what the market is going to do in the next 30 minutes.
Correct.
Yeah.
That's correct. But if you have that in your back pocket where you have an FOMC meeting, we talked about it and said, all right, let's do this. Let's be more aggressive with our closing here. So you take the knowledge and you apply it to your trading. And listen, especially when you're getting bored, you know what I mean, in the market. And
that's a trader.
Yeah, it's a trader. That's right.
I want to put on something.
Well said. Well said.
Yeah. Okay, so we talked about the rolling strategy in the past two sessions, rolling call side, put side, and both side. So I want to add the rolling analysis for the April, because we have a pretty much negative P&L in general for April. So we want to see if the rolling can help reduce the losses or maybe flip to the positive zone. So this is rolling. So this one is the we exit at 50 cents on either side. So this is actually managing both sides. We don't care about the put side or call side, just manage both sides. If the untested side premium dropped below 50 cents, we roll it.
Okay.
We roll it to the new 20 delta as we design. But I have different profit target settings here from 25, 30, 35 to 50%, because we show the results. We need to improve the final profit target above 25% to be the standard iron condor.
Sure.
Right? If we just only target the same line, we're probably not. The best one we can match is to match the standard.
Yeah, you're going to match it. Yeah.
Yeah. So these are the three category. The average P&L is much higher than the without rolling. The second is win rate is the same, because we only have 3 losses. We couldn't save those 3 losses. They're still losers, but we're going to see the how much premium the P&L improved.
Yeah.
Or rescue those losses. And the last one is the CVAR, or risk control. Rolling is always shine at risk control. So that's actually our main target, is try to reduce your volatility and reduce our CVAR. This is the main purpose of rolling. And over the long term, that can naturally bring in more P&L.
Yeah, because you're reducing the tail loss. And it's not by a huge amount, but even a 5 or 10% reduction in that max loss is going to be really significant to smooth out P&L.
Yeah, and also balance your portfolio's delta, right? Rather than legging off, we showing you legging off doesn't work, because you're actually, rather than hedging your position, you're actually increasing your directional delta.
Yeah.
Your delta it becomes even bigger, but rolling actually reduces your portfolio delta, right? So there are a couple of benefits by neutralize your position.
Makes sense.
Yeah, so next one is the cumulative, is the daily P&L. Again, this is for rolling. I only pick one, 50, trigger at 50 and profit target 30. So the best results is actually profit at 50%, but I think that's probably too aggressive for most of the traders. 35% is great. So you can see the P&L, that was negative 1,800 without rolling. So this one dropped to 700.
That's huge.
Yeah.
You cut your loss by 60 to 70%.
Yeah.
The total cumulative number.
Yeah, on average is 60%, much better. So even though those 3 losses is still losses, but it's not full loss anymore. We reduce by, we can show the next slide.
And that's on a historic month. No, like that's the most.
Month. That's right. That's right.
That was a crazy month. Yeah.
Yeah.
So these are kind of the summarized data for a rolling improvement. So the average P&L is increased by 131, or just improvement 131. For the losing days, the improvement was better, was 162. For winning days, it's 100 improvement. So on average, it's about 130-ish for those rolling.
That's awesome, actually.
Huh?
It's awesome, actually.
Yeah.
I mean,
improve it by $100. Yeah.
Yeah.
Huge.
Yeah, we only have 8 rolling in the past months in this case. So on average, it's roughly $130 on average.
Okay.
And the average hourly improvement is also good. We make like $25 more per hour. One downside is, of course, very obvious. If you roll, you make your trade tighter, you collect more premium, the holding duration is going to be longer. So for April, the average holding duration is going to be almost 1 hour longer if you roll.
Okay.
This is probably the only downside for rolling.
Is that you have to stay in the trade longer because now you're closer at the money. It's going to be a slower moving trade.
It's going to take longer to come to your 35% profit target.
Oh.
Yeah. And the good thing for April is average trigger time for rolling is less than 2 hours. Yes, less than two. The max. The worst one is less than 2 hours, and on average is about 85 minutes, about 410. So it's what 1.5 hours on average.
And you're saying that's good because it's happened so early that you're getting paid for the remainder of the day. In terms of the extrinsic value, if you were to roll, if your roll was triggered at noon and you only have 3 hours left in the day, you're going to be way closer at the money. You probably open yourself up to being whipsawed a lot more than, getting the face ripper in the morning where you have nothing you could do to really manage that or avoid it. But the roll up relative to what you're going to get paid, it's going to be the same amount of credit, whether it's noon or 10 a.m. But
it's actually very close.
The relative
additional
distance
premium
away from where the market is trading at is going to be the bigger piece. Like that roll up at 10, you might be 40 points out of the money. Whereas at noon, it's going to be 15 points out of the money.
Exactly.
In terms of the distance. And so you don't have as much of the whipsaw risk relative to where the market is trading.
Yeah, so if you can always go back to last week's piece. So we show when is the best time to roll. We have the 10, noon, and afternoon. So the benefits of rolling early, one of the 2 things very important. You have really good credit, and you keep almost same distance as your original iron condor. The second one is your results is more consistent. It doesn't mean you always be profitable after the early roll, but afternoon, the P&L volatility is huge. It's pretty much random. You cannot predict that.
Yeah. So you're really kind of reinforcing the noontime. We should be looking to get out of any positions that we have. Is that what
I believe so. If you roll, you want to roll before that.
Yeah.
Anyway, yeah. So that's why April rolling works well.
Yep.
Right?
Yep.
So next one is the side testing, strike testing. So this is the whole month for the standard iron condor. Very strong call side testing, 21% in April versus theoretical. We should only have 11. Long-term average is 11%. Put side long-term should be roughly 10%. We only have less than 2% on the put side, and all comes from the second half. So that's why second half is actually more balanced than the first half. The first half of the April I have 0. We didn't even touch the put side.
Yeah, it was straight up. I mean, that was like really the bottom. Right?
Yeah,
it was like the start of April.
Yeah. So these are the kind of the average testing results. So you can feel where the pressure comes from in April. So last one for the people who are interested in the put spread, you have the best month in our trading record in the past 3.5 years. For 30 delta puts, it's the best month.
Well, we had nothing but a straight up moving.
Well, and you had high volatility in the beginning,
high volatility.
so you got paid.
Exactly.
That's really the key. Is like you had 25 VIX and you were selling puts into every day was an up day.
Obviously, this is factually accurate.
Yeah.
But I don't think it surprises anyone. And yourself, you know that there's put skew in SPX as there is in anything else. So that out of the money put is actually trading
more
rich relative to the calls. So the spread is trading cheaper. So that might make you go a little bit wider on the put spread. So to get the same delta that you would on the call spread. So
no surprise
that way it worked out well too.
Yeah. So there's no surprise to see all the put spreads outperform average by a large margin.
Yeah.
And if you use a 20 delta, a little bit conservative, this is the second best month in our database. And talking about the put spread, next week, I'm going to start testing some put spread and rolling. We have some very surprising results for put spreads, adding call spread after something happened.
Oh, ooh, I like that. Starting with the put spread, you get like, half a basis point rally or whatever, 50 basis point rally, and then you sell the call spread.
Or you got challenged.
Or you get challenged. Yeah. Oh, I didn't think about that. Okay. All right. I like that. Very interesting.
Very nice. Good job. So you're not cherry picking kind of scenario, right?
Oh,
we want to test everything.
Yeah. Yeah, I like it.
It's cool.
Good.
I like it.
Very good.
Awesome.
Plus, you never hit the bottom. You never hit the top. I mean, look at this market. Even the S&Ps are up almost 9 handles. NASDAQ is up 58. Not on the highs of the overnight session, but from the highs from what I've saw today. Russell up 11, and even the Dow down 100 is about as high as it's been all day long. Volatility in by 49 cents. Bonds down 13 ticks. That's your kind of canary in the coal mine right now. And then you've got oil up 33 cents, 102 and change. That's been collapsing all day long, but still up 34 cents. Bitcoin flirting with 80,000 again, up 1,000, 79.7 or so. Ethereum up 47. Gold is about 20 handles higher. You can get out of your gold if you want to scalp it for.
I'm trying. I got an order working.
20 handles of your scoopy.
I'm at 16 right now. I need 4 more.
Okay.
20.
Okay. Silver down $1.40 and change. Let's take a look at this market, Kai. Just hang out with us for a minute. AMD down 16. Caterpillar down 11. ARM down 8. Qualcomm down 8. AVGO down 5 or 6. Google down 3 and change. Not the list of Apple down 3. I know it was down $2 lower than where it is right now. JP Morgan down 2 or 3. That's what's hurting the Dow. Meta down 240. Not the list you would expect with even the S&Ps up 7, but you do have SanDisk up 47 now after being up almost $70, son. Traded at $12.75. MU up $37 after being up.
I mean, it seems like today would be a down day.
Almost 50.
Google down 4, Meta down 2, Microsoft is the other way, Apple's down 3, Nvidia is down below 200. It seems like it should be a down day today, but not so much.
Not so much. All right, Kai, I'm going to let you go now. We're going to take a quick 90-second break and come back. We got more Tasty Live. After this, we've got our man Q and Ryan coming in. We'll be back in 90 seconds. Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Nikki, we are back, son, and you know what that means. Time for a little more Tasty Live with.
I don't know if we got the ding on there, but that was the MGC.
Oh, you're gold. You're scalping.
Yeah.
They gave you a little.
Yeah.
Vote of confidence.
Yeah, it was kind of a Johnny little buzzer thing. I feel like it's got to be more, you know.
You want like
Yeah.
Fireworks, that kind of thing.
It's okay. There you go. That's more I like it. That's
Somebody else who could use an introduction like that is this man. My man Q, how are you, brother?
Fellas, how's it going? I'm doing
Good to
well.
see you again.
Yeah, always a pleasure.
Happy Monday.
Happy Monday. And
What makes this Monday, May 4th, special?
yes, quite the happy Monday. We are 1 month out.
There you
the PDT rule being gone, abolished, Trader Liberation Day.
It's got to save you a couple of questions every day. There you go.
Yeah, there we go.
There we go.
Yeah. And so, yeah, that will save us a lot. I'm like, honestly, am I still going to have a job after the PDT rule goes away? You know, there's going to be no
AI is not taking your job. It's bad day trading rules.
Yeah, right?
That's right.
Yeah, exactly. And so, yes, just to reiterate what that rule is, right now, currently, if you don't have over 25,000 in your account, you can't day trade as many times as you want. You can only day trade 3 times in a rolling 5 business day period. But after June 4th, you will be able to day trade as many times as you would want when it comes to that like intraday margin requirements, as long as you're not putting yourself into a margin call, which the Tasty Trade system does not allow anyway. You will not be restricted for any sort of day trading violations. So as long as you're in a margin account, you can day trade as many times as you'd like. Because I was dealing with some customers about like good faith violations this morning, actually, in cash accounts. So you can actually transfer from your cash account to your margin account, and then you won't have to worry about good faith violations or anything like that. So very exciting time. T-1 month.
I feel liberated.
Indeed.
I feel free. Finally, freedom.
Yes, yeah.
I don't know. I think small accounts should have to suffer just like the rest of us had to suffer. I'm just kidding you. It is a long time coming. We worked very hard. Everybody worked very hard in the industry. I think most people work very hard in the industry to get this done.
Hey, you're a Derby guy. You get
Oh, my man hit the Derby. He wants to tell you. That's what he wants to tell you.
Oh, really?
Yeah. No. It was no inside info. It's just the boys just placing some bets.
Respect, very nice. Yeah, see, I'm not much of a gambler, so I didn't bet on the races or anything like that. My friends did though, and they were a little upset with the result. Wait, you know what I find crazy is like, so the race before, one of my friends took T.O. Elvis at like 20-1 or 30-1, whatever he was, and then they go into the stables or like whatever it's called, like right when they're about to race, it goes from 30-1 to 5-1 in less than a minute.
I was just about to say this.
How crazy is that?
I understand now the horse racing racket. I understand it now.
Do tell.
Because I was placing those bets. It was like 30-1, 28-1, and then it settles at
Well,
like
the pool
20.
changes.
I know the pool changes, but I don't like that because like
I despise that.
I don't know.
I'm like, that is not a fair
It's not
market.
like. I mean, I guess it does change with like sports betting, but sports betting, it's so like, I guess because the odds are so long that it has to change a little bit. But it's it gives you a little
ick.
Like a little ick. Like I put this bet in and it's like subject to change based on, the powers that be. I don't like that.
I really don't like it.
Like I put it in at 28-1.
Yeah.
You don't give me 23-1 and 28-1. That's what I clicked.
Yeah, like if you put it in at 28-1, you're taking all the risk at 28-1.
Yeah.
You know, it shouldn't just switch to like, 10 to 1, 20 to 1, whatever it is.
The bet's in.
You know, you should get it whenever you place
Why
it.
you should learn how to trade, because if volatility is high and that
Exactly.
$4, it moves.
Yeah, but that's not. No, they're in that scenario. The example would be it's volatility's high, so it's trading at $4, and then by the end of the day, it's at $2, and you don't get to keep the $2 that you just made. They just say, "Oh no, sorry, we mispriced volatility. Now it's $2."
Yeah, right. Like, yeah,
That's your bet.
That's what
You young kids got such
Yeah, I don't
problems.
like it.
Stay away from the track, all right?
You know, like I understand how it works, right? It's just like a pool and stuff like that. You know,
Racket.
it's like the pool of funds, but I agree. I am not a fan.
Bunch of
you know?
Guidos in suits behind the scenes, like this guy.
No, they
pinstripe
arrested all of them. They arrested all of them over the weekend, remember?
That's what they want you to think.
That's what they want you to think.
Yeah, Cosa Nostra.
Back to you, my friend.
All right, well, let's get to my list here. Top 20
such thing as a
symbols. Top 20 symbols going through the system and their IVR. At number 1, crazy mover, does not stop. Micron with 78.
Unbelievable.
Tesla 11. Nvidia 49. Palantir 58. Apple 40. Intel 106. Amazon 18. SNDK 59. AMD 81. Microsoft 46. Robinhood 40. Meta 30, Oracle 56, NBIS 85, SLV 32, GLD 38, Google 32, IBIT 24, IREN 47, and SoFi with a 9. Marty was coming up to me this morning
Yeah,
about
he's been
Micron.
chatting me too.
He was like, you guys got to talk about this on the show. Like, what is going on? And I completely agree. Like, actually, what is going on with Micron?
Oh, Micron.
I mean, great. I mean, a month ago it was at like
who's
320
selling
or something.
is what
like that.
is what Nick said. Like,
yeah,
that was his whole call to me. Like, who's going to sell up another 8%, 43
Yeah, you
bucks
gotta
here.
step in front of that.
20 million shares have traded in MU.
Can't stop, won't stop. It's all momentum.
I mean, what do we have call skew in Micron because of
God,
this?
through the roof.
Yeah, it's
Through the roof.
Yeah.
I mean, it's all of them. SanDisk, Seagate, Western Digital.
Start of the year 200 and change. It's doubled.
Yeah.
Yeah. I don't have any hope for you here, but if you're looking at markets,
I don't have any short delta. I'm not.
They're almost $1 wide, which isn't horrible, all things being considered. Stocks have much wider option market. So earnings June 24th, I would abstain. I would trade butterflies.
Yeah, that's how you do it.
That would be like
you go
the
to
thing, right?
the slowest moving, cheapest alternative in a stock like that to
Pick a round number, any round number, and put a butterfly right there at the middle. It's the only
and
way
look
to do it.
to get hit the home run.
Yeah. And if you're wrong, you lose a couple dollars. You're not.
Yep. And you participate. You got something to say to the neighbors.
And you know what? Your odds won't go from 20 to 1 to 4 to 1.
That's right.
That's right. They'll stay.
You get a fair shot.
You're in the trade.
Yeah.
Right there. Odds are what they are. No.
Done.
Yeah.
All right, I'm gonna let you two go away. I'm gonna bring in this man. Had to get him in here with Bitcoin trading over 80,000, 80,100 on the futures.
It's so bad.
That's right. Put your glasses away. You don't need to see anything anymore. You're all good. Future's so bright, you got to wear shades.
Too bright.
Yeah.
Talk to me.
I wish I had a story to tell you, Tony.
It's gone up around $5,000 in the last 3 days or so, from its low to
Clarity
high.
Act is like back in focus.
Yeah, I mean, look, there's the positive regulatory catalyst on the horizon. I do think there's more downside risk given the setup. There's the potential for that not to go through. I mean, the window closes around August or so at the August recess. But yeah, that's there. I mean, you look at ETH outside of Bitcoin, Bitmine purchasing another 100,000 ETH. That's about $250 million worth for the third week in a row. So I feel like I just come on here and I say the same thing every week. But I mean, yeah, it's trading a lot better, stair-stepping higher. You could probably buy the dip here as long as you think everything else is going to continue to go up. But we saw last week what the correlations look like, extremely strong positive correlations with equities in an environment where interest rates are higher, equities are higher, commodities are higher, economic growth's been okay, everyone's ignoring the war. No ceiling.
Yeah, we actually looked at the correlation matrix on Friday. The 1 month correlation, it's gone so hot. Like everything besides oil. I mean, oil has been the negative correlation in the market, but everything is at close to 1.
Right.
Even like bonds and gold, it's all kind of going in the same direction right now. Other than oil. Oil has been the negatively correlated. So to your point, the Bitcoin move, markets are going up. So Bitcoin's going up.
Yeah.
That's what it is.
And you saw earlier this morning on that first run into 80, you had a decent amount of perpetual futures short positions that were liquidated. So that's going to add to some of that upside volatility and downside as well at times. But yeah, I think you go higher. I mean, if we pop up our expected moves here, short term at least, what we've seen week over week is that one standard deviation move has continued to price in a higher low and a higher high. Vol is low, so want to caution that. But you're looking at about a $4,300, $4,400 move in Bitcoin, ETH just under $200, but you're up above 83 on the upside of that one standard deviation move. About 74, call it 75 or so on the downside for Bitcoin. ETH above 2,500. Doge is continuing to see some of its momentum, I suppose, from last week too. I haven't checked on Fartcoin, but I owe you one. I'll we need a quote. Can I get a Fartcoin?
Yeah,
quote?
Somebody give me a quote. Come on. I thought we were market makers here. Fartcoin up 4%. Oh, 28% 1 month.
Okay.
Okay, I got to look at
That's an outlier. I haven't been tracking it.
Month. Come on.
Yeah.
I need daily here.
Well, if we, I guess if we pop back to the first slide.
4%.
Let's take a look at
Not bad.
just some of the returns over the last couple of periods here. 1 month looking a lot better, and things have flattened out for Bitcoin over the last 3 months. Dogecoin is outperforming here. Vol is a lot lower. So it's a little bit of a mixed bag, really. I mean, Bitcoin and ETH look better. ETH looked like it was going to roll over for a second last week. That caught a bid this weekend. But it's been Bitcoin, ETH, and then on the other end of that, Doge, and as you just mentioned, Fartcoin. But a lot of the other stuff that we track just isn't, poke away the stick sort of thing.
Yeah. The volatility aspect too is a little, you think if we get up to like an 85, like the end of the higher end of the deviation, the volatility that we have, you think we start to see a little bit of volatility percolate?
Yeah, I think if it's a bit of a FOMO bid and moves up there pretty quickly, you will.
Stair step though, you're probably.
Yeah, I just don't think anybody's really, the volumes are just on the floor. No one's really trading much crypto here. It's kind of levitating with the rest of the market.
Yeah, it's kind of secondary in this market for sure. It just doesn't have the oomph anymore.
Oh, if you're trying to assign some catalyst, for me, it's like, well, what's the dollar doing? Dollar's weakened quite a bit here. The yen they've done some intervention. It's strengthened quite a bit. Sometimes just on the margin, Bitcoin just trades off of that.
Yeah.
But yeah, if you're buying dips in there and you look and, you get down to 75, I think you're in an environment where that seems to be the direction right now.
Yeah. On rest of markets, oil, volatility, bonds. How are you feeling about this market? What is your
give us be the voice of reason for us, will you please? You seem to have the kind of voice of reason look to you.
What I think you're seeing is you've gotten past some of the risk-off headlines with the war, the uncertainty there. Oil has seemingly stabilized around 100. Whether it stays there or not, who knows? But when you look at some of the economic data, it's been pretty positive. If you just pulled the war out of this, you'd say this is a pretty bullish environment.
Yeah.
Massive amounts of spending on all the AI shit. At some point that will end, right? Right now you're running at, I want to say, about 30% of what they call the hyperscalers. Those are the Mag 7 stocks, as you guys know. Those that are spending on AI, about 30% of their cash flow is going into purchase memory, because that was the other component of this. Everyone initially on this trade just focused on NVIDIA.
Yeah.
And focused on compute. But there was the memory component, there's the energy component, of course, which gets you into natural gas. That's an interesting trade, especially on the infrastructure side. And there's the whole picks and shovels piece to all of this. And I think that the market for some time now has been waking up to more of that picks and shovels. What else is there outside of NVIDIA trade? And Micron goes up 10% a day, it seems.
Yeah.
But I also think that you're in an environment where people are looking to put money to work. Volatility has come off of those highs from the war. Flows are back into risk assets. Bond market volatility has come down. And I think, again, going back to, is it a generally decent setup for the economy? Rates are moving higher. Stocks are moving higher. And one last thing I'll add is you have this kind of structural supply shortage. Look at commodities broadly. infrastructure, supplies, however you want to categorize it, it seems like there's a bit of an inflation component there and there's a bit of a shortage, and that might be exacerbated by what's happening with the price of oil.
There you go.
That's my story.
I can't.
That's my story. I'm sticking to it.
I can't reconcile that. You know, nobody wanted to be bullish a month ago, and I just it icks me now that everybody's bullish. 8,000, 8,500, 9,000, 10,000, a million. Everybody, I don't know.
Yeah, by mid-June, we'll be talking about how nobody wanted to be bearish at all. There wasn't anything to be bearish about in May.
That's what I'm saying. It's like, it's just gone it's gone, you know, you say nibble at the bottom and everybody calls you an idiot because, you know, there's a war or whatever. And then now we're here and everybody's bullish. Shark Chief buying Intel.
Oh, come on. Stop throwing him under the bus. That's my job.
I'm going to throw him under the bus because he was throwing me under the bus. He's getting
wow, it's gotten personal now.
Talk about a capitulation. Come on.
Hey, you got Bitcoin taking out 80,000 right now. You hit on your horse.
Yeah, like
it's not that bad.
No, it's great. I'm here. It's beautiful. It's good. It just, you know, I'm a little, I don't know.
You want to pull back so you can buy the dip.
We actually talked about this. It's going to be so hard to get that because it's going to, you can't.
Yeah, it'd be like at 1.25%.
Yeah, exactly. And it's so quick. And, you know, they're not going to make it easy on you.
No.
Get back in because now everybody knows that the war doesn't matter. And, you know, AI is blast off mode. Any dip is going to get bought. Like you're not getting a 3 or 5 or 10% down move again. In the short term, unless something crazy happens.
Not in your lifetime.
I set up only. I say no more down days. Outlaw them. Just say if you don't get in,
you're going on record.
If you don't go in now, you pay more tomorrow. That's it. That's the
end of that.
Market. Okay. You have no cash now. Sorry, you're poor.
That's the game.
You're poor.
Yeah.
All right.
Good luck staying poor, as the crypto kids would say.
That is a strong argument for owning assets. I like that. You could sell a fund.
Yeah. I mean, what else are you going to do? What else are you going to do but buy?
I agree.
You're going to sell? Micron's going to be up another 15% tomorrow. Why sell? You can't sell.
But you already sold, probably. That's the problem. And that was 50 handles ago, so.
No,
what are you going to do
diamond
now?
hands.
Good job to you, my friend. You came prepared. I do appreciate it. I want to congratulate you on your 80,000 hat for Bitcoin. It's going to flirt with 81,000. We'll see if we get those out there. We're going to take a quick 90-second break and come back. We got much more Tasty Live after this. What we got coming up next?
Got Liz and Jenny.
Peace.
Peace.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, arbitrageur.
Yeah, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots. Okay, thanks for the heads up. Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews. How are you, Jenny?
I'm great, Liz. Great. We survived a weekend. You had, I think this might have been the busiest weekend of your life.
It was awesome. My heart's full. I have 2 adults living with me now, and I have a Chicago dancer. We were in Chicago all weekend. Not in Chicago the musical all weekend. It was fun. It was great. I got to see you. We should have taken a picture at the 50th birthday party.
Oh, and that's what I had. 50th birthday party. I don't know how many more 50th birthday parties we're going to have this year.
You had 2. We're going to have about 400 more. So buckle up, sister.
I don't know. I
just because you're older than all of us, we're all still coming up the back.
When she called and I turned on my camera and I looked in the video, I thought it was a rough weekend. It was a rough weekend.
It was funny. It was crazy. I will tell you, and I feel like I can say this to you because we can tell the viewers this. I came in hot to the 50th birthday party, meaning I got there late because I came from the Chicago show.
Yeah.
It was wild to see how overserved everyone was by the time I got there.
It was and it makes sense. It was Derby weekend. It was a bourbon party. It was
yes, it was a bourbon party.
It was a bourbon party.
And I was laughing because I know your husband doesn't drink, so he was like my saving grace. I was like, Keith, come here for 1 second. What is happening?
Yeah, because you got there late. But it was a wild weekend. Now things it's kind of crazy. Now we come and relax and just enjoy the markets for the week. Hopefully it's just a calm week of markets. We've got SPOOs up 4, not much going on in the markets. Let's hop in the platform. This is a way we can just kind of unwind after the wild weekend we had.
You know what? I love that you said that because it does give me, it's almost bizarre to me when it's not open and I can't look at it. It does give me opening the markets and trading is my safe place.
Oh, to open up the platform this morning and just think like, oh, all I'm going to do is put on my 45-day SPX Iron Condor, put on my Jade Lizard, take a look at what needs adjustments. It is calming. It's calming, right? It's nice. It's kind of a nice thing. I can't imagine what life would be like if we didn't have the markets every morning when we woke up. Monday through Friday?
Monday through Friday. Exactly. I don't know what we would do. Yesterday was one of the first days that I forgot to look. I usually, keep an eye on when it opens at 5 o'clock at night. Last night was the first night I forgot to. I was going to bed and I was like, oh, I totally forgot to see what the market was doing. So we were kind of busy, but I usually like to keep an eye on that at 5 o'clock at night. Okay, Jenny, are we in the platform now? We are. Okay.
We're in the platform, but I do want to give a shout out to Josh. Happy birthday, Josh. I thought I'd be seeing you this morning. We've got Laura, the amazing Laura, as our producer today. I thought it might be Josh. I was saving my happy birthday wishes for when we got to talk to Josh, but he's not here. Happy birthday. If you're watching.
Josh. I texted him already this morning. I'll always remember his because it's the day after my daughter's.
Yeah, and then
and it's on Star Wars Day.
Summertime Ken, same thing. Today's her birthday.
Whoa,
his wife, Summertime Ken's wife.
Okay, Summertime Ken's wife.
Yeah. It's today. May the 4th be with you, everybody.
Now, if you are born on May 4th, do you love Star Wars?
Yeah, I'm sure. I'm sure.
Right? You got to.
I'll never forget. And if Kai, if you're listening, I'll never forget. Because Liz and I are Disney people. We've been there many, many times. And we kind of know the ins and outs of the parks. I remember Kai saying, oh, guess what? I planned a trip to Disney World. I'm taking all my kids. And I said, when are you going? And he said, May 4th.
Oh, no.
And we were like, nah, not a good idea.
No, abort. That is, I think, the heaviest crowd day. Wrapped around May 4th is the heaviest crowd day because everybody goes to Star Wars Land.
Yeah, everyone's going to Hollywood Studios to Star Wars Land for the May 4th. So I don't know if I think they barely survived it.
He did though. I think he went back, so it's not too bad.
Yeah,
but I guess you don't know the difference, right? Because he's never been there without crowds.
I guess that's true. If you go on the most crowded time, you think that's how it always is.
My husband refuses to go over spring break ever again.
Oh, I went once over spring break and I said, I'll never go back again.
Yeah, no, I agree. I agree. But you know what this morning, I did hear a couple dings. Do you want to pop our GTC hit?
Oh yeah. Let's, I'm in the platform. So I'm in the platform. I'm going to pop out the side, look at our activity today, all symbols, our SPX. This is the Jade Lizard. This is the Jade Lizard. So if we always want to have one on, when a GTC hits, we put the next one on.
Can you do me a favor? Actually, do you want to start this? There you go. I want to see. Just go to SPX. I'm sorry.
I want to see.
It was on Friday, right? We put it on Friday.
That's what I wanted to see. If we put it on Thursday or Friday. So SPX.
Friday.
May 1st.
Friday.
470, 355. And it's 25%. So yeah, let's fire up the YouTube trade of the day because we're going to talk about this and we're going to do something else.
Right. So we are taking a look at right now in the welcome YouTubers, but we've got our SPX Jade Lizard position that we put on Friday, put a 25% GTC in for, and it hit this morning at 9:21 a.m. Now, I think it's a lot of times it's a little bit more days than that, but we had the weekend built in here. So if we put one on today, in our vast research of a couple weeks, but the research that Kai has done, we'll probably be out in 2 days. So if we put it on today, I'm going to guess Wednesday is when we'll get out.
Unless we get a big down move or something happens. Something wild happens in the market.
Well, a down move, a down move, we'd stay in it.
Yeah,
but
then we're kind of stuck in it.
It won't come off earlier unless you get a big vol crush or an upsize move that goes through the call spread, because then we'd close it manually.
And for these, we're only having one on at a time. So we put one on Friday, the GTC to take, did we take 25%? Yeah. Right. I think 355, and we bought back for 355. We collected 470 when we sold it. So 25%. So we're going to put another one on today. We're going to always have one on at a time. So for those of you who may have seen an old video on us doing this Jade Lizard, we're doing it again. And then we're going to do another trade after this Jade Lizard. We're going to put on our 45-day Iron Condor.
So we are 2x floor traders, and we're putting these in our accounts. So I was listening to Kai this morning too say that whenever he does the studies, he wants to have things in his own accounts to keep an eye on it, to watch it. So what we're doing in our accounts is what you're actually going to see us do on these shows too.
And so I'm glad we're doing this today because we're mechanically putting on these 5-day Jade Lizards that showed the best results. Liz, today we have a decision to make. We have 4-day, we have the 4-day, or we have the 7-day. There is no 5-day. Are you going to go with the 4-day, or are you going to go with the 7-day?
I actually did. I love that you're making this very dramatic, and I love the drama behind it. I didn't even think about it. I opened up the 4-day because in my mind, it's easier for me.
Yeah, right. The 4-day, it's going to decay quicker. The 7-day will get our further break evens, but let's stick with the 4-day. That wasn't researched in this study, the 7-day was and the 10-day was. But heck, we're just going to throw caution to the wind and do the 4-day. All right, a $20 wide put spread, 71.45, 71.25. That's we can adjust these if we need to. A $20.
You're gonna especially because it's 4 days and not 5. You're going to need to cheat them in a little bit.
Okay, yeah, we're only getting 455. So when she says cheat them in, I'm gonna bring that call spread down because we don't have risk to the upside. I'd rather bring the call spread down, but then the common sense slide comes in and you're like, oh, we're getting a dime more to move the call spread down 10 strikes.
No, thank you.
Right?
Yeah, 100%.
So
yeah, lock it at 430 is fine. So if we take 25% of this, so let's realistically look at this. Now, what we're trying to do is always have one on in our account. So one comes off, one comes on. So we're always going to approximately have $1,500 in risk. And if we're going to take this off within a day or 2 days at 25%, which is going to be around $100, think about it from that perspective. You're going to get $100. If you've got $4 on something, it's $100 and some change. Wherever you land with this, that's a decent return on capital. So every couple days, you're going to be getting that with the same amount of money at risk. That's our goal here, is to never, on this one, we're going to do other ones too, where we're laddering them and keeping different things in there. But with this one, we always want $1,500 at risk, and we always want to be making about $50 a day.
So I pulled it all the way down to the 30 delta to get about $5. I don't know. I don't know what you.
I say take it up to the 4, whatever. Go to the expected move. Let's stick to our mechanics. That's how Jacob put them in, is a $5 wide on the top at the expected move and a $20 wide on the bottom. You're not collecting as much. I mean, I'd like 450. There you go. Lock it, ship it. Let's see if we can get filled.
Okay, so we've got our call spread at the expected move and the put spread at the expected move, $20 wide by $5 wide. We had a viewer email us over the weekend saying, how about we call this a jade lizard with a long tail? So because people say, why are you calling this a jade lizard? It's a skewed iron condor. So the viewer said, let's call it a jade lizard with a long tail. It's not, if I go to the analysis page and you take a look at it, here we go. You can see,
there you go.
I almost have to zoom out, right? Zoom in. To see we can't see the bottom. We can't see where this ends, but we know it's defined risk, and that's that $1,550.
Yeah, $1,550. That looks pretty good, and that's only for a couple days. You can't do that. Okay, we know that.
Okay, so I'm going to ship this. And it's Monday. I'm going to put on my 45-day iron condor.
Yes. We're going to do both. So we're laddering in. These are trades that we have in our own accounts on a weekly, monthly, daily basis. So the Jade Lizard one's always going to be on. There's 2 separate rules to this. Jade Lizard, one comes off, one goes on. This one is every Monday you ladder into them, so you know what your risk is going to be, but they're more durational trades.
Every Monday, but it's nice because now I'm getting to the point where they're I want to have them on weekly. And so I'm finally getting to that point where I've got some short-term ones on there. So I'm going to 45-day options, and I'm going to go, I think about 20 delta. So let's take a look. If I go to the 20 delta, and that's beyond the expected move, but let's take a look at what we're going to get here. If I just go the 20 delta and make it $20 wide, actually, it has to be $25 wide because you'll see at the top, the $25 wides. So $75.50, and then I go to the top 20 delta. Where is it?
Keep going.
Okay, so here we have a 20 delta, and then 40, 50. I guess I could do 20. Sometimes you have no choice but $25 wide on the top, 40, 50, 60. So I'm going to bring the bottom up and make it 2 $20 wide spreads. So $20 wide on the bottom, $20 wide on the top. I get about $7, and you're risking $1,300. I put these in every week, once a week, and put in a GTC for 50%.
And so how have these been doing? They've been coming off after so are you 50% or 21 days?
So far, my first one, for the first one I put on, the very first one I put on, oh good, we were filled at 450. The very first one I put on was it blew through both sides of the call spread. And that trade has, I can tell you, and that was the first one I put on. And that trade has, I think it has like 17 or 18 days left. It's right around here.
Okay.
So that was my first one. The other ones, the week out and the week out and the week out, they have not come off yet for 50%.
Okay. But your ultimate goal was to have them on. You knew they were going to get to the short term. Yeah.
Short term. Right. So then every week I've got one on. So I'm hoping it's really interesting. April was in SPY. April was in the top 5 bullish months in the history of
ever.
Ever in the history. Top 5 bullish months in the history of SPY. So it's not a surprise that one of those, it blew through the call spread.
Correct.
I'm still holding on to it and debating if I should close those at 21 DTE. I don't know. But it's just very simple. 20 delta, 20 point wide put spread, call spread, collecting about $7.
Okay, I love it. Honestly, I like this. I like the mechanicalness behind it. I like the fact that you're using SPX. There's still a 40 rank, right? So the mechanicalness of this, and we kind of talked a little bit about this. You're watching some fluctuations. It's through your call spread, but that's going to happen when you use the 20. When you're doing something with a 20 delta short, what are the chances that it's going to touch or go through that at some point during the cycle? If you've got 20 delta,
40%. Yeah. So when you take delta and it's 20 delta, 20% chance that'll end up in the money, 40% chance it'll touch that strike sometime in the time frame. Now, a lot of our mechanics show close at 21 days no matter what. At 21 days, I looked at it. You see these trades. We're getting about $700 on a $20 wide, so our max loss is about $1,300. When my max loss is about $1,300, at that 21-day mark, I was just a few $100s away from that. So I thought, well, I'm going to leave it on because to me, the risk reward said, just leave this on. And I've got 18 more days for a pullback in the market. We'll see. But the other ones are okay so far.
But by the mechanically putting them on, you're kind of smoothing out the delta curve instead of saying, I'm putting 5 on here. So you might have, at the end of the day, 5 on, but they're all a little bit different, which smooths out your deltas a little bit.
And today, Kai did a study. He was doing a 0 DTE study on rolling. If your side gets tested, rolling the other side, and the results were good. So that's a thought too. If it breaches one of the call sides, roll up the puts. That's an option. Roll up the put and maybe narrow the put spread if you're rolling it up.
I love it. So those are our 2 mechanical SPX trades. You've heard it before. You'll hear it again because we're doing it each week. So we're going to keep talking about them. Right.
All right. On to our other positions, Liz. We have, if we want to manage anything.
IBIT's up, which is good.
Right. We've got crypto. Take a look at Bitcoin. Bitcoin here on the side. We've got BTC over 80,000.
Okay. So that's a good move for Bitcoin. Mm-hmm. So take a look at our IBIT. Now this is decision time. We've got a zebra in IBIT. We've got the 41.44 zebra and we're up $112. Fine. So take a look at this. It's up 113 today. IBIT is up about $1. This is acting exactly as it would, 1 for 1 with the stock. Right. Our conundrum is we can ratchet this up or we can roll it out because at 10 days we like to roll them out.
Yeah, I don't think it's conundrum. I think 11 days to go, we roll it out because we don't like to leave the zebras get less than 10 days till expiration. There's lots of reasons to it, but I'd say
the conundrum is it's not going to be, you're not ratcheting it up to take off. You might actually be paying to move it.
It might not be bad though. It might not be bad. It might be going on for a very small debit, and then we're giving ourselves 45 days more duration.
So 50 delta, 70 delta. You sell 150 delta, buy 2 70 deltas.
So, and I'm going to look here. Extrinsic value, 240, 230. It's almost the same. The same in extrinsic value. So then half, and buy 270 deltas.
Oh, you're getting the credit.
Yeah, small credit. And we've got.
When I rolled mine, I was paying a debit. I think it's because I went to the 41.46.
That's what I was going to say. We could go, and then we're paying a small debit.
No, yeah, I think I did the small debit, and I actually think I did 41.46. I don't know why. Can you just? We're not going to land there, but can you move it to the 41.46? That's what I rolled to. And I'm okay with that. I'm okay because I know what I'm doing with it. This is a very long-term position for me. But
and so just looking at extrinsic value, if we buy that 42, we're paying $1.25 twice. So about 240, 248 or 240. What? 240 something. And then this 46 is 240 something in extrinsic value. So this washes it, and this is fine. This is a small debit. If we moved it to this one, well, we're only getting 230. So we're giving up about a dime in extrinsic
I'm
value.
okay with that. I just, like I said, when I was blindly fast rolling it out, I was like, I think I paid $1. Yeah, so that makes sense.
Yeah. Okay, so I'm going to try this for the 30-cent credit.
Love it.
Move it out. And
there you go. Now we've got 100 shares of IBIT that we have 100. We're control 100 shares of IBIT to the upside for the next 45 days.
I mean, if IBIT could get on a run like the market, if May for crypto is the best month they have ever seen, and is in the top 5 months they've ever seen in the history of crypto, that would be wonderful.
That would be wonderful. That would be wonderful.
What we're missing, Liz, which we usually do, is our weekly Jade Lizard and IBIT.
Yeah, we stopped that when the implied volatility dropped, the IVR.
I thought it just they stopped, like a GTC hit, and then we just kind of stopped doing them. I mean, we kind of forgot about it.
Well, maybe, sure. Well, we could do it. We have the capital to do whatever we need.
Okay, so I'm going to look. Let's look. So if we go to a 7-day, or do we want next week's expiration? Next Friday?
Next Friday.
What the heck is next Friday? May 15th?
No, it's only the 1st, right? It's next Friday. Maybe. Maybe it's only the 4th.
I know, but I don't mean this Friday. Do we want to do this Friday?
Hold on.
Then we're in the 4-day. If we go to next Friday, it's got to be May 15th.
Sure, go for it.
I'll be at graduation.
Me too.
All right, Jade Lizard 7.
Wait, are you off Monday? Or are you off Friday?
I have to put in I'm off Monday. I'm off Monday for graduation. I'm not back.
You're not, okay. So you're not back on that. Is that
Monday the 18th?
Monday the 18th. Okay.
We can see if TP can come in.
Okay.
So May 15th. And yeah, it's weird. I have 3 graduations. There's like 3.
What just happened to the market? Can you go to the spoos?
Ooh.
What just happened?
Something. Let me see. Let me see if I get it.
Should we go to Twitter? Let's see if they can tell us on Twitter.
If anyone sees the news and what's going on in the market, let us know. I will pop into Twitter. And Ashbin, we are getting to. If anyone knows what's going on in the world, let us know why the spoos just dropped 30 handles.
This is awesome. My son was in Louisville. I'm going to say it right. Louisville this weekend at the Derby. He got to go to the Derby. That little got to go there before me. I'm so mad.
I love this. Happy Derby Day. Look at this.
Love it.
So fun.
Love it. I love it. And I like that you're not wearing red, Ash. So thank you for that.
Ash, looking good in your purple and jacket. It looks good. So fun.
It is so fun. Okay.
Okay. I'm going to go top down. We've got some, Keaton's coming.
Oh, go to Ajit's picture because they're talking about this in Twitter. That's exactly what I look like when the market goes down. Keep that, heart that, repost it.
Cute, super cute, super cute. Okay, so
I've been told I'm very animated. So yes, thank you, Ajit. It's so funny. Okay,
and I'll look at because what time is it? 10:22. It wasn't like a time of something coming out on the economic calendar. No.
Drone. I'm actually just going to the chat real quick. Drone attack in UAE. What else here? Ship attacked north of Dubai.
Okay. So
in AUE fire erupts in petroleum industrial site. No, I'm getting these from the chat, so I appreciate the chat. I actually just glanced up there. You guys are awesome.
Spoos are down. We'll see. We'll see what happens. But it was a quick little move, and let's see what Vol did. Vol ticked up a little bit. VIX is 1836.
Yeah. The Vol ticked up quite a bit because.
Yeah.
What was it this morning? Did you look at it? I didn't.
So.
Where did we open?
We opened around 17.
Oh, low was 17.15.
Yeah. And now we're up to 1840. So.
Yeah. I mean, that'll do it.
Hey, I need there are a lot of people out there that need a pullback. There are a lot of people out there that need a little bit of a pullback.
There are. Do you know what I love, our viewers, though? Like, this is awesome because you were about to just go straight to the internet, and all you have to do is glance, and they're very helpful. I like traders helping traders.
It's nice having the chat. Twitter's usually not as quick as the chat, but here, Iran drones going after UAE. So thank you, Frank. Frank takes care of us. Thank you. So we'll keep an eye on the market. And I didn't push through our IBIT Jade Lizard. We were just taking a look at it.
Yeah, go to IBIT Jade Lizard.
So here it is, 44 put, 47.48 call spread for 98 cents. I'm just going to see. So this is $1,600 in buying power. I just want to see how much buying power we have. We have $12,000 in buying power.
Yeah, we're fine. I mean, we used to do it when we were low on buying power, we would buy something very similar to that we do in SPX.
So I shipped that. We'll see what happens.
We're filled. Good job.
We're filled. And as far as like glancing at, we always take off winning trades if we can. Glancing at winning trades, seeing if we have anything that looks like is worth coming off. I'm just going to put GTCs in. Or with the market the way it is, should we take some things off? Like
I would take some things off.
28% on that put spread in Tesla.
And yeah, let's do it. I have no problem. I think you have to be, because we're traders. You're not going to hold this forever. We're in, we're out. We're in, we're out. I don't care enough about a single position. I shouldn't say that. There are some things that I have that will be with me for life. IBIT's one of them because I had so much Bitcoin and I switched my Bitcoin to IBIT. And no matter what happens, I kind of keep bobbing, weaving, and adjusting my IBIT.
Yeah. QBTS, this 18 put.
Let's get rid of that.
I know QBTS, we've been fighting a battle. We have been. I'm going to go to order chains and see what our QBTS looks like. Oh, look at this. We're actually up. I thought we were fighting a battle in QBTS, but we're actually.
I don't think so. Looks like we're winning the battle.
I'll take that off. Might as well. We talked about this before. Instead of putting on bearish positions, another way to hedge is just take off bullish positions that are winning.
Yeah. That's kind of my protection mechanism now. Is cutting back instead of adding to.
Let's try and see what we have in Oklo that we're like winning on a down day, or it might have been a bad mark at the. Oh, this was probably like a bad mark at the end of Friday because this is a bob on fire.
Oh yeah, in the bob on fire, sometimes you got to keep in mind that they're so far out in time that sometimes you can get wide markets.
Right. Okay, I don't see anything else to really take off. I mean, DraftKings, we have this combo.
Let's take a look at DraftKings because I know they have earnings on deck.
That's May 7th.
No, we have a combo and we have an additional short put. So let's close maybe the additional short put. Is that winning? It's up $16.
Yeah, we could and just keep our combo on.
Yeah.
So that's winning and the short put of our combo is winning. So if we want to have like barely any risk into earnings, we could just leave our long call.
We could. I don't mind taking those off because then you're not paying that much extrinsic value. And I think that was the point of that. We wanted the long call, but didn't want to pay the extrinsic value.
So that long call has now 88 cents in extrinsic value, but we've made $48, $58, $66 off those two puts. We could just say, oh, well, that covered most of the extrinsic value and would just have that long call through earnings. I don't know.
Honestly.
Or it's the 4th. We could do something again on the 7th.
Yeah, we could do something again on 7th. I would take definitely take the additional one off, and we can decide what we want to do with the stock. But SPOO's down. Well, they're rallying back. They're only down 25. SPOO's down, and DraftKings is up for the first time in, I don't know.
Then, I mean, maybe we just leave it, or maybe we take one put off. I would actually take the more winning put. So we've got one put that made $49.
I mean, I don't care if you take them. We can take them both off. I don't care.
We'll take one off. At least we're taking some risk off.
Yeah.
Some risk off in DraftKings. And SPOOs are only down 20 now.
Yeah.
And coin's really turning around. This is left over from a calendar. I mean, this is a 4-day trade, 217, but it's worth 537.
Well, and this is so tied to crypto.
A diagonal.
It's so tied to crypto, right? No, 217 would have been a calendar, isn't it?
Oh, look here. We paid $420 for it, and it's $530. It's turned into a winner.
Mm-hmm.
So let's just close it.
Yeah, I mean, if it's 217, we wouldn't have done a diagonal unless it was earnings. That's a calendar.
Yeah, you're right. You're right. And we paid you can see we paid $420 for this calendar, and it's coming out for $530. So we made $110 on it.
217 doesn't steer us wrong.
All right. So I'm glad we looked because who thought that would turn into a winner? Clorox down again. Ooh, Clorox.
You make me laugh, but you do.
And then yes, this is the Ashvin trade, a bearish trade. I think I don't remember if it's from Ashvin or Punished Pixels.
I think it's Punished Pixels, not
Punished
Ashvin.
Pixels.
I remember when we put it on, I told him to go to bed.
Oh yeah. So we could use the market down for that trade. So we'll see what.
Who's rolling out 14 right now?
All right, I'm gonna go top down, see if we've got anything. Keaton back doing 0 DTE 2 to 3 times a week. Today was quick, and you're just doing puts. And the Kai brought in a study of April performance. The Iron Condors lost, no surprise because we had such an up move. Put spreads, the best. April was the best month for SPX put spreads that there ever was.
Yes, in the history of the SPX.
Yeah, in the history.
It's pretty funny, but it's true.
20 minutes, 21 minutes. Yeah, and when you're doing a put spread, you just need a quick pop.
Yep, and that's good.
This is funny.
Okay, and I actually love this. I like that picture a lot because let's go back to that for a second because they just put new lights in, and I wanted to see how they look.
No, I think the new lights look good. And I like the color. It accentuates the drum cover. I think the new lights look good.
Thank you. Like I said, I love this. I love it, Ajit.
Ajit, what is he doing in coin? So we just took off that residual of the calendar. Let's take a look.
And he said, he goes, click below and please no calendars. That's exactly what he said.
So funny. Short puts in coin. Well, let's take a look.
No, short puts in coin. I mean, I like Coinbase. I do think it's very crypto adjacent, right? So as Bitcoin's going up, so is Coinbase.
Right. So, but here's what I love what that Ajit does. Trade setup. Sell the 175 put for 830. Break even 166.70. Return if flat 5%. Annualized return 40%. Last price. Moneyness. Probability of profit 75%. Discount if assigned 16.7%. Net credit.
Mike, I have one question. What's moneyness?
I don't know.
Does it
mean like if it's in the money, moneyness, like if it's in the money and it's out of the money, so that's why it's not. I don't know.
Or is it 12% down? Ajit, I know he's watching, so we'll ask. But
maybe it's 12% down.
Down from where I think it's 12% down from where your break even is 12% down.
That's my guess. So let's see. Coin, he's selling the 175 put.
Yeah, and Coin's trading what? 200. Okay.
12%
maybe.
And he just is. I think he was going to June, right? Is he in June?
6/18, yes, 6/18.
So they have earnings coming up, but he's going to June, and I don't mind. And the 175 puts, yeah, he's getting $8.
Yeah, that looks like it's about 12% down.
And your break even is around 168.
Yeah.
So you've got 168.
That's not bad.
I don't
How
mind.
much capital was it?
It's a lot. Coin's a lot. $5,000.
That's a lot, right? So usually, I mean, if you're going to, sometimes we'll type these in and it'll be 10%, which would be 1,700. And then usually it's double, which would be, 3,000, a little over 3,000. This is a lot of capital.
5,000 is too much, but we have to spread it off. So it's not going to be as appealing, but it's not bad. If I do a $15 wide, we're getting $345 on a $15 wide. It's not terrible.
It's not bad.
No.
Sure. Jump in with the G.
$10 wide's only giving us $250.
I like that he said, and please no calendars.
All right, G, we'll do one of these spreads. Okay, so here's a $20 wide. We're getting $4, risking $1,500. I could put it in like no, I was going to put in like a Jade Lizard, but there aren't any $5 wide strikes. So what do you think? $15 wide, $10 wide, $20 wide? What do we want to do?
But I like that. Exactly where you're at.
All right, 342. And a $15 wide.
Yeah.
So that'll be our coin earnings trade.
Perfect. I like it. or if by some miracle coin pops up between now and the 7th, I think it's the 7th, we'll take it off.
All right, Blue Wackadoo, hello. Happy Monday. IVR sitting in the high 30s, quick 50% in the standard 16 delta. So I'm done for the day. Nice.
Very good. Love it.
Minutes.
Love
Good. Good for you, Mr. Wackadoo.
Mr. Wackadoo. I love Blue Wackadoo.
I like it.
I like it a lot too. It's kind of fun to see.
And it's nice they're out already before we had that little drop, because that 30-point down move could have scared some people.
It could have.
So
I don't know if you saw it was a 30-point down move, then we went back to only down 14, and now we're back down. We were just under 30 again. It's kind of fluctuating around.
I don't know if you saw this study that Kai did on the 0 days today, talking about how there were losses on the iron condors for April, but if you rolled the puts up when your call spreads were tested, the losses were a lot lower, a lot less.
Interesting. So you roll the put spread up for the iron condors. So I thought about that with the jade lizard study that we just did. So this morning, my jade lizard. This morning, my jade lizard hadn't come off yet. It's the same one that we had. And I thought about rolling down the call spread. And I collected, I think, 460. So when I rolled the call spread down, I was getting another 90 cents on it. I was like, that's not bad. Because then it's not a bad thing to do, but I mean, it's not that much credit.
So you could see here, like we just put this on at the expected move, and now we're here from that quick move in this boost.
Yeah, but it's still pretty far away.
And when you talked about rolling the call spread down, so that's 90 cents. Let's say we wanted some extra credit and we decided, okay, let's move it down. We can get another $1.65.
That's what I was looking at today in the 2-day that we got out of. I was thinking about rolling it down. I was going to do that after the show. I don't think that what I like about the jade lizard is I don't think there's a time to put it on. It's not like I got to wait until 9.
Right. No, it's not. It doesn't matter. Are you surprised we can get $1.65 just by moving it down?
No, that's what I did this morning. And that's what I was looking at this morning. But I wasn't even going that far down. I was going from where the call spread was to the expected move, and I was getting $1.
So
$1.50. Keep taking it up. See how far you can bring it up. Yeah. I was at the expected move.
Well, this just see.
Oh, that's only 35 cents.
Yeah.
Well, this morning when I was looking at it, I was getting another, 85 cents at the expected move in the 2-day.
If someone wanted to reduce the risk, you could roll it down. We just put this on, but rolling to the 30 delta gives you an additional $1.
Yeah, it does.
I don't know.
Well, okay, hold on. What did we get for this? 460?
We didn't. 450. 450.
So if you get an additional $1, then you've got 550. Then you can just let it go.
That's true. That's true.
Well, and we're saying that because you've got at least 50 cents. So where we get where you have to close it when it's going through the call spread is when you don't exactly have the $5.
And so this would give us another $1, another like $1 less in risk to the downside, because we had $1,550 in risk to the downside. Then we'd have $1,450 in risk to the downside. And if we continue to fall down, maybe we roll it again for another $1, and then we have $1,350 of risk to the downside. You can do that to reduce your downside risk.
Yeah, you can. With the 4 days, you can.
So I don't know. It doesn't. I don't mind it. To your point, if we have 550 and it blows through, who cares?
We don't.
The upside. I'll put it in. Oh, did you see how wide that was?
It's very wide.
I'll put it in for $1.
Let's see if we can get filled.
Okay, and I want to make sure we get to all.
And so we did ask for the study for this Wednesday from Jacob is going to be that same. Ashvin still kills me when we go by there. We did ask for it. What happens if we just let him go?
Oh yeah, and we'll see. Those results will be coming this week, I think.
Oh, this is a great question. This is from Twitter. Thank you, Frank. What's the optimal DTE for zebras? Zebra zero extrinsic back ratio, which is a stack replacement, 30, 45, 60, or 90 days. Have you done any research on this? Also just wondering whether a zebra is best with stocks or ETFs.
So I think as far as you heard us say today, 11 days to go, we're going to move it out. We don't like zebras to have less than 10 days, because that's when you can get, if you put on a zebra and it drops down to your long, well, the extrinsic value in that can help you. But once you're 10 days or less and it drops down to your long, that's when it starts to hurt you, where you don't have time on your side, you don't have that extrinsic value in that long, and you could be losing double because you've got those 2 longs and 1 short. That's why we want them out at least more than 10 days. But I don't know if there's a right or wrong. The further out you go, the more expensive they are, so the more risk you have in the trade.
And that's what I was going to say. I think this depends on how active of a trader you want to be, right? Because if you're in 30 days and 20 days, you got to move it. If you're in 45, then you have 30 days. And to Jenny's point, it's each one of those is going to be. Can we show that? Let's go. Oh wait, let's finish this question. Also, his question. Also wondering whether a zebra is best for a stock or an ETF. It is literally if you want to buy the stock. So that doesn't matter. Stocks and ETFs, it's if you're bullish and you want 1-for-1 upside.
So I just pulled up silver. Silver's down today. Silver has every strike. It's an easy example.
Yeah.
So I'm going to go here.
30 day, 45. Yeah, just we'll price them out.
50 delta, 70 delta.
Yeah, that washes it.
Okay, so in the 32-day, it's $895 for one zebra.
And I want to say with this, you can't just, and a lot of times if we're on the 45 days, she can just hit you're going to move this. You have to actually go into the 45-day cycle and redo it with the 50 delta, 70 delta.
So $889. Then I'll go the 60-day or 57 days.
No, but the 45-day because that was the 30-day.
45-day, sell a 50 delta. And in silver, I know 50 delta is up here because of the call skew. Just put it at the money. And in silver, it's one where you might have to look at extrinsic value. We're collecting 440, so I want a call with 220. So 220. Yeah, it is the 70 delta. So here instead of 880, it's 995 in the 45-day.
Correct.
Go out and just to show if you go far, if I'm going to almost to the
they want 60, 90, just go to the 75. Split the difference.
560, so 250, 280, 280. Here we go. It's crazy how it always is the 70 delta.
And there's $12. So you see, it gets more expensive to control the 100 shares of stock. But some people, if you don't want to be as active and you want to leave it there, it's a different strike. You can absolutely do it. I don't know if I'm an active trader, so I prefer to pay less and manage it.
Right, I agree. I do shorter term and
no shorter than to your point though. It's kind of like shorter term, but 30 days, 45 days.
Like right now, if I'm putting a new one on, I'm going to go, I stick with the monthlies usually because they're more liquid. So right now, if I'm putting one on, I'm going to 45-day.
Right.
But if I'm not going to go the 11-day, but there have been times where I don't want to deal with it. I had something long-term in my mind that tells me I just want to put this on and leave it. And then I have gone out further in time. I have gone to a leap and do it and done it, but they are more expensive. So I do prefer shorter term and just keep adjusting them.
There was one zebra. I've only done it once in my life where I was like, I just don't want to look at it anymore. So I was like, I went all the way. Right. I got it the heck out of the way. So I never have to open it up.
I can't even remember what that was. Do you?
I did. It's so funny, but I don't. I'm sure I still have it in my account because I was like, I don't want to think about this product, but I want to be bullish in it. So I just moved it all the way out.
Now, we do have a tweet from Mikey. Mikey, hopefully last week, I think it was oil that you needed at a certain strike. Hopefully it ended up where you needed it.
Oh, yes.
Yeah, it was oil. It was MCL. Let's see where it closed on Friday. Friday close 101.94.
Hopefully.
Let's see.
Hey, Mikey.
I'm gonna scroll. I'm gonna scroll to Mikey's from Friday.
You can just click on him, can't you? I'll just scroll.
Click on Mikey.
Do it. Just scroll. You're halfway there.
101.94. So it ended up here. So
it's not bad. I think
it's not bad. It's not bad. 103 would have been better, but
yeah, that's not bad. It's not good, but it's not bad.
All right, where did Mikey go?
You got to go back to the top.
Okay. Happy Monday, ladies. Mimi had several mind erasers over the weekend and decided to go back to the forward well again ahead of dividends, sell the in the money 12 put in the 11-day, and maybe then be able to collect a sweet 5% dividend. Mikey, good day to get in because Ford was down today. Down 35 cents to almost 3%. Yeah, sure.
Well, because several mind eraser shots later. I love it.
We have the 12 puts in the 11-day, 12 puts in the 4-day. We're locked and loaded.
Yeah, we're with you. We're with you, Mikey.
We're with
It's
you.
so funny. Mimi had several
mind erasers.
Well, it's not a shot. It's a delicious drink that the next time I go, do you know what? Oh, I wasn't out this weekend. I'm ordering one the next time I go out.
Maybe, when I was at the 50th birthday party on Saturday, people were getting espresso martinis. And I thought of saying, hey, why don't you try the mind eraser instead? I don't know why espresso martinis have become so popular in our old age. I think because everyone gets tired and they need a little boost.
Yeah, but so I don't think the mind eraser has caffeine in it. It's got Kahlua in it, but not caffeine.
Yeah, it doesn't. It's like it almost tastes like the espresso martini without the caffeine.
Yeah.
Yeah.
I think you're right. Espresso martini. Because I was like, I'm so tired. I was like, Kevin, espresso martini. I was like, I can't. I would die on vodka.
You have like a table of 50-year-olds at this 50th birthday party Saturday night. And at the end of the night, before we left to go to the next phase of the party, almost the whole table ordered espresso martinis because they were all ready to go to bed.
Did you order one?
I did not.
So for those of you, the person who turned me on to this, and I know he's been done drinking for a long time, but Frank in the chat, do you remember when Frank turned us on to Skinny Russians?
Yes, that was like back in New York when we were out with Frank in New York at the Marriott Marquis.
Because we were about to go to bed, and he's like, I'll take a Skinny Russian. And Jenny's like, what is that? And then he explained what it was. She's like, that sounds good. We'll all have one.
I know.
Those were back in the days, Frank.
So Spooze down 27. I didn't even look, Liz, to see what the earnings were today.
Oh, you know what?
Why don't you can you pop into the content calendar and let me know?
I will, yes. Hold, please.
And look at Robinhood up $3 today, which we needed a little bit of a move. We still have our 82 call left over from our earnings diagonal.
Yeah.
And we added on, what did we? Oh, we added on a Bob on Fire. So that's making money. It's making a decent amount of money because let's take a look. This Bob on Fire is worth 73-cent debit. And what did we in Hood? We took in $335 credit. So it's making $200 and something. So we've come close to have we come close to scratching our way out of our losing earnings trade?
There's a possibility. And thank the Lord you had me go to the earnings.
Okay. So is this right? Or which, I don't know. Are we up $7.99? Are we down $300?
I can tell you right now, give me 2 seconds and I will go into our Hood position because I've got ours up and I've got year to date.
If I go year to date.
I got it. Give me 2 seconds. Hood, we are down year to date.
Yeah, I see it. So we've got this Bob on Fire, but it has made a little bit of a comeback. Okay. Oh, yeah. Tell me earnings. Rattle them off. We have...
No, there's only 3. So Palantir.
Ooh.
Peloton.
Okay.
And Transocean. And they're all tomorrow morning. I'm sorry, they're all aftermarket today. And then before it opens, it's PayPal, Shopify, and Pfizer.
Oh, so we have more than... Okay. So we do not have a Palantir position on...
I do.
No, we don't. I do, you do, but we don't here in this account. If
Palantir's been a wild ride lately. Take a look at it.
You called me Lily.
Wild ride lately.
Oh. The diagonal is $13 wide for $5. That's not bad.
No, it's not bad. That's not bad.
No, it's not bad. The diagonals aren't bad here.
But the diagonals, I'm going to enunciate now. The diagonals are always better on Monday.
Yes. Agreed.
Because of the nature, you're selling a 5-day instead of as you go along in the week, you're selling the 3-day, the 2-day in the near term.
Let's just knock this out, right? 533 on the $13 wide diagonal.
I mean, you're bullish Palantir. I'm bullish Palantir. Pop it in.
Right. I'm pretty sure I have a diagonal on in there.
Yeah.
And baby small, I have like one diagonal. And I don't have a position in Palantir. Okay, what's next?
So then, hold on, let me go back to it. Then we've got, so Peloton, I mean, you can take a look at that. Then you've got PayPal, Shopify, or Pfizer.
Peloton, $5.
Did you see that GameStop wants to buy eBay and make it the next Amazon?
No.
Yeah, that was the news this morning. I want to see what both of those are doing too.
Down 230. I mean, they probably have the money to do it. eBay up 570. Interesting.
Yeah.
I always thought like Walmart would be the biggest competition for Amazon.
Gonna be GameStop. What the chances, right?
All right, what else is on the earnings list?
Okay, Shopify. I think that's too expensive for our blood.
Yeah, Shopify. Oh, it's only 127.
Oh, we're right back in it. Anything you want to do in Shopify?
I'm just gonna price out the diagonal just
and
because.
PayPal. PayPal's also in there, but I don't like PayPal.
I know. So here we have 11, 12, 13, $14 wide for 582. Yeah, you're getting these wide ones for a smaller like percentage of them.
I mean, I don't mind putting both of those in. Then we got 2 bullish diagonals in. And we know what our recourse is. It's not at the top of its range. If it goes down, then we will just sell it put spread.
The markets are a little wide in Shopify. Oh, we got filled. So we've got 2 on Shopify and Palantir.
Yeah, that's not bad. That's not bad. I'm trying to push everything out as we're going, so they should be going to the follow feed. So you can check my work there, Jenny Andrews.
Here we go. If you want to follow people, you can go to the follow page. You can see what everyone's doing. Here's Liz pushing our trades out. We closed our QBTS. We closed our Tesla. Put on IBIT, SPX.
Hold on, there's more coming. There's more coming. Give me 2 seconds because I had to do the other side too. So, and then you should refresh right now.
Well, I'll just click on us, see what we're up to. Here we go. DraftKings, Coin, Palantir, Shop. They're all in there.
See? Yeah.
Let's see what
all at the same time.
Fazia. Oh, Dell. So that's a roll. And sometimes I'll look at that if you see someone rolling or making adjustments because that stock might be moving.
She's got a lot of rolls in there. IBKR, Rivian.
Yeah.
Can we take a look at also, and I'm bouncing around. Can you take a look at SIBO, CBOE? Is how you spell it. You say it's SIBO.
It's up $12 today.
Did you see it Friday?
I know. I mean,
that's crazy.
That is crazy. And good for all of our friends at the SIBO. Hopefully they'll have company stock.
So it was so funny because I was talking to one of our friends, Christy. They came to Annabelle's play on Saturday and we grabbed drinks with them beforehand. And she works for an accounting firm that's in the same building as the SIBO. Mm-hmm. And so she was like, I got a question for you. And she legit, and I loved this. She's like, we have a client that has a very concentrated stock position and it's all in this. Mm-hmm. What can they do? All in SIBO. What can they do to protect it? I was like, number one, they probably already know. But number two, I was like, throw a collar around it. Like throw a collar around your stock.
Right.
If you want to protect your wealth, if you're trying to protect your wealth, you can throw a zero cost collar and keep moving it. If you have a concentrated stock position.
And again, I think some people in this industry, they have some handcuffs as far as even trading goes, right?
Oh, he's retired, been retired for years.
Oh, okay. Because we know like some people who they can't really, some people in this industry can't trade just because of legal issues.
Yeah.
So, but yeah, right. Throw a collar around it. I mean, you cap yourself out.
It was Christy, so I couldn't say this, but I was like, how about you just sell a call spread and you buy a put spread to the downside so you're protected.
I know.
I was like, that was a little bit too.
But good for them.
I know. Yeah. But it was fun. It was fun that one of our friends actually asked me questions like that because,
Yeah, for sure.
Yeah.
That's nice that I didn't know that that's what Christy did.
She's an accountant.
Yeah, right. That's what I thought. She was an accountant. Yeah. She's not managing their portfolio.
No. She's not managing the portfolio, but she's the accountant for old traders.
Yeah. Okay.
Not old, retired.
SPOOs were just down 34. Now they're only down 32. We do have, at least we've got, we have some bearish positions that we could use this down move. We've got this ES trade. We also have an old Delta Buster, which we could use a down move for that too. And SMH, we did make an adjustment to our SMH. We rolled it out in time.
Okay. To the same kind of trade.
Yeah.
I still think we were so far through an SMH, this small $4 move wouldn't have made a dent in our.
No, we need look at this.
Yeah.
We need a much bigger down move. I mean, you heard, so SPX, SPY, the April move in the top 5 moves in history, but NASDAQ, the number 1 month, biggest up move in any month in history for NASDAQ.
Oh, wow. So
I'm sure SMH as well.
SPX top 5, I'm sure that's an SMH, yeah.
Yeah.
Yep. Looks like it. Like, you cover that up, I wouldn't know which is which, right?
From April 1st to April 30th, biggest move for a month in the history of the NASDAQ.
In the history of the NASDAQ. That's crazy.
I know. All right. We are done. We're out of time. I do want to make sure I didn't miss anybody. Florida 7. Yes, Kahlua contains a small amount of caffeine because it's made with real.
Love Florida 7.
Okay, yeah, all right. Standard 1.5 ounce drink contains approximately 5 milligrams of caffeine.
Thank you. I appreciate that. So
Yeah, the mind erasers could have given everyone a little bit of a perk too.
And then they wouldn't remember when they go into party number 2.
All right.
So are we out of time? Okay, we have 1 second left. What do you think the day is going to bring? Because I
have no idea what the news is going to bring. So we could be all over the place. Like if there's more news on what's going on, or there's, we could have a real down move. But if nothing happens, we might just sit here all day.
Because it's crazy. I mean, you would think with everything that's happening that we would be down a little bit more. I mean, the way this market's acting, we could rally back to right into unchanged.
Yeah, we could be unchanged by the end of the day.
Yeah.
I don't know, because this is so news driven, right? We don't know what's going to happen the rest of the day.
Right.
So I'm not playing. I'm not going to go sell something in the 0 day or buy something in the 0 day and play for a move one way or the other for today. I'm locked and loaded with my Jade Lizard and my 45-day Iron Condor. That's it.
I agree. I'm locked and loaded my SPX too. All right, Jenny, good luck with our earnings trades. We've got 2 in, right? We got filled on both.
Mm-hmm. Yep, filled on both. So that's good. I do like those that we can pay such a small percentage of the width of that diagonal.
Yeah, Mondays and Tuesdays are diagonal. Chef's kiss.
All right, everybody, have a wonderful day. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. See you tomorrow.
We'll see you tomorrow, live with the SIBO.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
I'm still coming down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love.
Hey, what's going on, everybody? Welcome to Option Trading Concepts Live. My name is Jamal Chandler. I'm joined by the Ryan Grace. What's going on, man?
How are you?
Fantastic, fantastic. Good weekend and all that?
Yeah. Tough to remember what I do anymore, Jamal.
I get it.
The little one, I'm just up so early, so the weekend feels so long. When you're up at like 5 in the morning on a Saturday and a Sunday, it's almost like having an extra day.
It's crazy how it just dominates your life, right?
Yeah.
It just dominates your life. And then before you know it, they're graduating college,
Oh.
Ryan. That's how it goes. My oldest is graduating college this coming weekend. So
Wow,
it's
congrats.
crazy how things. Yeah,
That's
thanks.
exciting.
It's crazy. It's crazy how things happen. They happen fast.
Yeah.
You know, like I try to tell people all the time, enjoy it a little bit, because I'm telling you, sooner or later, man, things get crazy.
Yeah. I'm trying to soak it in. It's a lot of fun for sure. But yeah, weekend was good. How about yourself? What'd you get into?
It was good. My youngest kid had the track meet. He's it's actually winding down for him, but he had a track meet this week. Pretty good. I mean, it's kind of fun. He's the one that listens the most out of all my kids.
Okay,
I mean,
that's
you give him
good.
instruction, and you can tell him what's what. By that, I mean, like I ran track, but I actually didn't do long jump. But I told him, like, you know, like, because he did long jump a couple weeks ago. He did like 13 feet or something like that. And I told him, like, look, when you do it, run through, check your steps. And, you know, that's what you run through, then you see where you hit your mark, right?
Yeah.
Kind of see where he's like, oh, okay. So this time he did it. He beat his personal best by 2 feet. In
Wow.
15, he went.
Well, that's huge.
He won it. Yeah, it was kind of fun. It's kind of fun. So,
what grade is he in?
He's in 7th grade.
Yeah, 15 feet for 7th grade is pretty good.
Yeah, it's pretty good. It's pretty good.
That's awesome.
And he came second in the 200. First in his heat, second overall. He had a pretty good meet.
Hell yeah.
Yeah.
Glad to hear.
That's pretty much it, man. Not much else. I'm probably just kind of catching up on like playoffs. I really haven't watched a whole lot of it at all.
Me neither.
Really hadn't been interested, but I did watch those Game 7s yesterday, and I watched Game 7 hockey, Tampa Bay and Montreal, I think it was.
Okay, I watched a little bit of that.
Yeah. We'll get more into those, but yeah, other than that, man, pretty chill.
Who won, Toronto or Cleveland? I didn't see.
Cleveland won.
Cleveland
ended
okay.
up pulling away.
And Celtics lost.
Celtics lost, yeah.
Okay.
Yeah.
Yeah, I'll start watching as well.
Yeah, I know. I'm gonna start pick up watching. We'll see where it goes. Yeah, folks, join us in the YouTube chat. You know what time it is. Today is Monday. We got Crypto Mondays. Mikey is out today, and yeah, the next couple of weeks are going to be a little sporadic. I think you're going to see not only on our show but at a couple. Some of us. We have time to take off. We didn't realize that we have time to take off. We got some use or lose time. And we've been so busy and so wrapped up in this market and all this stuff that's going on. And I think some of us are starting to realize now that we got to do it. And by some of us, I'm talking about myself in particular. I'm going to be out a lot of the next 2 weeks. Couple of days from now, I'm going to be at a conference. So that's one thing, Tuesday, Wednesday, Thursday. But then after that, I'll be out Friday. I'll be out most of the 2 weeks following that. I'll be in on Thursdays doing the show from the SIBO floor. So don't worry, I'm still around. I know when people disappear, the question is like, wait, what happened to Jamal? Did he get fired? No, I'm still around as far as I know. Although people do get fired on vacation. That does happen. It's possible. It can happen. It is possible. Hopefully it doesn't happen to me. That's the deal. So let's jump into some slides, man. You got some slides. I know you got some data. Let's jump into that.
Yeah, let's do it. We've got our crypto update for May 4th. I think that's the right date, right?
It is.
May 4th.
May the 4th be with you.
Yeah, there you go.
For those who celebrate.
So let's go through the slides here. We'll start with our performance update. Bitcoin trading a lot better here.
Woo, 80K, Ryan.
Breaking through, maybe on its way to 90, but stair-stepping higher. Volatility's come in a little bit, as you know, Jamal. We've talked about that over the last few weeks. But took out 80 earlier, pulled back a little bit, and then kind of taken it, I think. So I would expect we chop around here for a little bit. We'll look at the expected moves in just a second as well. But yeah, up 20% on the month. ETH seeing a little bit of follow through as well. On the other side of that, you kind of have a little bit of a mixed bag here. On the other side of that, you've got Doge outperforming Bitcoin now year to date and in positive territory over the last 3 months. But when you look at a lot of other alts, aside from ETH, there's not a ton that looks great or is trading very well right now. That could change, of course. We've talked about maybe needing to see an ETH all-time high before you really had an altcoin season, and you're quite a ways away from that at the moment at 2,300 or 2,400. But yeah, definitely trading better. That said, if you're looking for a narrative, I mean, you potentially have the passage of the Clarity Act coming by the end of the month. Looks like it's going to go into markup with the Senate Banking Committee. That window is closing, but hopefully they're able to pass something here over the next couple of months, maybe as early as the end of this month, like I said. But aside from that, I'm not seeing any specific catalyst. I think this is just stocks up, rates up, commodities up, crypto is up. The environment is generally positive aside from the geopolitical risk, and crypto's following along.
Yeah, no, it kind of seems like that. Is there any sort of follow-on effects from what's going on with inflation, et cetera? Like, yeah?
I think so. What you typically see is when you have an environment where you have clear signs of economic growth and inflation, just rate of change accelerating to the upside, which if you look at the data last week, was pretty positive. You obviously have the oil price as an input to the inflation measure. And I think we get CPI next week as well. But that setup, historically, it's been an environment where Bitcoin tends to perform well. It holds up at least. It's not like that environment where we're going to see the NASDAQ get smoked, where growth and inflation are down. And so at times it might ebb and flow. But yeah, if you look at the setup here, absolutely, when you have that inflation narrative, when you need to chase that inflation narrative via asset prices on the margin, this is an asset that tends to benefit or do well in that environment. So that's at play for now, at least. That could change in another month, a couple more months. Obviously, that economic data that we get, some of that inflation data is lagged, of course. But I think if you look at what might be the forward indicator to that, which is really the price of oil, that's continuing to kind of trend higher here. So it looks like we're in that positive environment for both growth and inflation. So that's what I'm seeing there, Jamal. Not much else to write home about in terms of changes in price momentum. Bitcoin and ETH have been positive. Everything else, as I said, has been somewhat negative. And then you do have Doge on the other end of that spectrum, is trading a little bit better. There was an announcement last week, I believe, that there is a Doge mining company that is looking to go public on the NASDAQ via reverse merger. Maybe that's what's pushed us up above 11 cents here. But there seems to be more attention on Doge, trading better here. The trend is reversing a little bit, but not really seeing that many other areas of the market.
Wow. Reverse merger.
There you go.
Doge company. Okay. Giddy up.
So jumping to the next slide, we've got our expected moves really quickly. Vol has come in quite a bit, which I think ultimately does invite flows back into this asset versus what we saw when we were at 90% volatility and the market was just blowing up if you go back to February or so. So you're on the other end of that. And you are seeing some of these digital asset treasury companies buy more of the underlying assets that they invest in. So Bitmine, for example, bought another 100,000 ETH for the third week in a row. That comes out to be about 250 million in total spend. So decent inflows there still, or demand from some of those digital asset treasury companies. Strategy's been pretty active in the market. I think they've paused ahead of earnings here. But point being, that lower vol tends to then invite those fund flows, and you see that with the ETFs to an extent, started to look slightly better. But looking ahead, the trend in Bitcoin is higher here, higher low in that range, higher high, pushing into 85. Maybe you get a little bit of a run and you get into 90. That would kind of be the next stop on the chart, I suppose, if you try to look for some technical levels. But looking for about a $4,500 move in Bitcoin. ETH, not quite $200, but takes you back up above $2,500 if we could get there. And then again, Solana, not doing too much. XRP has been relatively bearish. Doge pricing in, closer to 12 cents, but that's been moving a little bit higher here. Those are expected moves. I think on the next slide, we've got relative value. Not much has changed here. It reinforces that theme. Bitcoin has been leading. You can see ETH Bitcoin there, and then Doge Bitcoin, showing some signs of life. But really, again, this has been a Bitcoin-driven move. Jumping to the next slide, we've got our correlations. And those relatively strong positive correlations between equities and crypto, in this case, equities and Bitcoin, pretty persistent here over the last 30 days, almost moving together in lockstep on a daily basis, slowing down or kind of moderating, I guess, a little bit over the last few weeks. And then not much else to really point out here. Shorter term, there seems to be a positive correlation with the dollar, but there's a lot of noise there. I think structurally, when you look at the dollar kind of trading lower here and coming off of those recent highs over the last month, that's been supportive for risk assets as well. And that's in the face of much higher yields. So if we jump to the next slide, I think this is my last slide here. Just taking a similar approach as we do, looking elsewhere around the market. We flagged this a few weeks ago, and that was when equities flipped back to bullish momentum, and that train has been kind of one way since. Gold continues to show signs of weakness on a kind of intermediate term time frame here. So we flipped from bullish to neutral momentum on the weekly basis. That's worth paying attention to. If that goes red, I would step into any rally there and short that. But it's been an underperformer here over the last couple of weeks, short term. And I think the thing to key in on here really is the increase in interest rates. When you have the 2-year yield up 40 bips in the last 3 months or so, I think you have to start to pay attention, because I do believe that there is a point, let's play this out another month or so, if yields start to take off, let's just call it 450 and higher on the 10-year, I think the stock market probably has less room to go to the upside if yields are being driven not so much by that growth measure, but more so, oil's 110, oil's 115, inflation is coming back. There could be some surprises in CPI to the upside. If that's the reason why you're seeing yields move higher, I would be a little bit more skeptical of the move in stocks right now. But of course, Vola's come in, bond market Vola's come in, the VIX is underneath 20 again, and the dollar is weakening. So shorter or shortest term looks pretty positive, but keep an eye on interest rates. And that's it for me, my friend.
I mean, it's like the market hears you, literally, as you said it. I mean, it's from your lips to the market's ears. It's literally happening. And it's playing out right now. I mean, we're up above 4.4%. The 10-year yield has jumped up once again. And you can see that the market doesn't like it, particularly gold. I mean, that's one of my biggest problem children right now when I look at my positions. And obviously, oil is going higher too, 105.59 as we sit here. So, yeah, that is definitely the big thing. And you can see markets have turned around. They were slightly positive on the day, down 44 handles right now, as low as 50 handles a little bit ago. But Bitcoin is interesting because, yeah, we have seen some of those signs. Like you said, it's like kind of not much has changed. But look, being over 80K is somewhat of a big deal, at least in the near term, because it's just been so weak over the last several months. It really just didn't have any get up. But it didn't really have much get down either, as far as like it wasn't really getting hammered. Like that was the one thing I just kept noticing. It seemed like it was holding on to its floor and eventually got rewarded, and it's bounced back. I looked at MicroStrategy, as you mentioned it. That stock has been bouncing back too, naturally, as Bitcoin's been bouncing back. This one was another one. It just didn't seem like it had any motivation to trade higher. And then as this rally has happened, as other things have gotten pulled up, as Bitcoin got pulled up in the rally, eventually you see the moves, man. So yeah, it's an interesting spot where we are right now. After this huge rally, now it seems like over the last couple of days, every other day we have this situation where gold fades really hard and oil goes up and the dollar goes up and yields go up. And so I think that's the environment we're in, where there's definitely inflation. We're trying to pretend like it doesn't exist, but it's certainly there.
Yeah, absolutely. And, we get distracted. We've been distracted, I think, at times, or maybe more so attention is turned away from the geopolitical risk, the war in Iran, and you focus on things such as the earnings. Now, earnings from the S&P 500 after about 2/3 of companies reporting, I think, are close to like 30% year over year. NASDAQ is even better. So earnings have been great. They're backward looking, of course, but that has been a very positive story. Now you're getting headlines that missiles might be flying again and hitting Gulf infrastructure. I have no idea if that's true. That's just some of what I'm seeing here. So I think you're going to see that volatility come back into the market, and now maybe the war will be front and center again. But we did forget about it for a little bit.
Yeah, I mean, we definitely have. I mean, I've forgotten about it completely because I've just been watching markets, man. I can't keep up with the narrative and the news. I mean, you'll hear one thing that sounds like it's de-escalating. You hear another thing that sounds like it's they're re-engaging. So I don't know how anybody can deal with that. I've just been watching and trading markets, and that's just my way of dealing with it. I don't watch the morning news. I don't really watch any of it. I mean, you could say that I'm like, sort of, I guess, living in a bubble in a way as far as that goes, but I don't really care. I mean, I just can't make any heads or tails of what's going on.
Right.
But the market, at least more recently, has told me that things have de-escalated. We're at all-time highs. The VIX is back to lows. But again, the one thing that didn't really make sense was oil is still climbing.
Yeah.
And everywhere you look, especially even on local news, you're starting to see more and more of the stories about that of oil, gas prices going up. And so that kind of lets you know that it's still a thing. And you're right. Maybe at this point this week, we start to see more stuff. So I don't know, man.
Yeah, I think there's a lot that supports a higher oil price here. I mean, even when you look at, I've got crack spreads in front of me, 3-to-1 crack spread above $50. That's refiners' margins. You think about demand from refineries, it should hold up at least for now at those levels. That's fairly profitable. But to your point about some of those stories you're now starting to see, and I think the consumer is clearly more aware of this now. A lot of times that feeds into sentiment, and you've got, I think, about a 430 average for gasoline nationally. Front month crude oil future right now is 373. I mean, all these things are just ticking higher week over week. That eventually will weigh on this, in my opinion. Maybe it's $5 a gallon is where you start to see it's front and center, and there's that demand destruction, at least from the consumer side. But I mean, again, at 105, crack spreads are pretty supportive. Brent's trading back up towards 115. You're seeing the whole curve start to shift higher a year out. So I think from a inflation input as well as just a trade, I'm continuing to lean bullish on energy, crude oil specifically, and energy companies, at least for now, or oil companies.
Yeah, to your point about the curve, it's true. I mean, right now we see the front month 105 in crude oil, the M contract, and we got about 10 or so more days before that shifts over to the N contract, July. $5 difference between that, another $5 difference between the N and the Q contract, which is August. And like you said, the back months, I mean, about a couple of weeks ago, these were all $70, $71 or so, and now they're back into the high 70s, almost 80s.
Okay.
So
up almost 10% or more.
Yeah, it's
yeah, I think the trade for now, I mean, look, when you get new information, you've got to trade it, but you've been able to, for the last couple of months, just stay long the front month, roll that contract, and you pick that up in terms of the curve trading higher here. And I don't think anything changes it. We've got EIA on Wednesday. We'll see how large of a crude and product draw out of the United States we get, and that'll be the second week in a row.
Yeah. I'm just sitting here thinking about what I got to do. I got 10 more days in the sim contract trade. I got a iron condor, but it's not even iron condor at this point. I'm basically short call spread.
Yeah.
And, $2 wide, 98, 100. I'm going to have to move this thing. This is not coming down anytime soon. I thought for a second maybe it would fade because we had a big move on Friday. Outside. I thought that was interesting. 2 days, actually, when you consider it, from the 30th to the 1st. I was like, oh, okay, fine, it's going to fall. Nope.
It seems as if some of the jawboning that we've been relatively used to over the last month or so is having less of an effect. The market is not buying it as much each time we get these anonymous sources and headlines around some sort of, I guess, deal. I don't know what you want to call it, but we'll see. But that said, I mean, you're always a tweet away or a headline away from, as you mentioned, you get these big 5% pullbacks all of a sudden, and if you're quick, you can get out of that trade or into something else.
Yeah, it is. I'm not happy about this. I don't really like it. God, I hate when this happens. I got to move something around. For the most part, things have been good though, as far as like trading. But this is definitely one of the two things that have been tough to deal with more recently is the move in oil and gold in both opposite directions, and I'm getting hit by both of them. I got to figure out what I want to do. I'm sure you guys have similar problems. So yeah, jump in the YouTube chat, ask questions. We'll get to those in a little while. Jared is in the same camp as you. He's like, I feel you, Ryan. I got a 6-year-old and a 1-year-old. So you're not alone.
On your toes.
Yeah, the kids keep you on your toes. Brandon, thanks, man. Congratulating about my kid. Thanks, man. Yeah, it's kind of cool. He just came home yesterday for a couple of days before heading back for the actual real thing coming up this weekend. Before we get more into the chat stuff, what else are you looking at these days besides obviously the normal?
I'm fully loaded right now, man. I haven't had this many positions on in a while. Maybe I just have more time on my hands. But the environment that I've been trying to trade has been exactly that I described earlier, where growth up, inflation up. And you look at this impact of higher oil prices and just the kind of supply squeeze that we're seeing. We've got commodities across the board, with the exception of some precious metals, seeing a decent amount of strength. You've got copper pulling back here a little bit. I think maybe it gives you an opportunity today if you didn't have a position on in there. But I'm in a lot of energy-related names, some oil-related names, some of the AI infrastructure-related names. So, for example, just in really kind of adding to positions and shares, selling puts more than anything. We're not doing anything too fancy in there, but in everything from Berkshire Hathaway B shares, CCJ, that's Cameco, which is a uranium miner, and they own a decent chunk of Westinghouse. So that's nuclear related. CoreWeave.
It was up today, right? Or at least it was at one point. It was making a move, I heard. Yeah. I haven't been in here in a while.
Yeah, you look at some of the companies that they own. I think, there's also the petrochemical shortage side of the higher oil prices and the shut-ins. And just when you look at some of the Gulf infrastructure that's been disrupted, where some of those supplies globally have come down. I think there's some interesting things there. So you look at like fertilizer, Nutrien, NTR, Lind is a lot of industrial gases, so that's LIN. And that's been, I guess the way that I would summarize it, XLI, just going through that ETF's holdings and looking at, okay, what's got a lot of momentum behind it? Why does it fit this narrative? Caterpillar is another one that has just been screaming higher. And then I think the other way, one last little piece that I'll add to this, the other way that you could play this, and my time horizon is a little bit longer, but when you look at the AI build out and you look at what's happened with NVIDIA and you see the memory stock prices or memory chip stocks all ripping higher, there's still that picks and shovels play. I think there's still the energy infrastructure piece to that, which is natural gas, which is turbines. GEV is a symbol that has basically doubled. So I don't think you necessarily chase these things, but you haven't seen much of a pullback either. And I think that they're very relevant and they're very in play. But natural gas infrastructure, pipeline companies, companies like Williams, you have an ETF here on my screen, TPYP, which will give you access or exposure to pipelines. So that's been my move right now, is just all kind of industrials.
TPYP? What is that?
That's the pipeline ETF. And, these are not necessarily things where you're going to be able to trade options on them or that the options market's all that liquid. But in terms of where I'm buying shares, where I'm buying dips, what I think is relevant and in play, it's mostly been that. And then I'm just carrying a short via put spreads in micro ES futures and just call spreads in the VIX, just small, in the event that you do get a little bit of a reversal here, but it's not my thesis.
Yeah, I've kind of put on a couple of plays in the energy complex last week, a little bit different. You mentioned nat gas. I just felt like nat gas was kind of low. And I thought, wouldn't it be nice to be long a spread in nat gas for a change as opposed to selling vol? And I feel like the vol is kind of low. I mean, in the 40s, that's kind of low for nat gas, let alone the IV rank. So I bought a call spread last week, and so far so good, working well.
Nice.
Similar deal with some of the ags, corn and wheat, and did some calendar spread in both of these. And again, like just looking, I wanted to look back at past times, and where other situations that we've seen where these things really kind of start to get bid, and around sort of global strife situations, we definitely see it. And I think that's what a lot of these humps that we see as well. So I was like, you know what? That was actually part of the reason why I'm stuck in this. I'm not stuck in it. I mean, I could take it off, but I believe that the short call spread is the right way in oil. But I'm like, let me try to get on a couple of other things that possibly work if this situation sustains itself for a while. And so that's what caused me to put on this calendar spread in corn, calendar spread in wheat, and nat gas spread. Because I just think like at some point the whole energy complex gets bid.
Yeah, I think so. I mean, I think you could say that about commodities as an asset class. You're really seeing that. I think you're going to have supply shortages in some areas, and demand isn't going away. This is a supply story.
100%, man. All right, let's take a look at the chat, see what you guys are talking about. VIX back to 20. Woohoo. Well, not quite yet, but it's close, man.
Moving, yeah. VIX futures.
Yeah, I know, right? That was the thing. Like, even last week, I mean, regular VIX faded really hard, went below 17 at one point. I don't think it cracked 16, but these futures were still in the 20s. I thought that was interesting. I'm like, I don't think this thing is over yet.
Yeah, we had a few days, too, where you were spot up, vol up as well. And I mean, you've come off quite a bit, but man, we had such a massive move in volatility that structurally it still looks like you could be chopping a little, north of 20.
Right?
Easy.
It does feel like that.
And it feels like the market's a bit one-sided, at least short term.
Yeah, it does feel like that. SKK, what is this crap? What is this name? Somebody put it in the chat. I don't even know what this is. And it doesn't have options. We don't pay attention. Not at all. Not at all.
I don't know what that is.
Can you please suggest an earnings trade for Palantir and Shop? Diagonal call spread or calendar spread? Thanks. Palantir does have earnings coming up. Is that tonight after the close? Oh, it is tonight after the close. What else has earnings after tonight? Let's see here. We'll get it before they open. This computer is a little bit slow today. Sure, accept the cookies. Duolingo. The wife has been on Duolingo a lot recently.
What language is she learning?
Spanish.
Okay.
Yeah.
Just for fun? You guys have a trip coming up or anything?
Actually, we should.
Okay.
Trip. I don't know. That's the funny thing about it. I'm taking all these days off. I'm not going anywhere. I don't have any plans.
Right. It's like, man, I wish I would have planned this better.
Whatever.
I'm the same way.
I don't know. Palantir. I already have a position here. I've had it on for a while. This Super Bowl trade. So hopefully it keeps going up. I don't know what to think about Palantir on earnings. I mean, would you consider it Palantir a software name?
Yeah.
Yeah?
Yeah, absolutely.
I mean, it certainly has been trading like one.
Yeah, that's how I would think about it. Software / AI.
That being the case, the thing I like about earnings in most cycles is that a lot of names end up doing similar things. We saw that more recently with some of these semi names. Texan went up big on earnings, and then not long after that, this big move, then not long after that, Intel went up big on earnings, and Qualcomm, similar deal. These are pretty much all within a couple of days of each other. I still tend to believe that AMD is going to do a similar thing. I guess we'll see. I mean, they're all similar, but we'll see. So that said, I wonder with Palantir, is it going to trade like Microsoft did on earnings? That wasn't exactly so good, which makes me not feel so great about my position. But it is in June. And again, Microsoft did bounce back the next day, so I'm not going to change anything. That said, earnings plays, I mean, I think a lot of people who watch the network and watch me and watch shows know that I do love a good calendar spread. You choose your own involvement as far as what direction you want to go. Expected move here is 13. I don't know, let's call it 145, and this thing gets to 160. I mean, again, it's always what you see around the expected move. So if I were playing, I'd still play the upside. I just like to continue to do the same thing that makes sense. I don't like to try and pick directions. Like, as far as like, oh, I think this one is going to go down and this one's going to go up. I actually end up playing, if I do play earnings, I end up playing most of them to the upside.
Yeah.
And I feel like an upside beat ends up being the one that like works out really well. But again, if you think it's going to go down, you choose whatever you want. That's what I like. I don't know. What do you have a go-to earnings play? Are you a seller of earnings? Are you a buyer of earnings? How do you play them?
I'm with you, Jamal. I'm often just looking at this and kind of I lean towards the over on the total. You know,
exactly.
The teams are trying to win the game. As you mentioned, you have seen a lot of other companies have reported pretty decent earnings here. NASDAQ earnings, I think, are up like 50% year over year. We know that in this space, obviously there's been some software shorts and there's been some volatility there as it's related to AI and kind of disruption. But Palantir has been range bound, 125, 130 has been kind of the low end here. I would probably just go with the flow and bet on, this not collapsing after earnings. No idea. Don't follow the company that closely. But for most earnings, I'll look at something that I want to be in and just go out a little bit farther and just sell a put in it most of the time. Unless I've gone through and I've done the analysis and I think there's some edge in, where is it being priced versus the past few quarters? What's different? I just don't spend a lot of time on it. Personally, I'd like to give myself a little bit more time than just the earnings announcement, though it is fun.
Yeah. I mean, you kind of like to play a name for a longer term that you actually believe in or whatever, right?
Yeah.
I get that. Yeah, for that reason, that's why I never get too crazy on earnings. Like it's always kind of risk defined and it's always something like a calendar spread or, maybe a diagonal. I mean, maybe, in here, let's see. I mean, would I do a diagonal in here? 155. I like to go like, I don't know if I would do that diagonal per se. $10 wide. I do a 15. I mean, I probably would maybe do something like this. If I didn't have on what I had, I'd probably do a diagonal. I'm not going to lie though. I do, as much as I like playing things to the upside, based on what I was saying, I mean, I think this thing may end up trading like Microsoft on earnings, and that means a downside move. I don't really.
Yeah.
And again, I know that is the opposite of talking your position, folks, because again, I'm long this thing, but I think it might be. I don't know. Again, but because I'm in June, I'm not going to change this. I'm just going to ride through it. It is what it is.
Yeah, I mean, it's kind of mid-range here. If I just throw out a couple more stats, what has it been doing? It has a 30-day realized vol of 69, 70% almost. So you can compare that to what's implied here and look at that on a per strike basis. Average true range on a daily over the last 21 days, basically the last month, is $6.72. So, pricing in, of course, more of a move, twice a move there versus what it's been doing. On that alone, maybe there's a little bit of premium in here. Typically there's premium in these earnings announcements. But aside from that, I don't really have a view. So maybe you sell premium.
Yeah. I mean, yeah. I don't like doing those, but maybe. I don't. I hate selling. I can't sell premium in earnings. I can't do it. It freaks me out. The big moves. I just play them for the big moves if there's one, and if not, risk defined, and if so, keep my thing small. But
yeah, I mean the 147 straddle is only pricing in at $14
tomorrow
for the May 8th.
Oh, the May 8th,
unless there's one in front of that. I think that's the closest one, right? Yeah. So Yeah, looking at $14 there. I don't know exactly how we calculate the expected move. I know it's a slightly different formula than just the at-the-money straddle.
Yeah, I think it was a little bit of it's kind of a VIX calculation, I think. I think they use a little bit of the wings too.
Yeah, it's weighted, I believe.
Yeah. Shopify is another one they're looking at. Shopify for earnings. This has earnings, what, tomorrow morning? Tomorrow morning, maybe? Does it? It does. Yeah, same deal. I haven't traded this name much, but again, I like. What did it do last earnings? So that was February, right? February. Oh yeah, this was it. I think probably. Ooh, that was a big move. This one. Let's see. We're gonna do a similar day. The other thing I like to do, again, when I do these calendar calls, I kind of look at expected move, but I also look at the chart. So in this case, I'd probably be playing upwards of 140, which again, this one is already, that's exactly where they expect. It's interesting how often these expected moves align with like a moving average. It's really interesting how often that happens, for real. I'm gonna do the upside in this one. 140 calendar. Those are pretty cheap, actually. 82 cents. It's not gonna give me that. I need a round number.
Yeah, this is another stock that's gone basically nowhere for the last few months.
Yeah, it really has. Wait, what did I just do? Let's see. 140. Do that in a different account. I did do that in a different account. No, that account. Yeah, no. I want to do that. Shoot. How do I fix that? Let me change this. But yeah, that's what I like to do. I mean, I just like to do those calendar spreads. I think it's pretty easy. It's not something that you have to worry about too much. It's pretty simple. What else we got? Oil in there. I was at 50% Thursday. Massive rally ran me over. Does that make Chris the Odyssey or just odd? Okay. I don't know what that means. Every day is like a vacation in the life of Ryan Jamal. No need for vacations.
Yeah, exactly.
We vacation all the time here at Tasty. That's what we do every single day. You guys are kind of quiet in the chat today. Works. Well, along with those earnings, there is what else we got? Really annoying. I don't know why the web page is just kind of.
All right, well, what do you think about GameStop looking to acquire eBay? Thoughts, Jamal?
I think that's absolutely ridiculous. I don't know a world where an $11 billion company can pay for a $55 billion company. I think that's the most ridiculous thing I've heard. It seems like they're just trying to get their name back out there even more so again. I don't, it's ridiculous.
I saw earlier, and this is on X as well, but there was a bit of an exchange on CNBC between Ryan Cohen and they're basically kind of, pressing him on the math because it doesn't add up. And he just kept saying, half cash, half stock deal. But then it came out that the position, you hear about this very large position that they've taken in eBay. GameStop has. It's generally a pretty large derivatives position. It's not in the equity itself. So that is interesting. I don't know. Don't know what to think about some of this stuff. I mean, he alluded to, well, we can basically dilute the shareholders. But I don't know if that's going to make, the value of the stock go up so that you can use that stock for that acquisition.
Yeah, it makes zero sense to me. I mean, how, what? And the fact that the stock is even up today on that news, like what? I don't know. Ryan, it doesn't make sense to me. All I know is that there's no such thing as a tiny person eating a giant. That doesn't it's impossible.
No.
Physically impossible. How is this company that's $11 billion going to buy a $55 billion company? It doesn't even make any sense.
Well, even when they said they've got a $20 billion loan from TD Bank, okay, it still doesn't get us there.
I know, right? It's foolish. So I don't know. Yeah, I saw the news. I put a little something out on Twitter like, okay, how's that going to make it make sense? It doesn't make sense to me. I don't get it. Speaking of companies, PayPal, I did hear recently that PayPal is going to spin off. Did I hear this right? They're going to spin off Venmo. I don't know if you heard this.
Haven't heard that. No.
Yeah, I thought they were going to spin off into a standalone business. I have heard that, I think. This one has earnings as well, but I would say the only one that's probably interesting to me in the next couple of days is Palantir, obviously, as I have on a position, in AMD as well. AMD getting beat up a little bit today ahead of its earnings, I think, are tomorrow night. And this is one that I have calendar spreads in further upside. So, again, just trying to make a play on what I've seen happen recently in the space. We'll see if it lives up to it. But, yeah, other than that, man, you talk about positions. I got a bunch on. Intel is one.
Yeah, what are you doing?
I'm short vol in Intel. Again, after the big move, I feel like I've talked about this plenty of times. After you have a huge move, vol has sort of exploded a little bit. Sometimes these are good moments to sell vol. If it calms down, it has calmed down the last couple of days. If this AMD thing takes on the way I expect, it might not stay calm, but that's cool. But nevertheless, in the meantime, I'm trying to sell some vol in here. So that's one of my positions I put on last week. Like I said, this nat gas call spread, I put that in June, the June expiration. And it's working. It's working so far. Last 3 days, nat gas has made a move to the upside. It actually is funny because, let me see. Last week, Tuesday, the 28th, I was doing Futures Power Hour with Chris. And we were talking about nat gas, and we were just talking about how low it was. I was like, yeah, you know what? And again, looking at not the end contract so much, but looking at the nearer term contract, which was in the twos and change at the time, I'm like, this is kind of cheap. And the vol is not nearly as high as it normally is. Maybe it's worth doing a call spread in here. And I forgot about it a couple of days. And then by Thursday, it was making a move. And I was like, I'm getting in. I got to get in. It was making this move on Thursday. And so last couple of days, it's been on the up. I'm loving that. We'll see what happens here. I tell you about the corn position and the wheat position. Put those on. The areas that are not so great, like I said, this which essentially is only the call spread now in crude oil. I'm gonna have to move this. I think. Give myself some more time. Especially since I'm going to be moving around over the next couple of days and not necessarily looking at markets for hours on end. I think I need to move this out. Where can I get a similar credit? We go out to May. Let's see if we go out to this June expiration. Is this where the volume is? And that's always the interesting thing, too, for those moving positions.
Yeah.
You want to find where the volume is. It is not in that expiration. I think it's this June 16th. There we go. And this is trading 101. That's trading 105. Technically, I have to go further downside. Technically. I don't think I can do the same strikes. Yeah, it's a debit.
Can you boom your put side up at all?
No, not at all. Yeah. I used to do that. I don't really do that much. Especially in these situations where something's kind of going parabolic, because then it fades hard.
Yeah.
Especially on this, and then extrinsic value kicks in, and then before you know it, like, I'll move it up. You know what I've learned to do? I actually kind of got this from Mikey, and it makes sense. Like, I will move it up if, let's just say I was short this right here, and this was in my initial position, right? And I will move it up if it makes sense pop-wise. So if I move it up and say initially I had like a 60% pop on the position, and then I move that put spread down. I'm sorry, move that put spread up, and my pop is still like say 50%, then I'll keep it. But if I get something like this, it's like 31% pop, I'm like, nah, I'm not gonna do it. So that's kind of one of the things I've done more nowadays. I don't know, man. I just feel like a lot of times where I've moved up the iron condor, moved up the put side or moved up one of the sides after a big move, and then it just fades right back down. And if I had just left it on, you know what I mean? Like, especially depending on how many days you have left, if I had just left it on, it would have just been fine.
Oh, and absolutely. I mean, and especially in something like this where we were up $5, down $5. I mean, it's not like it's just been straight up. This has been as choppy as you can get.
Yeah. So I know we've done a lot. There's a lot of research that says moving it up works out well, but I don't know. I don't feel like it works out well for me. So
yeah, I think it's dependent on the instrument you're trading, the asset, the underlying, and just your feel, Sometimes that's all it is.
Yeah, I mean, I couldn't agree more. Jeez.
Oil vol is ticking higher here
It is,
by
I know.
about 7%.
No, still a debit. I don't really want to go down that far. Jeez. This is going to be so problematic. This is the annoying part that we don't always talk about when something is moving up, particularly an instrument like oil where skews to the upside and you got to roll. But it's hard. I'm gonna have to figure this out. Maybe not during a live show, but anyway. Ryan mentioned Berk B, and I like put verticals in there. 45 DTE. Make a wish Berk A position. There you go. Yeah, Berk B. I mean, I remember I haven't traded this thing in years, but I used to every so often. Does this have a split?
It might. I don't know.
Right.
I've just been buying it recently. Possible.
Maybe not. I don't remember what it used to trade.
I've been buying shares in there and then just doing kind of synthetic, I guess, with synthetic stock positions, but with spreads. I mean, just selling a put spread, buy a call spread sort of thing. It is a $500 stock. So
yeah, Berk B is still a big deal. Still a big deal. I'm sure the 89 puts in MCL. Nice, Brandon. Nice. Yeah, MCL.
Yeah, I would feel.
Working out.
I mean, I would feel pretty comfortable with that. What do I know? But let's just say you got a deal today and the straight is wide open. You're gonna have some short-term vol, but structurally, I don't see oil prices collapsing to the low 80s anytime soon.
I know, right? Doesn't seem like it. And again, now all of a sudden, 100 is proving to be sticky.
Yeah. Well, all right, let's just say the ships get to go through. They have to come back. It takes a lot of time to sail around the world, I just don't think that this is an immediate, it's just not all that binary, in my opinion, as it relates to the crude oil price, where you get some good news. Sure, it might take some of the vol out of this, and directionally you might see a little bit of a pullback short term, but I don't think it structurally resets anything or changes the fact that we've gone on for a month without much of this supply. You're still going to see some bid as well as we refill the strategic petroleum reserves.
Yeah, man. I mean, they made it seem like this thing was going to be over quick, but you just
2 weeks. It's always just 2 weeks,
right? But you just knew it was not going to be like that. There was no way that de-escalation was going to be that quick. It just seems so. And again, bonds have borne the brunt of it. I don't have any bonds position. I really don't know how to. I've given up on trading bonds for this exact reason. But I mean, this is a big move in ZB to the downside. Saying a lot here.
When you have this type of vol, I think there's more opportunity and really. Well, there's certainly more products that create that opportunity for retail investors nowadays where you're going to have massive moves, as you've just mentioned, on the long end of the curve. But you can trade the 10-year yield with a very small contract. You can do 10Y, and that gives you a way to express a view directly on the yield. Same thing with oil, right? If you want to sell oil vol, you can do that through MCL options. They're not extremely liquid, but you can delta hedge with the underlying contract. Makes it fun, in my opinion. But yeah, there's so many different ways to trade now. Even you go in with the 1 ounce gold futures that we didn't have before.
Yeah, was that /10Z?
Yeah. So you can. layer into a position or build a position with these products that have become definitely more active with higher volumes, more recently, of course. But I think you want to buy any pullback in yields. If you're going to have a lot more volatility, of course, in the 30-year, but I don't see, unless we get some sort of economic calamity, I don't see a Fed that's in any hurry to cut rates. The Fed watch is, I don't think, pricing in any rate cut for the rest of the year as of right now. So I think, again, you're structurally in this environment where you look at what is moving. Energy, commodities to the upside, equities to the upside for now. Earnings were fantastic, have been pretty good. And you have interest rates moving higher. All at the same time, I think you just continue to ride that train.
Yeah, I think you're right, man. That's what it's looking like now. At this point, it seems as oil is a runaway train. That's what it's looking like. And I know that's what gives me some pause about my position. I might have to just adjust altogether. Again, I'm not even down that much in the grand scheme of things. It could be worse, down $500 right now, but I could be, in that position. It could easily be, I think max loss is like $3,000. So I'm lucky for the time being. I might just, it might be one of those times where I just fold it, call it, because I don't necessarily know if I want to be selling upside in this move. Kind of sucks. Same thing with this gold. This thing just can't. This is an iron condor. It was an iron condor. Now it's just a short put side. But this 4,500 level is proving to be a magnet. And it's another one where I'm going to have to sort of think about these two, how I want to manage them. But Ryan, I have the crypto wallet and have Bitcoin not showing up that shows up elsewhere. Something I can email about? Some kind of sync thing?
Yeah, just shoot me or shoot us an email, support@tastycrypto.com. We'll take a look. That would be my guess in terms of how the Bitcoin network handles addresses. We're not pulling in the new address for the remaining balance of, after the initial transaction when something was transferred. So happy to take a look at that. But of course, if it's showing up elsewhere, it's obviously on chain, which is good. But happy to take a look at that on the wallet side.
There you go. A couple of minutes left in the show here. We don't have any major catalysts this week, do we? We had, last week was like the Super Bowl.
Last week was pretty busy. GDP, first look there, that came in pretty strong. Housing data has been relatively strong. I don't know, Jamal.
I don't think we do.
Let's see.
I don't think we do. Which is a good week for me to not necessarily be in front of the machine the whole time, actually.
I've still got last week up. This week, here we go. Let's see here. ISM services PMI, it's been accelerating. It's been holding above 50. The prior number was 54. So if you continue to see that, it again supports the growth up, inflation up narrative. Other than that, you do have non-farm payrolls on Friday.
Non-farm payrolls.
Which...
we do. Jeez.
Which is,
about that.
I think it's a guess because, we went through that period where the government was shut down for some time. You look at the last month and I think it was quite a ways away from what was expected. This month, consensus is for, looks like 60,000 jobs added. Last month was 178,000. I believe that the view was that it was supposed to be flat to weak.
100 points expected between now and the end of the week. You're right. I feel like, was it 2 months ago? It was way off. It was like, I think it was negative job where I thought. I don't remember. Last month was better, was fine, almost in line. Like you said.
Yeah, February we missed by 133,000. This is volatile. We were up 100 at 78,000. In January we were 160. In December we were down 17.
Okay.
It does seem like, from what I've read at least, that you aren't seeing a lot of firing, but you're not seeing a lot of hiring either. It's kind of at a standstill.
It's the low fire, low hire economy is what we're in right now.
I think that's, I don't know how to measure this at the current moment, but I think that's AI driven.
I think maybe in some ways.
Yeah.
Maybe in some ways. This is exactly why we're doing the recent thing that we're doing, Ryan, where I battle AI for.
Tell me more about this.
Yeah. So just a concept that came up with and we've been doing. We've only done one video. Actually, I'm actually about to record a couple later today since I'm going to be out. But the first one was basically chat versus chat GPT. And it's you submit a question to it. I mean, it's kind of in the vein of what we do here when we're looking at the chat or when people email us, right? And just kind of like, what would be your idea of how to get long Microsoft? And literally like that. And so it's funny because in the comments, first of all, in the comments, I don't feel like the people are rooting for me, okay? I mean, it's like they're saying, like, well, you could do a better prompt and all this stuff. Like, really? Because this is exactly the type of questions that you guys email us when you ask us questions. They're pretty vague, and we have to sort of research our own.
Interpret them.
Exactly. And so that's exactly what this is based off of.
That's fun.
Yeah. So now we're gonna go up against I think Claude today, and then maybe Grok another day. And so yeah, be on the lookout for those. But
are you up against the pro version?
Nah, it's just
extended thinking.
It's just a regular version. Nah, it's just a regular version. But it stemmed from, I was curious how it's funny. You asked the question, these job losses, are they stemmed from AI? And I was curious how close this type of thing was to kind of doing what we do on a regular basis, right? I feel like we put a little bit more thought into some of our ideas. This thing is scrubbing the internet looking for all of its answers. We're kind of doing it based off of what we know, and we're giving sort of our take on things. And so that's kind of where it came from.
Awesome.
Yeah.
Well, I'm going to tune into that.
Thanks, man. Thanks.
Yeah.
Folks, that's our time here on a Monday. If you want to reach out to us, you can at any given time on Twitter. At Jamal Chandler is me. Ryan's at Ryan Fred Grace, and Mikey's at Trader Mikey B. And of course, give Tasty Crypto a follow. We got plenty more content coming up here on Tasty Live. I think, Errol and Gus are next. Check that out. Thanks for watching the show, man. We'll see you real soon. Peace.
I'm just going to wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What is going on, everybody, and welcome back to Risk and Reward. Happy Monday. It is a new week. It is not quite a new market, pretty much a continuation of the action we had going on into the end of last week. I'm joined, as always, by my wonderful co-host, Errol Coleman. Errol, how are you feeling? What's going on?
Feeling good, feeling great. Very well put. New week, but kind of same story from last week so far. Right off the bat, I did peep. We're not wearing the same quarter zip right now, but we're wearing the same undershirt.
Yes.
Yeah, so
it's not cold enough today to justify the quarter zip for me. So,
and I almost barely did it with a quarter zip on. I just couldn't find a shirt that I wanted to wear that rocked with this weather, so that's why I had to throw this on top. This one shrunk a little bit. So.
Yeah, to break the fourth wall a little bit, I often will wear this one or the Tasty Trade shirt on Mondays, just because I wake up on Monday morning and I'm just like, oh, and I'm like, what's the easiest shirt I can grab right now? And I know that these always work. So. Big proponent, but got our Monday red on going on today. What's going on, everybody in chat? Brandon, big deal. Ranch, good to see y'all.
What's going on, guys?
Brett. But yeah, we have a pretty much just a continuation of last week's market. We're trading down just a little bit to start the day here, about 0.5% on SPY, SPX, NASDAQ down just a little bit more than that. But not really like what you would consider to be a down day or a break from the trend or anything. It seems to just be a little bit of a breathing day here as we are at these all-time highs. I do have an interesting situation going on with my USO position here. Oil continues to work higher. USO up a little over 4% today. Just dropped back under close to 4%. But you'll notice my longest dated short oil here, this long 50-put in the March 19th, 2027 expiration cycle, 319 DTE, is actually green on the day, which I find to be interesting. This is because the spread has widened, but this ask creeping up on these leaps this far out and this far out of the money indicates to me that the options market here is at least a little bit beginning to, price in this war maybe being over and what happens, afterward. And it seems to be just gaining a little bit of confidence that, by March of 2027, we might be back down at close to not necessarily the 50 level, but that a drop may be imminent with that ask creeping up a little bit. So it's an interesting situation there. Always interesting when something moves this aggressively against your position, but you still find yourself green. These questions are important to work through in times like those. So still a long way off. Still not a good position or something that I'm exactly thrilled to be holding as oil works back towards all-time highs in the present. But with so much time left on these contracts and that ask creeping up a little bit, it does make me feel a little bit more confident that we might get the drop in oil here sometime in the next 180 days.
Yeah. No, I mean, I'm hoping it's really soon as well. I think it's one of those things. It's not really a matter of if. It feels like it's more a matter of when. So, I mean, who knows? Maybe it's tomorrow. Maybe it's tonight, overnight. I don't know. But it feels like it's a similar story with even the indices, because I think whenever those kind of crack a little bit, then oil should, get back down to where it quote unquote should be at.
Yeah. Oil is just like the next step in the progression. It's like we would not only need the conflict to end and, there to be full on and permanent ceasefires in place. And, that part is fully over, but then oil won't move until the negotiations after that have finished going down. And we feel like we're actually in a stable spot. And the strait is fully accessible and all that good stuff. So, just an interesting spot, and wanted to make note of that here at the beginning, because it is sort of strange.
Following suit, Micron, not to jump in front, but just reminding me of oil a little bit is Micron. These stocks are absolutely insane. I know we gapped up overnight or over the weekend and still rallying towards the highs. So very, very similar boat there.
Yeah. Silver is down. That sucks. Otherwise, having a great day. Hi, Gus. Where is Errol? Is there a joke I'm missing? Oh, there he is. He finally spoke. Yeah. My post-earnings trade in Hood worked nicely. Sold a put at 375, bought it back at 187. Good work. That's, pretty much exactly 50% there. Very nice trade. Just reached for whatever I was wearing yesterday. Probably clean enough. That theory only works for a few days in a row. What's going on, everybody else? Happy to see everybody. And that's really kind of it for the excitement in my portfolio today. I still have this short AMD on. This one is going to come right down to the wire here. I'm 4 DTE. I'm short the 342.5, 340 call spread. Needed under 340 ideally to find max profit there. We're pretty much at break even right now. This one looked like it was going to be dead in the water, but then we've caught this big down move today, which this is sort of exactly what I was looking for and trying to time up with this AMD Intel situation. I believe I still have those Intel shorts on as well here somewhere. I guess they're not faring as well today. Maybe not. Maybe I had to rotate out of those last week. But yeah, still bag holding this AMD. We did get the big red candle that I was anticipating coming off these highs, and this is exactly what I was trying to time up. Just we get a little overextended towards these highs, and it just has to breathe a little bit before it can reach for higher highs. So the move that I expected is coming through, but because I put 2 more legs into the upside before it came through, we're not exactly in the range that I was shooting for here now. So going to need one more similar day, at least a 1% down day out of AMD to validate these. But this is definitely what I'm monitoring the closest is these AMD shorts. Very dangerous time to be short anything memory or chips or anything in the AI ecosystem.
100%. I seen silver's being talked about in the chat a little bit. Silver's down a little bit on the day. Metals have been quiet. I know if we rally a little bit more, some short deltas might be attractive on some of the metals, but for the most part, it's going to be a patient game for silver. I know you had a little bit positioning in there, which is really nice, a little bit of short delta. But no, if we get a little bit more of an aggressive pop in silver, I think it'll be a little bit more attractive. Feels like we're sitting in the middle of that range from the highs and lows before it went on that rip. So I'll be patient on that end, but maybe some premium on another position for the metals might be a little bit more conducive rather than holding some of these contracts, because I do know silver is one of the largest contracts that you can trade for your futures products, so that's something to keep in mind. But at the same time, feels like we're kind of teetering with the all-time highs on the indices and oil and things like that. So metal's been on the back burner, but if we get a pop out of nowhere, I'll definitely be sure to get some short delta on in there as well.
Yeah, absolutely, and yeah, it's a good reminder to go ahead and dump half of this silver position. There's maybe $10 per contract left to claim here.
Yeah,
I am 77.75 on SLV, so plenty of room to the upside, but I don't see any reason to continue to hold both of those for the next 11 days and give myself any sort of risk at all. Might as well go ahead and collect on half of that position and let the other side ride, even though it would take a almost 15% move to the upside to beat me at this point. In times like these, you can never be sure that will not happen. So gonna go ahead and claim half my profits there, and I'll let these other this other one eat until expiration, which should go through swimmingly. But it gets to be a value of your time equation, because believe me, I'm one of the biggest proponents of letting things rock until expiration and squeezing the last little bit of juice out of them where it makes sense. But in that particular case, it's like I have 2 of them, and is it worth it to keep this capital, even risk aside, the situation aside, risk aside, is it worth it to keep this capital tied up for another 11 days to make $10 more? No, probably not. Even if it was a zero risk position. Say I just come to you and I say, hey, I have a CD, and if you give me $400 right now, zero risk, I will give you $10 11 days from right now. Are you doing that? I don't know. Maybe in volume, if it was a true zero risk situation, but there is, obviously some risk involved with these. So always got to be thinking about the value of your time with holding some of these positions as well.
No, that's a good point.
Miniature soapbox there. Waiting till tomorrow to try something similar on Palantir. Similar post-earnings vibe. Thanks, guys. Of course, Ranch. And yes, Palantir reporting earnings tomorrow. This should be an interesting one. Palantir been real choppy. It's not what we've come to expect the whole time we were on this crazy run up and trading at 600 forward PE ratios. And Gus is on here shaking his fist every single day saying, why is Palantir so expensive? It doesn't make any sense. We've come back down a little bit to more rational levels, and Palantir has begun to enter this breathing phase, letting valuation catch up with share price a little bit, revenue catch up with valuation a little bit. But yeah, it's in a really interesting spot ahead of earnings here. Just a lot of consolidation. War sentiment seems to be dwindling. It'll be interesting. Obviously, they're going to, as they always do, issue some very positive guidance, I'm sure. But it'll be whether or not the market can buy into that.
Yeah, and I mean, we'll see what we get there. It's been a little bit choppy. I know what Marco Burry was talking about at the top a little bit. He's been a little quiet recently, right? I don't think he hasn't been too loud right now across markets.
I don't think so.
He's been a little quiet. But yeah, nonetheless, especially with the metals, PLTR, it's nice to have some products that are a little bit more not as correlated with the overall market, or not being as correlated with things like oil or the indices and things like that. So on that end, we'll keep an eye on some of those products.
Yeah, Burry's a weird one because he's not a hedge fund. He doesn't have to disclose anything. He just discloses things as he wants.
That's why I'm curious, like why he chooses to disclose certain things. Like, is it like an ego play a little bit? Like, is it like a play for at least I have my name on this? Like I don't know what it is. I know 2008 he really grew a lot of, what would you call it, fame or notoriety for those trades. So I don't know if he's putting those things out there for legend plays. I don't know what the point is for him.
I think it's probably to try to be a self-fulfilling prophecy a little bit. Like
maybe so.
Anything like
that's a good point. I like that.
He understands that there is this allure that it's like, oh,
he can add to the sentiment a little bit.
And even though it really might not be true, but the vibe is definitely, Michael Burry, that guy knows shorts. He knows how to spot a short opportunity. So
feels like the market runs on vibes sometimes. So yes. I mean, to your point, right?
So perhaps I think that he thinks that by putting it into the world, perhaps he can influence the sentiment and make these things come true a little bit more.
Yeah.
Because he was short all the big AI names as well, like Nvidia and stuff, and maybe he was able to make a little bit of money in this, drawdown period here. But the comp he made for Nvidia was Cisco, which Cisco fell 90% in 2001. So definitely have not gotten that sort of move out of Nvidia at this time. It's actually a great return on capital, guys. I mean, I suppose it is, yes. In the hypothetical that I drew, where it is zero risk, where it's a CD or a bond or something, yes, that would be really good return, and you could lever that up and roll those. But that is just that, a hypothetical. I am not in a perfectly zero risk environment with this silver position right now. Yes, trying to vibe influence the market. Well put.
Somebody vibe influence these indices.
For real. I guess that's kind of just what's been happening, actually.
I was going to say,
ironically, it is sort of just vibing.
As that left my lips, I was like, that's pretty much what has been happening, especially over the last couple of weeks. I know over 4,500 points I think we put in the last 30 days. Absolutely nuts. We'll take it.
Incredible. But that's going to be all the action for me. I haven't made any moves on anything new this morning. Positions that I put on late last week are all break even to slightly green. Already alluded to AMD. I put on Microsoft as well and added more to Meta, which is up here. So yeah, not a whole lot changing with either of these. Microsoft slightly green since I put it on, slightly red on the day. Meta vice versa, slightly green on the day, slightly red since I put it on. Although the newest one that I added was this one, which yes is slightly red since I put it on. So this Meta position, this is getting out of hand. I gotta do some management. I'm waiting for these to get closer to 30 DTE before I decide exactly what I want to do with those. But it'll probably be cutting these two and letting these two run. We'll see. But that's where I'm at. What you been doing today?
No, we can jump over here to the TradingView platform. I see Nice Boy saying it, quoting Alex Karp here, it's necessary to scare enemies and on occasion kill them. I know that was one of the headlines that went pretty viral.
Before I read...
Alex Karp is he definitely is a guy that has some very aggressive statements that definitely is very off-putting. And in a way, I think he's a very off-putting person, off-putting personality, and it's almost like he definitely knows how to rage bait for sure.
Well, yeah, he's like a villain in a Call of Duty campaign.
And I think it almost like he he plays right into it. It's almost like he loves the character that he's playing. I mean, you just the energy that I don't know. He's one of the most most interesting. I'll say he's one of the most interesting CEOs. That's very, very vocal about things that you might think in your mind. He just says everything out loud. I can't believe he says some of the things that he says.
Yeah. Yeah, very niche reference. But I don't know if it was Advanced Warfare. I don't remember exactly which Call of Duty game it was, but whatever Call of Duty game where Kevin Spacey is the antagonist in the campaign, that's what Alex Karp reminds me of. Is that guy, that character? I don't remember. Somebody will know. But yes, also before I read the attribution on that quote, I fully believed you were quoting Sun Tzu, Art of War.
Oh yeah,
that was what I expected to follow that.
Maybe that's where he got it from.
Yeah, maybe it is. That's a Sun Tzu thing to say. It is necessary to scare enemies and on occasion kill them.
Yeah,
weird guy. Yes.
No, very interesting, and not to go back into people's backgrounds, but people's backgrounds do tell a lot about why they are the way that they are. For example, Donald Trump. I think when you go back to certain histories, you can see, why do some people take more of an aggressive approach and stance towards certain people when they're at a certain level? And I think Alex Karp, based off of some of the things that he said, I think he got bullied pretty much all his life. And it makes a little bit more sense when you see how they take such an aggressive posture towards certain things that can feel very rage baity at the same time, because it's almost like a level of revenge, like he almost comes with a level of vengeance, which is interesting. It's like very video game like. Never seen a character like Alex Karp though. Never seen one like him in real life.
It's true. Yeah, I think you get into that with a lot of these tech moguls as well. Like Jeff Bezos jumping on gear and getting jacked all of a sudden, and Mark Zuckerberg.
It seemed like he was bored with life, though, right? He's like, well, I'm one of the richest people on the planet. I guess let me work on my health.
Yeah.
He's like, I guess I could work on my health.
Yeah, now. Zuckerberg does all the jujitsu stuff. Like there definitely is an inferiority complex that I think is almost required to attain to keep going and keep gambling and try to attain these astronomical levels of wealth.
Yeah.
Not just, because like I've said it 100 times, like everyone, like if I'm Elon Musk, I retired in 2003 when I sold PayPal and I'm done.
Well, would you say
I would never have jumped back in and made all these gambles? I mean, it's what makes these people so great.
That's a good. Well, for example, Elon Musk. Do you think it's rooted in insecurity, an inferiority complex with somebody like him that could be the first trillionaire? It's like.
Yeah, inferiority complex might not be the correct vernacular, but I do think insecurity could be, because I feel that if you look at a lot of these tech billionaires, it is either the Alex Karp camp, people that I think probably got bullied a little bit growing up, or people who had incredibly successful parents before them, which is the case with Elon Musk, which is the case with Donald Trump. And then there's this pressure to take that to the next level. And it's like you're always living in somebody's shadow, and that you can create insecurities that way as well.
That's a good point.
So yeah, I don't know. That's my brief psychoanalyzation of the modern billionaire, I guess.
No, interesting. Very interesting takes.
Australian study once claimed CEOs and execs have similar rates of psychopathy as prisoners. I can see it. LOL. Yeah, I believe that to be true. I forgot Spacey was in COD. It was Advanced Warfare. Thank you, Brandon. Yes, I had it.
There we go. Advanced Warfare. That was the one where you could kind of jump on the walls, fly a little bit as we.
Yeah, that was like the first jetpack game.
I hated it at first, then it grew on me, and then post era of that video game, I'm like, I don't really like it. It's not really COD, but I think Titanfall really popped off around that era.
It did.
And they did super well running on the walls, those kind of things. I think Advanced Warfare capitalized on it a little bit.
Yeah,
Titanfall fell completely.
Advanced Warfare was probably my least favorite COD jetpack game.
Agreed.
I like the ones with the smoother jetpacking. Advanced Warfare was like super technical because it was like double jumps and stuff.
I would double down on that.
But that's our video game side.
Lastly, Modern Warfare 2 is the best Call of Duty of all time. What is yours, guys?
I think Black Ops 1.
Oh, that's valid though. Yeah. I'm not even mad at that. It's completely valid.
They're one game apart. I think there'd be some MW3 bulls in the world as well.
I feel like we'd get a lot of Black Ops 2, but I would say BO1 is over MW2. But anyways, with that being said, we took a couple stabs this morning. We were looking to get very short biased. A little bit early entries in the pre-market. Took a stab with just one contract, then we covered both over here. But once we got towards our value area high, this is when our conviction to the downside really increased a little bit more, because we were willing to take the short here, but we knew it could be a little bit of an early entry before we actually get any type of market structure actually shifting to the downside. So before we ever see the market actually putting in lower lows and lower highs, you just want to be mindful of that and be careful for that, because it can be so easy to start getting long or start getting short before the market structure, aka the price of the market, even agrees with you to any extent. So that's kind of what we had top of mind. And then we started to trade around this value area high. our conviction to the short side started to increase a little bit more. So we shorted 3 contracts 2 times in a row near this value area high. We started to grind to the highs. We started to grind to the highs, chopped both of those positions, just called it a day. And then we sold off all the way down to the lows, taking out this pre-market low, taking out Sunday lows, and then getting pretty near. We got pretty near some of the trading activity from last week, which was last Friday. So now we're kind of sitting in a period where how is price going to respond whenever we can trade back around this level of value? Because if we zoom out a little bit here too and get a better idea of what's going on, we can see why this level is an area of interest for a lot of traders during this week. If we zoom out over here, we just take our fixed range volume profile. Check out the last YouTube video if you want to check out how to plot this on your own charts. But if we take this fixed range volume profile, we can see most of the trading activity occurred within this level of value here. That value area, again, just letting us know about 70% of the trading activity has occurred within this area, letting us know this is where buyers and sellers are kind of finding fair value for this specific price range. So now that we're kind of starting to trade out of it, prices seem to be getting a little bit cheaper, but that's why we've seen a little bit more directional price movement. Whenever we get outside of this high volume node here, you can see price really start to ramp up and those directional moves really start to show itself. So whenever we're trading within a high volume node or within a level of value, it's not a surprise to us that we get choppy behavior or a range-bound market or a rotational market, however you want to describe it, right? And then some of the shorts that we were looking for was near these highs, right, on the volume profile. Now, having the correct directional bias isn't good enough in trading. You can't just this is why the hindsight charts always look so great on social media and on Twitter, because you can tell anybody, look at these levels and you're going to get a response off of them and you can look good 10 times out of 10. But it always comes down to the execution, knowing how to know when the trade is not playing out, knowing when to flip bias, and just knowing where to clip the trade. So with that being said, a lot of choppy markets within this high volume node area, then getting a little bit more smoother markets, a little bit more directional markets now that we've broken out of it. So it'll be interesting to see how price responds here once again. And if we break back inside here, I'll personally be hands off. Maybe we're creeping back towards another all-time high, which is just about 27,968. So, we're within 200 points from the all-time high. So I don't even think we've really even seen any type of real, if you want to put it that way, real pullback yet in the markets. But that's what we got there. Some MCL and Q contract earlier, 98.103, $5 wide. I like it. Have M and Q now making all the money. I gotcha.
Long M and Q to 27,900. Yeah, that seems to be pretty much precisely the top end of that value area.
Yeah.
Oh yeah, nice boys, but on the commodities. Corn, wheat, soy, cattle, lagging today. I'll respond to this too. Kind of the stock market hedge. Interesting.
Yeah, so we'll see what we get.
Never dabbled in the commodities myself, but I saw you saying the other day that you have been finding some success there. Nice boy, that's interesting.
You take a look at NASDAQ at all ever?
Me?
Yeah.
Only in the context of like what's going on in the broader market, but I seldom trade it.
Valid.
But yes, it's always a glance that I have in my first morning sit down as I try to get my bearings. Check NASDAQ. For sure.
Awesome. We'll see how oil is doing. I know we perked up on oil a little bit as NASDAQ was falling back off. So another pretty large contract to trade.
Yeah, oil. This is just in such a difficult spot. I'll tell you what's in a difficult spot. Oh, we're searching.
We are searching a little bit.
This looks like lines on a stock chart. I'm saying to you right there. Yeah, I'll tell you what's insane is SanDisk. I don't understand. We just keep going higher. It's just up another 5% today. We're over 1,200 now. Tested 13 this morning. I don't know what to make of this run in memory stocks. Because on one hand, there's no such thing as infinite growth. Like it has to slow sometime. But on the other hand, the more and more that I look into it, it just is substantiated. They're just, the demand and prices are both just going sky high and seem to only be continuing on that trajectory for the foreseeable future. So, what happens? What could possibly end this run in the SanDisks and Microns of the world? I don't even know.
Yeah, I don't know. Micron has been going crazy. Brandon is long 27,900 NASDAQ right now. I mean, I think right now I'd be leaning a little bit long more than short. I mean, I don't have a position on right now. I do have some out of the money call spreads on QQQ for a swing position to the downside, but very difficult market to manage, especially whenever it comes down to the short deltas. I think if we keep making higher highs, I think the game plan is going to be just manage those deltas, maybe trim some of the deltas, not put any extra short deltas onto the downside, but just manage for the most part while we sit in this limbo phase.
Money Mike always coming through with the companies I haven't heard of before. Long 17.5 call for June on Wi-Fi. That is, I just looked at it. White Fiber Incorporated. Never heard of this company before, but does seem to be a good bull spot purely from a glance at the charts.
SPX is frozen.
A great day scalping 0 DTE. Good. I'm getting FOMO there in SanDisk. I know. I'm tempted, honestly, in SanDisk to just right now at the freaking top just buy a call because it's like, I mean, they're so expensive. I could never feasibly do that. But like, it's just insane. Like if these calls were any sort of reasonably priced and not $8,000 notional a contract, that's the way that I would choose to attack this, is just blindly get long and wait, because it seems that there is just nothing that can stop this. After I've taken 2 stabs at trying to short it, both to zero success, literally never moved in my direction for a second. And it just keeps going higher. And it's, yeah, I mean, for real, what stops it? I just don't know. So I'm tempted to just blindly get long, but with how much capital I would have to outlay to do that, I just think it's out of the question. It's just going to kind of be a hands-off situation for me for the foreseeable future. SKK reverse split? Not familiar. SKK Holdings. Whoa.
It's a cheaper stock, huh?
Well, yeah, it's taken a ridiculous move today, though. I mean, like, yeah, 700%.
Yeah, it sounded like one of those. Haven't heard about a reverse split in a minute. I was like, got to be one of those penny stocks.
Yeah.
Got to be.
I guess it just is the reverse split causing the move.
Yeah.
Is this charting weird?
Yeah. Yeah, that reverse split. They'll have on like FinViz, you'll notice sometimes there'll be a 700%, 800%, 1,000% stock up for whatever reason. It's like 9 times out of 10 a reverse split. But for some of the shareholders that didn't know there was a reverse split, I bet they woke up very excited this morning seeing those shares trading at $14 from $1. But with that being said, we are running out of time here. We'll see what happens with the overall market. We'll be back tomorrow. We'll see how the indices pretty much finish up, but that's going to be it on my end.
All right, yeah, that's all I got on my side too. Yeah, just gonna be monitoring everything, monitoring AMD, the closest of everything for sure. And yeah, just hoping for I don't know. I guess I'm kind of hoping for a double doink, like 2 or 3 down days like this, then a return to higher highs would be my optimal situation. But we'll see how this week transpires. That's gonna be all from us today. Thanks so much everybody for watching. We dearly appreciate you taking the time out of your day. We never take it for granted. Ariel and I'll be right back here, same time, same place tomorrow, 12 o'clock noon Central Standard Time. Be sure to come hang out with us. Stay tuned for Futures Power Hour coming up next. We'll see you guys next time.
Peace.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Through it, baby, your love is too good. Touch me, hold me, love me, know me. I like how you do it. You're helping me through it, baby. Your love is too good. Baby, 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 your love is too good. I'm still coming down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it, making right off like a bandit. I know that you worked a bit harder, 'cause baby, your love.
We're back. It's still Monday, May 4th, 2026. No Star Wars pun. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio in New York. He's Thomas Westwater in Chicago. Thomas, how is your May the 4th going so far?
It's going good. Yeah, I totally forgot it was May the 4th. To watch some Star Wars or something later.
Distract us from another day of war headlines, perhaps, which is what we're being dominated by right now. It's not the usual War Monday here, though, Thomas. The usual War Monday, as it seems, over the past several weeks, really since the end of February, beginning of March, stocks weaker, oil gaps higher. And then by the end of the Monday, it's the reversal. Stocks close green, oil closes red. That's not where we found ourselves last night. Oil did, in fact, gap open lower with stocks trading higher. And now, with this bizarro Monday, Thomas, we find stocks are trading red and oil's back in the green. Markets are perhaps working through a different type of reaction mechanism to the weekend news, which we see all the buttons being pushed right before the futures market opened to try to gild the path for higher prices, and it's not exactly sticking.
Yeah, I mean, it seems like, there's a lot of stuff going on in the Strait of Hormuz. Iran is reportedly, and it looks like it's true, attacking the UAE, some boats in the Strait of Hormuz. So oil's up and stocks are down.
So much for that ceasefire. We'll see if we can make our way through Monday here where we get that green close. Doesn't look like it. Let's take a step back, though. What's the war impact as we make our way through into the second quarter now? We're a month into the second quarter, almost actually at the halfway part. And the GDP trackers are pretty good, all things considered. I know the first quarter wasn't great. We've seen deceleration, Thomas, across the board. But Atlanta Fed right now is sitting at 3.5% for the second quarter. The next update comes tomorrow. The New York Fed nowcast is sitting at a healthy, we'll call it 2.52%. Reminder, the GDP report that we saw for Q1 was 2% here. These are good numbers. And earnings are just so dang strong right now, 27% year-over-year earnings growth, Thomas. I mean, outside of the Fed not being able to hike rates in the short term, what are the problems that bulls are facing here if the economy is holding up and earnings are expanding?
I mean, yeah, earnings are really strong. I think that's the most important thing to hold up this rally right now. We're still resilient in the face of higher oil prices. Even today, it's a modest pullback, really. It's nothing crazy with oil up 4%. Earnings are really propping up this market. We still have more to come. And, oil prices, they're an input into things. But for tech companies and, really what's been carrying weight in the market, oil prices, it has to be through a second mechanism effect. The oil prices really have to hit the consumer before they hit tech margins to a great degree. It looks like we're on a good calculus. It's not to say that if oil keeps going up, it's going to derail the economy or weaken it, at least. Not derail is probably the wrong word. But I think that's the biggest overhang here. But so far, we're pretty resilient. I mean, the S&P 500 dropping 0.4%, it's like a normal day.
Doesn't feel like an abnormal day. 0.4% lower on headlines that South Korean ships are being attacked in the Strait of Hormuz, and there are missiles or drones being fired at UAE. Stocks are still kind of shrugging it off, but it gives us this bizarro world Monday, Thomas, where instead of gapping open lower and trying to trade higher over the course of the day, it's been the exact opposite, where we gap open higher and have been clawing our way to the downside. 72.28 here, which is off the lows for what it's worth. The low comes in at 71.99.5, so it's a nice little healthy bounce here, almost 30 points since the low not too long ago. But momentum is starting to pull back some at the start of this trading week. And when we take a look at volatility, for example, volatility futures back to 1990, trying to peer back into 20 here, and the VIX is a little bit higher, back with an 18 handle. That 16.99 close that we saw on Friday didn't last that long. But these aren't levels that are screaming risk. I think that you make a very valid point when we think about the scope and scale of the pullback here so far today. The defining characteristic of the S&P 500, the NASDAQ's rally in recent weeks, still hasn't been busted. Every session since March 31st, we've closed above the 1 week moving average. And today, where do we find support? Thomas, I'm leading the witness here, but it's the 5-day moving average, the 1 week moving average. It's where the NASDAQ today, we bounce back above it ahead of time. The S&P 500 takes a dip into that level and pulls back through there. That's really what I'm watching for today's session, because that has been the momentum that has helped keep this market intact over the past now 5 weeks. And so if that breaks, then we could start having conversations about maybe taking some longs off or scaling back, curbing our enthusiasm. Until then, it's just a lot of noise, with a lot of noise in the oil market.
Yeah, it's a lot of noise. Nothing is really broken. I mean, the technicals aren't broken. The earnings aren't broken. If there's a lot more volatility, maybe I would think about selling a call spread if I could get further out. But that's not even something I feel comfortable with doing right now. Even if oil moves higher in the week, stocks have shown that, they can go up now when oil goes up. So, yeah.
Stocks are 72.20 in the S&P, 41.4 IVR. The NASDAQ is holding up a little bit better, in part because we've seen some of these tech stocks, the chip stocks, soar. Depending upon where you're looking and the constituency of the various product, South Korean stocks last night. Kospi was up over 4%. The ETF here is up by 0.91 right now. And you have your semiconductors, Thomas. That's really been the story here. It did touch a new all-time high today before, again, briefly pulling back, although it's bouncing at its 1-week moving average too. So the leadership right now in this market, it's taking a bit of a breather. Telecom, semis, anything AI related is having a softer session. But it's also a softer session on the back of somewhat decent volume here. We're at 1.2 million contracts traded right now in ES. This is a little bit of a tick up from what we've seen in recent days, and it's coming on a red candle. Is that something that bothers you? Because I know it's something that's been bothering Ilya.
I mean, when it's on a red candle, I think a little bit, because it shows a little more conviction, or maybe more people are getting into the market today to de-risk seeing the headlines. You want to get out of some positions, things like that. But so far, it's not flashing like a red light or anything. But if a break comes, I think it might be a quick one to the downside. But there's going to be levels to contest along the way, so I don't think it's going to be straight down. But so far, I'm not trying too hard to get short this. It's just I'm waiting for a little bit more vol expansion to come in before I try to sell a call spread or a put spread. We got more earnings ahead, so still early in the week. It's a lot of things could happen.
A lot of things could happen right now, it being early in the week. And this week really has an interesting bifurcation where at the start of the week, it's really more about the earnings. Of course, Iran is going to be this sort of Damocles over everyone's head for the foreseeable future, right? So that with that in the backdrop, Monday, Tuesday, Wednesday, Palantir, AMD, ARM, which is a nice little look into the AI slice of the market again. And then you go into the back half of the week when you have non-farm payrolls on Friday. So more macro, Thursday, Friday focus, more earnings, idiosyncratic AI story the first half of the week. The NASDAQ's going to stay perhaps jumpy, if you will, because that's where most of the tech names are. But talk me through some of these names, Thomas. I mean, looking at the earnings that we just had from the 5 of this Mag 7, we're going into a lower tier. Do you think that ARM, Palantir, AMD, these are the kind of names that could derail what's been a really strong market over the past few weeks, or are they secondary players here that just add color and context?
I mean, yeah, there's still big names, but not as big as, Google, Meta, Microsoft, things like that. Together, I mean, they're going to give you some view of the AI narrative, the landscape, AMD more for the chips. Really, I mean, they'd have to report really bad things for, I think, it to bleed into the market. Otherwise, they're just going to be hand-waved away. We've already had some of the biggest tech names report earnings. They've been good. So yeah, I mean, they're things to watch, but I don't think you base your entire market direction or bias off of these.
The technical structure going into these earnings for many of these, at least for AMD and ARM, it's obviously incredibly strong. It looks a lot like what you're seeing in semiconductors right now, just in terms of that broader structure. This is SMH, where we've had this blow-off move. I don't call it blow-off because that means a top, but you've had this incredible run here in semis, up 70% over the span of last month, right? You can't really ignore it right now. The NASDAQ implications are, not exactly direct because of the weighting of these particular stocks in the broader index, but nevertheless, I think we just have to continue to watch what has been the reliable trend here. Volatility, regardless of where it is over the past few weeks, we've had positive technical drift, and it remains the case. I haven't seen this break below the 1-week moving average here. I'm even looking over at the Russell to see if it's getting a little bit more of a breakdown. We had that beautiful candlestick on Thursday, bullish engulfing bar, outside engulfing bar, right north of that 1-month moving average. And while we did push into a fresh closing high for the year on Friday, today it's a little bit of a step back. But even with that step back, bouncing off of the 1 week, just like we did on Friday. So bears have had attempts here to try to get something going. I'm just not seeing it sticking so far, even with this backdrop of Iran headlines seemingly getting, probably the worst bit of Iran headlines that we've had in a few weeks here in terms of direct conflict.
Yeah, and like I said, it's a drop, but it's not like, you would think they'd be down more. Oil up 4%, hostilities are coming back into the region. This could probably likely keep oil prices elevated for a while. That's what oil is showing us today. Fuel prices are going up too. But yeah, equities, they're hanging in there. I mean, I don't think it's, don't get super bared up. I think it's, worthwhile if you can pick a position where it'll pay off if we do get a sell-off. But overall, I'm not changing my bias too much.
I'm looking at the breadth in this market today, Thomas, and I'm not really liking what I'm seeing here. We track 26 sector ETFs here on Futures Power Hour. I'm counting just 6 of the 26 that are in the positive territory, including software, which is of note, up 2.4% today. But the other names that are in the positive, XOP, biotech, energy again, XLE, IYE, and XLK. So technology is still holding up here some, Thomas. It's one of the reasons why you look at the NASDAQ and go, do you really think this thing's going to break down? Is this anything more than a war trade kind of day? I want to take a step back. I'm looking at stocks down, bond yields higher, the dollar higher, gold lower, and oil up. That all feels very synchronous in terms of the type of relational trading that we saw in March at various points.
Yeah, it's the maneuvers in the market that we saw in the first few weeks, where oil up, stocks down, yields up, dollar a little strength. So, I do think maybe we're getting back to that as, we come out of the ceasefire, it makes sense. We're in a ceasefire, the correlations kind of went the opposite direction or weakened, and now they're coming back in where you see that happening again. So, I mean, it's really hard to predict what's going to happen militarily in the Strait of Hormuz around there. I think you have to assume if things worsen that this correlation will hold where oil goes higher, stocks weaken a little bit more, yields go higher. You start getting people talking about the economy more. Can we withstand this, et cetera? I think the number one thing is to be watching what's happening over there, because I think that is dictating the market direction right now. Maybe not as much as I think it would or should, but it is.
It definitely is. And even if we think it should or should not, oftentimes we find ourselves looking at markets. We're like, why is this impacting the market? Why does the market care about this? And it's usually a question of positioning. People are over levered or too stacked in one area, and then they panic because they have all their eggs in one. All their eggs in one basket. Thomas, I don't know if today is even a meaningful day. I think the fact that the market is holding up with more elevated volume than we've seen recently, whereas the volumes have held up over the course of the session, we've seen the market bounce back some and continue to fight off these earnings, fight off these headlines. I have to think it's because of the earnings that we've seen. I was talking about this on last call on Friday with Ilya, and then again on first call yesterday with Ilya, and you're going to hear me talk about it on an upcoming Trading Trends video. But the scope and scale of the earnings this season has been so good relative to expectations. It warrants a third, fourth time pointing it out here. We're 63% of the way through earnings season so far for the S&P 500 companies. 84% have reported a positive EPS surprise. Another 81% have reported a positive revenue surprise. Thomas, coming into the quarter, we were expecting 12.2% earnings growth rate year over year. It's currently 27.1%. It's more than double what people were expecting. It's higher than the whisper number. FactSet had a whole article out a few weeks ago how, based on what they're hearing from folks, they think the earnings growth rate is going to be closer to 19% for the quarter. And it's even blowing past that. Can the market just look at earnings and say, this is just so much better than we anticipated? It doesn't matter what else is happening in the world. Fed can not cut rates, give us 100 basis points there off our margin, and the oil can go up to 110, give us another point and a half, 2 off our margin. That's fine. We have 27% year over year earnings growth. Who cares?
I mean, the market's forward looking, right? If we're getting earnings like this right now, and you could look ahead and, you say there's an oil shock, you think it's temporary, which, it is to some degree. It's eventually going to end sooner or later. But if it's sooner and the market's kind of pricing in that, or it seems like it probably is, then earnings are going to remain strong. There's probably going to be some kind of hit to the consumer over higher oil prices, a little pullback in discretionary spending, but it's not to the point where we're looking at a recession just yet. In fact, I mean, growth has been pretty strong in the face of, a few things. So, what's the big argument that it's all going to unravel right away? Investment is still going on. Chips are still doing good. The chip stocks that I've reported so far say that investment is holding up. And it's kind of a green light for us to keep going higher. So I think
the GDP is so important, Thomas.
Yeah.
I know I've said this in here before, but I encourage people to go do their own research to a certain degree. Look at recessions in U.S. history and what triggers them, what changes in the data ahead of those recessions. And it's not consumption. It's a decline in business investment. Business investment contracting is what precedes recessions, not consumers slowing down, even though consumption is the largest portion of the economy. Consumers slow down because the business investment stops. That's the sequencing of events. So consumers are having it tough. I don't like, just like no one else does, going to the gas station and paying $70 to fill up my tank. I've seen some of the comments and the tweets because of retweeting some things over the weekend about gas prices in the Midwest surging to record highs. Diesel prices, Thomas, in the Midwest, Michigan, Minnesota, Ohio, Indiana, Illinois, right? Like that, all-time highs now. And folks are saying like, oh yeah, I spent $110 filling up my tank this weekend. It's crazy. But business investment is not declining, thanks in part to the data centers and thanks in part to the oil exports we're doing. So GDP is holding up. 2% for the first quarter was a rebound from fourth quarter of 2025. If we get in that 2.52% that the New York Fed is forecasting right now, granted there's a lot more data due to come out, but if we get 2.52% as a floor up to the Atlanta Fed's forecast of 3.5%, who is going to be complaining about that kind of growth in real terms with 27% earnings growth? That's nuts. To try to find I would say silver lining. What's the reverse part of a silver lining, Thomas? I don't know the expression, but you're looking for bad news where there's legitimately good news there, regardless of what we're hearing on TV about foreign affairs and the yada yada.
Yeah, if you get big pullback in business investment, that means less hiring, probably more layoffs, and people don't have jobs. But if people have jobs, discretionary spending, yeah, it gets hit a little bit, but the economy overall, America, it's very diversified. It takes a lot to really drag it down. Can high oil prices do it alone? No, not if businesses keep investing.
Businesses keep investing, right? They kind of just push through it. So we have our levels to work with today. S&P 500, the 1 week moving average is 72.21. For the NASDAQ, it's just down at 27,000. We'll call it 596.5. For the Russell, that's going to be 27.98. I think that's what we need to pay attention to. We have not been putting meaningful closes in below those levels. In ES and NQ, in the Russell, it's been more about the 1 month. But in each of these charts, Thomas, notice that yellow line. It's getting closer to punching through the former all-time highs in each of these, in the NASDAQ and the S&P. So talking about a breakout here, we've spent enough time over the past few weeks above the former all-time highs, above the former range resistance that we couldn't crack through October, November, December, January, February, March, right? Once we got there in October, we haven't really been able to make progress. We've now spent a month on the other side of those levels. And more substantial supports coming into play to vindicate, like you can get a pullback here, Thomas, of 3%. And as long as you hold 7,000, 7,100, you're going to feel pretty good as a bull.
Yeah, I mean, if that happened, you get volatility expanding. I think it'd be a good place to, sell some put spreads. And
first blush, absolutely. Right under that 50-day, 69.50 or so. Go 50 points wide and you got something, all of a sudden we're making a stew. All right, let's move on here to bonds, which are following oil. It almost feels like we should talk about oil first on days like today, Thomas, because it is the North Star that's guiding the broader market. As it were, though, notes, bonds, that general tilting, leaking, keeling over feeling that we've been exploring here in notes and bonds at the long end of the curve. Granted, I know that you're not a bond trader at the moment, but the technicals have been vindicating at least in terms of staying away from trying to call a low in a volatility environment where, looking at selling a put spread underneath the March lows, you're getting a 1 to 4, 1 to 5 risk to reward. Ugly, not fantastic. You have to call a bottom. You're effectively calling a top in oil prices, or oil prices running so high that a recession's coming. Doesn't really seem like the highest probability outcome. So I know you stayed away from it. I stayed away from it here. Today does feel a little vindication in that regard for why we've been trying not to call a low right now. ZN has a 43 IVR. ZB has a 25 IVR. Either way, those January lows that we carved out initially in both ZN and ZB, they've proven a level that we can't climb back through. Does this alarm you in any extent? Is this one of the reasons why stocks may be facing a headwind right now? Higher rates, lower valuations, as it were?
I think it's something that could kind of pause the market, but I think they'd have to run a lot higher for us to start to concerning the market to where we sell off a lot more. So, higher yields, of course, then they could suppress growth. Are we there yet? I don't think we are. But overall, I'm still not trading these, right? I'm still just sticking out. I only trade bonds when, high volatility. I think I can do a good iron condor or something. I still don't like these here, so I'm just watching.
If you didn't like them last week and you don't like trying to get long here, and even if you did the iron condor, you don't want to be directional last week, Thomas. You've got a big move to one direction and an expansion of volatility. It's not exactly the most desirable circumstances that we've seen. There's not many auctions that are coming out in the coming days that could provide a lift. In fact, there's no auction in the coming day that could provide a lift. I see 13-week, 26-week, 6-week, 17-week, 4-week, and 8-week bills, but that's none of our concern. Next week, 3-year, 10-year notes, 30-year bonds, Monday, Tuesday, Wednesday, respectively. The Fed here, Thomas, Kevin Warsh got a little bit of a warning tap last week when Powell's final press conference, perhaps final meeting, yielded one dissenter calling for a cut, but 3 dissenters saying that they were not comfortable with the easing bias, easing language used in the document. Have you checked Fed funds recently?
No, I haven't looked at them.
On balance right now, markets are pricing a rate hike for 2026 again. 13.5% chance of a hike through October of this year. That's not good. It's not supposed to happen. I thought we were going back towards cuts. Kevin Warsh was coming in. We were going to get cuts right away. But that's why I tweeted out last week, Thomas. The read here wasn't that Powell was being bucked. It was a warning shot to Warsh that you're just one voice among many on this committee. You come in here with your ideas of cutting rates, you and Mirren have your best laid plans, you're going to run into a brick wall. And Powell's also sticking around for what it's worth. Oil prices making the move higher, the sensitivity to inflation. John Williams had a speech today talking about how inflation is continuing to grind higher and is above target. It's going to be difficult to tame because the starting point is already above 2% for this latest transitory shock. You see Fed funds futures falling out of bed today. So the market is wrapping its head around it. This could be a headwind for equities that Ilya always likes to point out. If the market wants cuts, it's finding out that it's probably not going to get them. And as good as that GDP data has been, as good as those trackers are looking, Thomas, if your earnings growth is 27%, the economy is growing at 3%, and you have inflation bumping up at 3, 3.5, 4, 5, why on earth would the Fed cut?
Right.
So, kind of rubber meets the road here. We're now in May. It's totally different in January saying we may not get another cut in 6 months versus now, because 6 months from now, all of a sudden we're talking about Thanksgiving, Christmas, and we start to look into next year, into 2027. So psychologically, that could have an impact.
Yeah, it seems like if we are going to hike rates, the real pain would come later. Right now, it seems like the market's still focused on, even though we're not getting cuts, it's for the right reason, right? Growth is high, earnings are good. So, the market can digest that. But if hikes become more and more probable and start coming in sooner and sooner, then I think you start seeing the equities face more headwinds from that.
And right now, the market path is that we get no movement on rates until March 27. In March 27, we get a hike. In September of 27, then we get a cut back to the current rate we are now. And then in October of 27, that's when we finally get our cut to the next level lower. So we're in the 3.5 to 3.75 band right now. The path would be 3.5 to 3.75 until March. Then it goes up to 3.754. March through September. September goes back down to 3.5, 3.75, and then in December it goes down to 3.25, 3.5. That's not the path that the market ultimately wants. And oil's staying up here, Thomas. So I'm not doing anything here in bonds right now. I'm just staying away. Sometimes a good trade is the one that you don't take. And that certainly has been the case in bonds, just like it's been in metals, avoiding the temptation, the siren song of getting long gold and silver yet. We've been diligently avoiding it. I know you've been doing, and others have been doing better by being short, but that's just not the cut of my jib. Oil here is 105.19. We talk about the Bizarro Monday in stocks, Thomas. It's the same thing here in oil, where you get the gap open lower in oil only to cover the gap and trade higher over the course of the day. You mentioned some headlines that we've seen today and over the weekend. Do you mind, for those that aren't monitoring the situation like you and me, of course, that's what they pay us for, so that we can relay what's important and separate the wheat from the chaff to the viewers? What have been the most meaningful headlines that you've seen here that may be pushing oil prices back up? And are they more than just short-term gyrations for a Monday, or are they things that we need to be thinking about going into Tuesday?
Yeah, so they did hit one oil facility. It looks like in the UAE launched a bunch of other missiles. Most were intercepted. One went into the sea. The U.S. is saying they sank some fast attack boats. So, hostilities are rising again. It looks like the ceasefire effectively it's over. But also the movement of ships you see through the strait, it hasn't gone back to normal. There's been a couple ships that have moved through, really, oil tankers, but nothing that's signaling that there's a lot of confidence going back into this. And now that these missiles are flying again, there's drones, there's going to be less confidence to move ships through the strait. The U.S. was doing the blockade. I'm not sure what the end goal was there. There's a blockade. Iran had its own blockade. I think one of the objectives was to make sure that spare storage capacity was filled up in Iran, that they couldn't get oil out, right? So that would have to shut in their wells. And, that'd be really bad for Iran. But it looks like they have more days of storage than some people were saying when we started doing this. So really, it's the UAE. They say they're going to retaliate. So this could set off another trigger of escalating events. And there's also reports that the U.S. and Israel is preparing to strike targets again inside of Iran. So, in the next 24, 48 hours, I think we have to watch this very closely. We start striking Iran again. Iran starts, striking Gulf states again. And from what they've put out in the past, they're going to heavily target energy infrastructure. So it looks like Iran, their plan is to inflict economic damage through higher oil prices onto the global economy. That's their leverage point right there. They can't really hit U.S. military targets that are moving, the ships, things like that. Most of the bases, the force there has been reduced. From what I've seen, enhanced missile defenses have been moved into a lot of these bases where there still is a lot of personnel. So I think Iran, if it does escalate again, they're going to be hitting these energy infrastructure targets. We could possibly be looking at another really good week for oil. Last week we went up, I think it was 8%, and that was the third week of gains. So, Monday it's looking like we're on track for another week of oil moving higher and higher.
Across the board, across the curve, looking at the December expiry right now, Z6 and crude, 83.14, bullish engulfing bar 2, lower low than we had on Friday, closing above Friday's high at open outcry. At least we're on pace there, unless we drop below 81.53. So there's still some time on the board. We have the mark closed, though, for what it's worth. Thomas, I mean, the oil curve is telling you that there's still stress in the system. It doesn't really matter where you look. CLM6 is up 3%, N6 4.1, U6 4.6%. Right? As you're going across the curve, the middle portion of the curve is, so you're seeing the juice. The supply disruption is going to be lasting longer. Backwardation is not a sign that the market is expecting lower prices in the future, despite the Treasury Secretary's repeated misinformation.
He knows that.
He knows that. He's better than that, I thought. And yet we have a situation where no, that's not what backwardation obviously indicates. It indicates that there's a lack of supply to meet current demand in the short term. And up the curve, as we look, these prices are rolling up the curve right now. And as we're getting closer and closer to expiry, they're converging on spot. So you're seeing it. You saw it last month when the M6 had to rise to meet the K6, started pulling back in, $15 wide backwardation. That disappeared. It's only $5 wide between the M and the N6 now because this issue is going to go on for a few more weeks. So I still prefer, Thomas, although maybe it's not right, but I still think long deltas here work. The short put spreads are better than the long call spreads, even though long call spreads would have been working this entire time. I just think that that's still the better way to express your view. There is a floor under oil throughout all of this, as opposed to who knows what the ceiling is, who knows where demand destruction lies. If we get a little bit more, I'm going to be happy to take the opportunity to do similar to what we've been doing here, which is selling out of the money calls, right? We've been holding on to these for a long time, but if we get another opportunity to sell something like 148, 150 in the N6 contract and get a reasonable 3-to-1 risk, 4-to-1 risk to reward, I'll take the bet that oil's not going to make a 55, 60% move in the next 45 and 21 out.
Yeah, same here. I mean, you mentioned the prompt spread. There's other spreads. We see the 3-2-1 crack spread. It's almost at a record now. It's I think the last high was in June 2022 at 61 and 8. We're at 56.2 right now. So we break in the recent peak from March 23rd. That means that at least gasoline and heating oil futures are moving higher quicker than crude is moving higher. So it's expanding that crack spread, expanding the theoretical refining margin for companies that refine a lot of products. VLO, Valero is like one you can look at if you kind of want to see a proxy to the crack spread, because not everyone has that charted. Some platforms you have to do your own equation for that. But yeah, I mean, fuel prices moving very higher. We have API inventories coming out tomorrow. We have EIA crude oil inventories coming out on Wednesday. Big withdrawals expected for this week after last week, now that we're really drawing on inventories here. And, the U.S., it's in a better position than a lot of countries. We did have, a buffer. We do produce a lot. It's different than a lot of our refineries run. So we're exporting a lot of that. The world is turning more and more to American crude oil and those refined products, gasoline, heating oil, things like that. But yeah, I still have my CLM6 short call spread. That's at 110. So I'm getting a little nervous about that. I should have took that off probably last week, but I offloaded most of my short put spreads last week in crude. I still have one in CLN6 at 80, 81. That one's looking very good. And I'm probably going to start operating in the next contract pretty soon, the Q contract. But I'll be making more trades in the N6 contract as well.
You talk about those recent lows here, Thomas, and the N6 contract. That comes in on April 17th at $77.22. Playing around there, if we wanted to ride this into the ground, you could, it's feasible. It's not exactly a great risk to reward, closer to 7-to-1 than anything we typically like. I'm looking out at 43 days right now and thinking what a short iron condor looks like. Because at current pricing, we can get a little exploratory here. We'll go 125, 130, and then we'll go, you got to come with me here, buddy. We'll go 74, 72, $2 wide on either end. Few things that are being observed here. One, that would mean that we're not breaking the April 17th low. It likewise means that we don't trade through the highs that we've had in crude throughout this entire episode. 119.48 is the high that we have back in March during peak panic and peak fears. So the short iron condor trade here, Thomas, at 43 DTE, it's better than a 3-to-1. It's at 66% probability of profit. That means we're not breaking the highs of the war or the swing low after the ceasefire was declared or whatever. The extension of the ceasefire, kicking the can down the road. I think it's reasonable. I think it's worth putting on. Let's add it to the follow page. Volatility's up, 57 IVR. And oil trading over the past several weeks, if you've been avoiding the day-to-day and you've been doing this thing's not going to go down too much, and if it goes up, it's not going to explode higher, and you've been fading it, it's worked out decently well. So I'm going to stick with those lines. Basically, this thing can't move $25 in either direction. We'll be okay.
Yeah, I mean, it can't go down too much too fast because there's still, even if you fix all the negotiations and everything, there's still a real supply problem. And, if you, with this volatility, you could still move up a good amount and stay within your strikes because, that IVR is just giving you more room to work with. So I think it's, obviously there's tons of volume in crude. It's a great contract to trade. And you could trade around news all day. You don't get bored.
No, you definitely do not get bored. Let's see where we are with natural gas, Thomas. I know Jamal's been looking at taking this thing a little bit higher, and he's been sitting long a call spread here. I've been waiting. I think you've been waiting too. In the M6 contract, 2.90 is the level that I'm watching, which was a pivot low that we had back here mid-January and then became resistance on the way up on April 22nd, which likewise contributed to a drop from the 1-month moving average. Today, we're poking through that 1-month moving average. So just a quick note here, that has been a defining level that the market has failed to really get some traction above since the middle of March. The N6 contract is where, if I'm looking at natural gas, I think is more applicable for the typical Tasty way because it's currently at 22 days for M6. And unless you plan on doing something for one day and you're a 45 and 21 out cycle, the N6 contract is probably better suited for that standard time frame, Thomas. And to that point, though, when we take a look at the N6 contract here, it's not 290, but it's closer to 320 that we want to pay attention to on the chart. You can see here that I have this little green box outlined that I want to see price in that area, preferably when this blue line drops through there, because it would mean that prices are back above the 1 month. They're back above the former low. They're out of the downtrend here. They're back above the 50-day. I know we'll have given up calling the exact low, which maybe we got with the key reversal on April 30th, because that is technically the lowest low in the trend, only for that day to produce a close above the prior candle high. But nevertheless, ending the series of lower highs and low lows and breaking the trends and all the moving averages, 320 and N6. And then I look at a market with a 17 IVR and I say, we can get some out of the money calls here, and playing not just for a bounce, but another volatility expansion could really help get some juice in these things. So at that point in time, once we cross 320, I myself will be looking up near 35, 36, which given current market pricing right now, that would mean another 5 cents higher. So it's really, this is more of the risk to reward we'd be looking at in that scenario. Close to a 4-to-1, risking 210, 200 to make 800. So 4-to-1 now at just under 30% probability of profit. So playing for vol expansion and price directional movement. I just want to see a little bit more in natural gas before we jump back in with the honey badger. Reasonable?
Yeah, I mean, I'm not sure I'm going to take that. I've been staying out. It's just a very low IVR, so it hasn't been too exciting to trade. I would say this is probably just shorts getting out of the market after, a sustained downtrend, technical bounce here. I'm not sure if it'll be long-lived. Inventories are still, they're within the 5-year range, but above the 5-year average versus last year. This year, I think we're over 100 billion cubic feet over that in storage. Weather still not supportive of higher prices. So, really, I'm just still watching here.
Still watching, still waiting. Just a brief check-in on those gasoline futures for those that are at home. 371.95. That's a new cycle high here in gas futures. Thomas, we've been tracking this over the course of the past few weeks just as interest because I think most people drive cars here that watch the show. To that end, we've seen that there's been about a 90-cent spread between the prices in the futures market and what we're actually seeing on a pump a month later. So June 4th, PDT day, Trader Independence Day, we're probably looking at something close to 460, 470 or so national average, which tracks with what we've seen out of AAA recently. Currently, the national average is 457. Oh gosh, this is going much higher. We're going to be looking at $5, I think $5 a barrel, $5 a gallon, I should say, nationwide soon.
Yeah, it's I drive a Corolla, and even filling up the Corolla, it's starting to get painful. So
I'm looking at it's like, oh, next car. Now they got all the solar. Probably going to go electric. Why not? We can do it. Last month, my electric bill was $0, Thomas. That's how much solar I'm making right now.
There you go.
It's freeing. Metals plundered for cash again. This is the ongoing story for gold. It's been the case since the war started. If you're a Middle Eastern, Asian country and you see energy prices are going up, your currency is getting hit hard, and so you need to raise cash capital. You buy safe havens when your worries are building, and then you sell them when you need the cushion. Oil up today. It's no coincidence that gold is down. Gold was struggling last week to get back above its 1 month average, or 1 week average, I should say. Thomas, those last three candlesticks that we have on our screen here for gold, it's not exactly the proper placement for such a evening star candlestick cluster to appear. Usually that's at the top of a trend. But technical analysis is more art than science, as I like to say. I look at inverse head and shoulders patterns up at highs and go, that's just continuation to the top side. So to that end, Morningstar candlestick cluster up against 1 week moving average that already has a downside tilt yells continuation lower. So what's the play here for gold? You're effectively buying a low, hoping that oil stops rallying. And then it feels like so many of these charts right now. You want to call a low in bonds, you're calling a top in oil. You want to call a low in gold or silver, you're probably calling a top in oil right now, given how these relationships have unfolded in recent weeks.
Yeah, I agree. The chart doesn't look great here. I think it moved down to 4,000 I think it could happen for sure.
Move down to 4,000. That's scary. Scary because I don't own enough gold then, if that's the case, Thomas. Feels like I should be getting ready to buy a lot more gold. You told me I could buy gold at 4,000 again in my lifetime? That seems like it's a conversation we should have. What do you make of the gold market here, Thomas? I'm trying to conceptualize what's the biggest concern here that we have as traders in the short term right now. Is it just oil?
Yeah, I mean, I think it's rates too. Higher rates. Higher rate, you could put your cash in something that's generating more income with higher rates. Versus gold doesn't really generate a yield. So, gold being a safe haven, it's a safe haven against certain kind of things, not really an energy shock. Definitely what we're seeing. It's not a safe haven against that. So, if things stay the same, oil stays elevated, I think you're right. You're seeing lower gold prices.
I'm going back to the 2022 environment, Thomas. Higher for longer. The Fed can't cut. The Fed needs to hike rates. The war broke out between Russia and Ukraine in February of that year, and gold prices spiked over the next few weeks. But once they topped $2,000 for the first time after the onset of the war, they kind of just steadily ground lower from there until the bottom in October of 23. And it wasn't until the attack on Israel by Hamas that gold reached its low. October 6th, in fact, and on from perils that Friday before the Hamas attack against Israel. That's when we saw the market finally reach its bottom. So, if we get into the situation where we're higher for longer, Thomas, and yields are going to be staying elevated and real yields are going to continue to move the way that they've been moving, then we can't dismiss the fact that gold and silver still have this albatross around their neck. And they might have the albatross on their neck regardless of whatever thematic longer term concerns there are around de-dollarization or end of globalization or blah, 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 because so many of these countries will continue to need to plunder their gold reserves for the additional capital required to pay for energy. That's it. I don't see a reason to get long here. Volatility's come in. We want volatility going up. Volatility continues to trend lower. Prices have negative technical drift. There's nothing to do here as a bull. Not if you're trading it. Maybe if you're dollar cost averaging in, but not as a bull, as a trader.
No, not at all. I'm putting in an order for a long put spread at 4,500, 4,490 in the GCQ6 contract. So doing a downside play there. That's 52 days out. It's a good amount of time for us to, over the next 2-3 weeks, we get, gold dropping below support. I'll take that off. But
for all of gold's sins, I do think we need to give Bitcoin its time in the sun. It deserves its flowers. Bitcoin here is continuing to build, Thomas, and I do have vested interest. I established a new long position in IBIT a few weeks ago. To that point, though, bias aside, April 2025 low, resistance. We punch through it, support, bounce, up and down, support, bounce, cycling into a new high. Former resistance becomes support. Beautiful. There's still more work to be done. Today is finding resistance right now at the low that we had here on November 21st, 80,750. And we're trying to get through that right now. But the fact that Bitcoin's up on this tape, Ethereum's up on this tape, they're trying to turn the corners here. I don't think we want to ignore that. I don't think that's something that we should ignore. Ethereum has a little bit more work to do, but you start punching through 2,400 or so, and you have a very similar type of trade setup right now. I'm following where the money is going. Gold is not the place. It's not physical gold. It's not that old man's gold. It's the new kid's gold, Thomas. It's digital gold. It's Bitcoin. So volatility is really low right now, and you're seeing this momentum turn the corner here. This was a beautiful catch off that April 25 low, coupled with your 1 month moving average. You've got your 50-day moving average, your 1 week here. If I'm looking for a safe haven, as it were, Bitcoin is telling a far more compelling story than gold or silver right now, which is what I've recently, put recent longs on in here. And I have not put on new long positions in gold or silver since late January. It's been a long time.
Yeah, trading gold was way different last year. It's just totally different game.
So much more fun, let me tell you.
Yeah.
So much more fun. Structure here, I'm doing it through IBIT, not Bitcoin futures. For what it's worth, I'm looking for a move back up towards 50 here, where we saw the market more or less peter out at the end of January before keeling over. You can see 47, 48, pivot low, drop-off point on January 29th. The market's building up, though, is the point that I'm getting at. And I think that if we're looking for longs, there's no reason to bottom fish in something like gold and silver, which have negative technical drift and momentum. And instead, crypto is the far more compelling case right now. So, Thomas, BTC, Ethereum, those are the better points of interest than GC and SI. I know you've recently exited your copper long deltas, which is looking good on a day like today. I'm still hanging in there because this is a position that's still working for me and it's in the money. I just need this thing to not go down much further. Otherwise, we're in trouble. But assuming that doesn't get through 5.6, I don't really have any issues myself. I'm not loving the loss of momentum, though. Copper, not exactly screaming that we should be enthusiastic about growth here, Thomas. Let's wind down the show with a little bit of FX chatter. We have the dollar up on a bit of a liquidity reach today, including against the Australian dollar, which it has a rate decision coming down the pipeline tonight, Thomas. The RBA is expected to hike rates for the third time this year. There's a catch to this, though. Going into today's meeting, we see that the market's pricing in a 100% chance of an RBA rate hike. So when we think about the dynamic in today's market, this is less about the notion that the RBA's trajectory is shifting. They are very hawkish compared to, say, the Fed right now, or ECB or BOE or really anyone else, which is in part why the Aussie closed at a fresh yearly high on Friday. This is more about just the general risk-off narrative, right? So it sets up an interesting dynamic here where the Aussie has been so strong, its central bank is giving it a yield advantage. It's a currency that sits at the tip of the global supply chain. So if commodity prices go up, it should in theory benefit being an exporter of such goods. I'm personally looking for, if there's a deeper setback here in the Aussie, a dip to buy. Even if we have a bit of this softness today, the dollar itself is getting its liquidity bounce, but nothing 0.5% really across the board. Dixie's not screaming higher. The betting man in me says, yeah, oil goes up and all we get is 0.4% in DXY. Traders are still, they're reaching for liquidity today, but they're not jumping into the dollar with 2 feet. So dollar up and Bitcoin up with yields higher is a fascinating development. All the more reason why I think Bitcoin longs deserve a really serious look.
Yeah, the only currency I'm playing right now is the British pound. I have a short put spread at 1.33. So I'm still I'm gonna stay in there, staying above the 21-day EMA. I'm gonna stay in there until it breaks. If it breaks, I'll just get out. But I'm comfortable holding on to the short put spread for now.
I have a little bit of action in the Canadian dollar still, which all things considered, it's doing okay. We're not quite at 21 DTE yet, and I've been looking for it to hang out between 72 and 74.5, which it's been doing, right? Could take this off today, could realize a very small profit here. Buying power on the position was only about $130, so it would be about a 30% return of the buying power that was used. Not bad. It can go a little bit longer. We'll revisit this in 11 days. I feel the same thing for the Australian dollar. I'm short a put spread here off of recent lows when we were pulling back and started to make our way through the 1 month and the 50-day again. I feel comfortable sticking through that right now. If we lose the 1 month, though, we closed above it here, Thomas, on April 8th in 6 a.m. 6. It's going to be on the 7th if you're looking in the spot market in Aussie dollar itself. Either way, though, we've been maintaining that close and bounces off the 1 month recently. So if you get down below 71.20 or so here, if we clear out last week's lows in the Aussie, then you start to get a little bit worried as a bull. You get a bigger pullback and maybe a chance to rebuy into the trend. But other than that, Aussie pulling back that hard, the euro, the pound, the Canadian dollar, it feels like it'd all be predicated on a much bigger kick higher in the dollar, which, why do we get that here, Thomas? We would have to see something much worse happening in oil and stocks. So you want to be a dollar bear, you're rooting for calamity and everything else.
Yeah. Chris, we didn't talk about grains really quick, but oil going higher is lifting soybeans and corn. And we're 11 days out from the state visit in China for Trump going over there. One of the things he really wants to do is secure a big purchase order or purchase orders for the future for American farmers. That's really needed right now. And I think soybeans, they have a good amount of upside from here, even with the jump today. So I've been ordering, I'm trying to get long soybeans. Actually, that filled already. So I am long soybeans via short put spread 53 days out at 1,200. And I think, anticipation, optimism is going to build into this state visit for a very large soybean purchase order from China.
Soybeans right now would be the 4th highest close on a daily basis that they've seen since the war started. Wheat would be the 3rd highest close that we've seen since the war started. Corn today is putting in its highest close since the war started. Not for nothing. When oil and all the grains, like just pecking order wise, is today a top 5 close for all these products since the war started. Yes. Oh, okay. That makes sense why 10-year yields are doing what they're doing. The inputs for inflation are still going up. So if you didn't like your grocery prices in 2022 and 2023, Thomas, do I have terrible news?
Yeah.
Well, we can always do what the World Economic Forum wants. We could just go eat bugs. I suppose bugs are on the menu later this year, given how things are moving. Hey, RBA rate decision tonight. That's the big one. Hike expected 25 basis points. That's known, though. The market has told us to expect it. We've collectively decided it's happening. Will the RBA signal more? That's the next step. It's not so much if they hike this one, it's whether or not they continue to hike. 2 more are priced for the market the rest of this year, so that's your baseline. You get more indications of more than that, the Aussie is going to bounce right back. Thomas, otherwise, ISM services tomorrow. That's important. US, 10 a.m. Eastern. Be on there, jolts, and then it's a Tuesday where we're focusing more on earnings in the first half of this week. Non-farm payrolls comes Friday. We're done here. Dr. Jim Schultz coming up next, I believe. Maybe. Producers, just give me a wink and a nod. Okay. We'll see you in a little bit. Take a brief break. Come back. Tasty Live's up next. I'll be back here later today, overtime. So we'll see you there. Cheers.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Think you know where vol's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Monday edition of what it is that we are trying to do. I'm so glad that you guys are here because it is only because of you all that we can do what we do. And so I would say that this is the post-vacation edition of what it is that we were trying to do. And I was out. I was away from you guys for 3 days, but you guys want to hear something crazy? We didn't even go. We didn't even go. So last weekend, right, if you guys give me like 3, 4, maybe 17 minutes, I'll bring you up to speed. So last weekend, my kids had a play at their little co-op deal, right? They did Peter Pan. It was amazing. It was so much fun, all those things. Well, one of the kids at the play, or two of the kids at the play, had like a stomach virus, and they were there. And my wife caught wind of this. She's like, this is not good. Maybe we'll dodge it. Maybe somehow we'll be able to cheat death and not get taken down by the stomach virus. But oh, no. So what happened was on Tuesday night, like right before we were about to go, all my kids went down like dominoes. And Autumn was like, hey, I'm not taking these kids to Great Wolf Lodge. I'm not going to be the one to bring the Petri dish. Like, I understand we're going into a Petri dish, but I'm not going to bring my own Petri dish. And I said, yeah, that's fine. That makes sense. And so my kids went down. They recovered. Then my wife went down 2 days ago. And so I've been the only one around that is well and healthy, been taking care of everybody, been trying to to keep the ship upright. So if I disappear later this week and just fall off the face of the earth, it's because I finally went down with the stomach bug that has been going through not only my family, but other families. I mean, it's been pretty bad. And so Great Wolf Lodge will have to wait for another time. But you guys did an amazing job. You kept the market above zero. Nice job out of you guys. You guys did the one job that you guys had to do. And of course, if you have a question for me during the show today, drop it in the chat box, and I will try to get to as many as I can right around the halfway mark of the show. I would say the expected move on the number of questions I get to per show is some number between 0.006 and 0.008. So I would try to get it in the chat earlier. There's a much higher delta that I will get to that question. So Paul, bring us into the market, man. Let's do it. What are we doing today? Market's going down, not unlike my family with this little stomach deal. Let's take a look at this. We got a little glacier freeze. That feels about right here on this this post-vacation day. And oh, by the way, I know I mentioned this before, but before we get kind of knee deep in the hoopla that is the portfolio, I'm going to be out again in like 2 weeks because, again, the way that the system works at Tasty, if you don't use it by the end of May, like you lose it. And I have like a ton of PTO built up. I'm not even going to use all the PTO that I have, but it would be kind of silly for me not to use it. So you guys are going to have to keep it above zero for me again later on this month, right before Memorial Day. But I will let you guys know that I'm going to be gone again later on this month. And so EME S&P is down 32. Risk-free instrument, also known as the NASDAQ futures, extremely high risk product. But if you're brand new to trading, sometimes it feels a little risk-free at 27,763, but it's down 73 here today. Got the boomers down 550. And the Russell 2000 futures index down 13 on the day. So some red on the screen. You got bonds down. You got notes down. You got oil up $4 on the day. UB40 is down. Look at the shifties are just getting pummeled today. Gold down 120. Man, where are my Hunt Brothers at? Get me a little gas station cheese and pepperoni. Where are we at? Hunt Brothers down 330. Man, that's some serious business. Silver down to 73. And so, man, I don't even know. I do know this, right? Today, obviously, May 4th. May the 4th be with you. Tomorrow, I've been waiting all day to say that. I've never even seen Star Wars, actually, which I don't even know if I should say that out loud, but it's actually true. I've never seen Star Wars. I know the basic idea. Like, they're out in space. They got cool-looking swords. Harrison Ford's in his prime. That's pretty much all I got for you. But I know that today is the day they're all what do you guys call yourselves? Like Star Trek is Trekkies. What are Star Wars groupies called? Do they have a name? Like, I'm so far out of the know when it comes to this, other than the fact that when May 4th hits the calendar, I like to walk around town, maybe like a light jog around town, wishing everyone a happy May the 4th and let them know May the 4th be with you. But tomorrow, that means it's actually Cinco de Mayo. So don't worry, guys. The market might be down a little bit today. The metals might be getting creamed a little bit today, but don't you worry about it at all, because tomorrow it is constitutionally required for the administration, the president, to taco all day long. So don't worry about it. We're going to be right back to all-time highs before you even know it. And so lots of red on the screen. Got volatility up today. And volatility futures are down or up. I'm sorry, up 36 cents. And then you've got the VIX up $1.40. Man, you guys are making me laugh in that chat. Called them nerds. That's pretty funny. But let's see. Paul says warheads. Are they really called warheads? Is that official, Paul? Okay, that's good. I hear nerds. I hear warheads. I'm hearing it all. And that's pretty funny, man. You guys caught me on that one. And so, all right, let's go ahead though. Let's get into the portfolio. So a couple things to bring us up to speed, kind of what happened while we were away and those kinds of things. And we actually have a very interesting situation brewing in none other than Starbucks. I mean, obviously we sold the put for earnings. We made a bunch of money. That makes sense. I mean, was there ever a doubt, right? Has anyone perfected the B- to oftentimes C+ level product better than Starbucks? Like, nobody slangs 3-day-old moldy coffee better than SBUX, and that came out in the earnings report. I think they even talked about that in terms of business strategy, product development, like what's coming on down the chutes in the conference call, and the market loved it. The market obviously loved this. So Starbucks up over 105. So our short put's doing well, but guys, look at the covered call. It finally happened. It finally happened. So we are pretty significantly in the money now on this cover call, which is good. I've been trying to do this for the last 17 months, and I've essentially not really been able to do it. So today we're going to have a very good discussion around, what can we do? Should we do anything? If I was to do something, what would it look like? And all those kinds of things. We're going to spend no fewer than 18 minutes on Starbucks alone here in the next few seconds. But there are a few things that do warrant our attention before we get to Starbucks. Let's go ahead. Let's take a look at, I'm not going to go through everything because I want to make sure we have time for Starbucks, and I want to make sure that we can do that. But I see you guys in the chat, man. You guys are making me laugh, man. Look at you guys. Mike Evans is here, or Daniel is here. Sam L is here. Man, look at Daniel Perkins in the house. Grumpy Mike and John Covington. Ranch is here. Ron Bashar even showed up. Man, that's crazy. Amero Amigo is here. Man, I appreciate you guys so much. Man, look at LS Home Automation guy. Man, you guys all came out, man. You guys all came out for my triumphant return back to the show. And it feels good, man. Like, it felt great to be on with, Tony and Nick this morning. And then obviously it feels great to, be on with you guys here in the afternoon. It's like slipping back into your favorite, pair of sweatpants. It's like slipping into your favorite pair of slippers. It's like, oh yeah, I kind of forgot how amazing this is. And so, when Paul counted me in, I'm like, yeah, man, let's go. This is going to be some good stuff. So, all right, let's go ahead though. So first and foremost, we've got MES. So I talked about this. We're getting helped a little bit today, of course, because the market is down, which is good. It was strong this morning, and so it was obviously green this morning. Everything looked amazing, and tacos, the day before. May the 4th be with you. Get some fluatas, maybe some chimichangas or something from the old Mexican lineup there. But it was looking good. The market was looking good earlier this morning, and now it's sold off, and that's good for our short call in MES. But we're still at 11 days to go. So the time has come for us to do something in this position. Now, what are we going to do? Well, there's a couple different things you could do here. Obviously, you could just take it off and eat the loss if you want to. I kind of like having this short delta in my portfolio. It's going to balance out a lot of the other things that we have going on in the portfolio in terms of, we're long MNQ, which we might actually take that off here in the next little bit. But even still, we're long Alcoa, we're long, IBM, we're long Johnson & Johnson. Obviously, we've got Starbucks. I mean, our QQQ short call spread, we're a little bit short on that guy, but we don't have too much more to make on that strategy. We can only make another $1.50 on that guy if I just open up that strategy in QQQ. In this short call spread, there's only another $1.50 I can make in this maximum. And so that's not really going to give me too much downside, whatever you want to call it, hedge, protection, exposure, whatever you want to call it. There's not too much coming from that QQQ short call spread, which, that also is a bit of a gimme because that means if we're wrong, we can't really lose that much more. So if QQQ doesn't go down and the short call spread doesn't move back to being out of the money, then, the losses are going to be limited, which is nice because we've effectively already absorbed the most we can lose on the trade. There's another $1.50 in there, and so that's not insignificant by any stretch of the imagination. But if you've seen the show before, sometimes it can be a little bit worse. Like sometimes it can get a little bit worse when it comes to the old losses, a la Chipotle, a la Oracle, a la Dell. I don't know if they're still in the business, but man, they got us while they were out there. And so, all right, so a QQQ, maybe we'll talk a bit more about that guy tomorrow. But for MES, what I'm going to do, you could close it, you could just hold it, or you could close it, I should say, like I was just saying. I'm not going to do that because I want to keep the short delta. I don't really like holding it beyond this point because now we're at 11 days to go. So now it's getting a little bit sticky in terms of gamma risk and things like that. 21 is obviously the tried and true. I think anything between 21 and 14 is totally fine. But now we're not inside of 21 and 14 anymore. I'm no Jacob Perlman, but I think we're outside of 21 and 14. We're at 11. All right, so we're kind of outside those boundaries a little bit. So I'm kind of thinking now that we just roll this guy out and keep the same strike, the same exposure, not truly static delta, but it's going to be pretty static for a little while, if the market were to sell off. The deltas are going to change because every option position has dynamic delta, but because we're so deep in the money, it's going to feel like a short future for a while, probably at least 100 to 200 points lower in MES. And so, in terms of, I think tomorrow, let me think for a minute. May 5th. I think tomorrow we have Jolts, do we not? I'm pretty sure tomorrow we have Jolt's number. And let me tell you guys something. So if you're multitasking, come back to me because I need you for a couple of seconds and you need to hear this. Guys, I've been trading for a long time, almost 20 years now. I've been studying the markets for nearly 30, actually. I started in 1999, 2000. I've studied a lot of data points. I've looked into a lot of economic data drops. I've traded a lot of economic data points and data drops. I have never seen a more impactful number than the JOLTS number that's going to drop tomorrow, whatever that stands for. This number that's going to drop tomorrow, it is going to completely alter the trajectory of every financial goal that you have, that your children have, and that your children's children have. And so tomorrow, you need to be very, very mindful of how you want to play this. You need to make sure you have all of your affairs in order. You need wills in order. You need living wills in order. You need dead wills in order. You need all the wills. Just check them all off. You've got 24 hours. You've got 18 hours. Like, get this stuff done today. I mean, you've got AI. You've got your AI agents. Have them do it for you. They won't make any mistakes. Yeah, sure, they make a bunch of stuff up, but it's fine. Just have them knock it out and make sure that that guy gets done. And so going into tomorrow, and the JOLTS number that is coming on, I think it's tomorrow, whatever it stands for. Does anybody actually know what JOLTS stands? I have no idea what it stands for. No, I think the first number is jobs. That's pretty obvious. It's gonna be pretty funny if I'm wrong. It's either jobs or javelin. It's got to be. I mean, those are the only two words that start with J, and obviously Jim, but that's probably not it. And so I don't know what the rest of the numbers are, but it's like we got that guy coming on down the chutes tomorrow, and it's gonna be a wild one, man. And so let's go. Let's roll out our MES short call, going into the most impactful JOLTS print of our lifetimes by a wide margin. Let's go to, we'll go to June. 44 days away. I kind of like that. We'll pick up another 47 points in credit for doing that. And again, this is one of the beneficial things of extending the life of short premium. When you have an undefined risk short premium trade on, and you want to extend the duration, you want to give it more time, give it a chance to come back, or you just like sitting in the pain cave. I mean, any of these would apply, of course. This is a great thing. You can just roll this guy out and pick up a premium. That's not always the case when it comes to, defined risk strategies. Oftentimes with defined risk, actually, you have to pay if you want to roll the guy out and extend the duration. So it's not as simple from a management standpoint. So let's go ahead and push this guy out. 47.75. See if they'll give it to us. They won't give it to us. Drats. All right, let's go ahead and let's see here. Where are we at? I'll try 46.75. I'll probably get filled. MES is pretty liquid. And of course, I didn't get filled. Oh, but there you go. We got filled. All right, perfect. So now we are in MES going all the way out to June. Wow, that must be triple witching, actually. Hold on, let me look. That's got to be triple witching, right? Yeah, that's it right there. So this is the last, and you can see it on the actual trade page here. Like if you look, or not the trade page, but the not the trade page, but like the expiration chain, I guess you would call it. You can see right here. I mean, that's the trade we just put on 44 days to go. I'm in the June cycle. You can see this is the last Mohican when it comes to the M contract. And then after that, let me grab a different color just because we can. We'll grab a little magenta. Happy Magenta Monday to you guys. You can see after that, it's U. So U is going to be September, of course. And so it's only going to be another month and a half, and we're going to be trading the September contracts. Wow, that's September 2026? That's crazy stuff, man. That's really crazy stuff. All right, so that's MES. Okay, let's go to Starbucks because I want to make sure we spend time on this because there's a lot of things to talk about here. And, I've been waiting for this moment, I've been training for this moment my whole life, and I don't want to let it pass me by. So let's go to Starbucks. And then, of course, I'm going to get to you guys. I see you guys in the chat. Man, look, Brian Dowdy's here. Man, N1C is here. Griffin Jones is here. Big E's Eggs. Catterday Knight is here. Man, I appreciate you guys so much. HKM Bellamine. Bill Bellamy, he's in the house. I appreciate you, HK Bellamine. And so let's go ahead and let's go. Okay, so Starbucks. Okay, so two things. Number one, let's just go ahead and let's take off the short put because obviously there's nothing to talk about here. I mean, I'm going to find 4.5 minutes. But once we get through the 4.5 minutes, it's over. Like, it's over, Johnny. The trade's done. And so we basically got everything there is to get out of this trade. I mean, even I can't find a way to mess this one up. We sold it for $2.30. Starbucks ripped on the number. It's now marking for 43 cents. There's 45 days to go in the strategy. There's no reason to leave this on anymore. If I leave it on, then I'm taking unlimited risk to the downside for an extra 43 cents. That doesn't make any sense when we've already made almost $2 on the trade. So again, it's not like I'm starting this trade from scratch. It's not like we just sat down and we're trying to crank out some chocolate chip, cookies with our Betty Crocker recipe and we're just getting started. Like, no, like these things are in the oven. They're about to come out. Like it's over. Like it's done. The hard work is indeed complete. So for the SPUX position here, let's close out of the put and then let's turn our attention to this little old covered call. So let's go to the short put. We right click, we close the position, 44 cents. Let's give it a shot. All right, we got filled. Okay, so there you go. There's your Starbucks winner. A beautiful, beautiful thing. And there you have it. Okay, so now the covered call. Okay. So just to bring you guys up to speed, just in case maybe, you're just finding the show for the first time, welcome aboard. I'm glad that you're here. I hope you stick around, whether it's my show or any of the other shows on the network. There's so much amazing programming to choose from. If you're an active trader and you want to take control of your portfolio in some way, shape, or form, man, you are in the right spot. And if it happens to involve derivatives, man, you are certainly in the right spot. So welcome aboard. I really hope you find value from my show or the other shows or what have you. And I'm always here to help however I can. So please let me know. It's absolutely my pleasure. This was a position I started in December of 2024. I bought shares in Starbucks and then I said, I'm like, hey, for the indefinite future, I didn't know we'd make it a year and a half necessarily, but this has been great. I said for the indefinite future, I'm going to hold the shares and I'm going to treat this like a long-term investor would treat shares in an individual stock, even shares in an index, that they want to do some things around the edges to maybe kind of boost their returns or control risk and just be a bit more active around, be a bit more active relative to just sitting and doing absolutely nothing. And so that's what we've done. We've sold a bunch of calls against this. We've done earnings trades. We've done a bunch of things. And it worked out pretty well. Like in December of last year, we actually worked out our basis on the trade. And we actually made, I think we turned like a 7% loser in the stock into like a 7% winner overall in the position or whatever. I can't remember the exact numbers. And I'm not going to rehash it all now because we spent the entire show on that. It was just me, you, and the Final Jeopardy pen. And we knocked it out in like 43 minutes. So I'm not going to do that again. But we've been doing this for a while. And so the goal here is to keep this position on. The goal is not to just let it go and let it float off into the ether. That's important to understand right here and right now. So right now, like I have my shares on, right? Like I've got my 100 shares and I've got my 100 short call against them. If you wanted to, you could just let it go. You could just let it float off into the ether. And if it expires in the money, the short call gets assigned. It takes away your shares. The position vanishes and you start over like new on Monday. That's always an option. And it's not usually a bad option because it means you made money on the position, at least in that cycle. And for us, that would be perfectly fine here too. But that's the easy way out, man. And this is Rocky IV. There's no easy way out. Like we got to take the hard path. Like we got to get the training montage going and we got to get after it. So that's exactly what we're going to do here. We're in the snow. Like we got logs. Like we're chopping wood by the fire. Like you guys know what I'm saying. And so that is 100% what we're going to do here. And so let's go ahead and let's take a look at the different things that we could do. So number one, you have an in the money covered call. The first thing that you always need to understand that you can do, well, the first thing is you can just let it go. So we've already addressed that. If you want to just get rid of the shares, you want to be done with it, it's been a good trade to you, whatever, you just kind of want to be done, just let it go. That's totally fine. There's nothing wrong with that. You made money, whatever. I mean, obviously, if you're underneath your basis and it's been a crazy position, you may have lost money if it's been like multiple cycles or whatever. But in our situation here, we would come out a big winner in the end, but I don't want to do that. The first thing you can do from an active standpoint, always remember that you can just roll the call out to the next cycle. So I can just take I didn't mean to close it. I can just roll this guy out to the June cycle. And you can see here, I don't want to do the weekly. Hold on. Let's do, there should be a monthly, right? Yeah, June 18. There you go. You can just roll it out to the next monthly cycle, or you could choose a weekly cycle if you want to, but just to make it simple, I'm just going to do the monthly guys right here. You can see all I'm doing is I'm picking it up from the current cycle. I'm dropping it out in a later cycle and then just calling it a day. And the great thing about doing this, the first gimme that you have to make sure that you understand is you're going to be compensated for doing this. It's no different in a lot of ways than the MES short call that we just rolled out. Now, it is very different in terms of directional bias and risk exposure and whatever. Like, I understand all that. But when you're just taking a short option and you're adding time to it, you're going to add extrinsic value to that position. And so because of that, this is always an option for you as a covered call holder. That's the first thing you need to understand. The second thing you need to understand, if you decide to do this, look at Starbucks at 105. Your short call is 100. Now, if you do this, I'm going to pick up another. If I do this, if someone does it, if one were to do this, I'll say I know. That's a lot more, that feels a lot more comfortable. If I do this, I'm going to pick up another $1.25. Where is that going to go? Well, it's going to go in my big pile of coins I've been collecting for the last year and a half, just like DuckTales, man. We're sitting on a huge pile of coins. Like it's at least $6-7. And so it's like, man, it just goes in that pile of coins, right? So that's kind of nice. Okay, that's a huge gimme. Here's another gimme. Another gimme is this. If Starbucks goes down, if Starbucks starts dropping, I essentially have insulation built from where Starbucks is now all the way down to my short strike. So effectively, all the way to expiration, I'm going to be covered from any drop in Starbucks from 105 to 100. Now, I say all the way to expiration because if Starbucks starts dropping like tomorrow, let's say, and it drops to 102 or 103, you're going to see some negative temporary P&Ls on that because the extrinsic values are moving around and you're not at expiration yet. But just understand you have a pretty high degree of insulation between where the stock price is now, 105, it's in the money, all the way down to your short strike. And so for us here, that's $5, which may not seem like a lot, but that's 5% of Starbucks' whole value. I mean, so that's actually a fairly significant move, right? So I get more extrinsic value to toss in my big pile of coins. That's gimme number one. Gimme number two, I'm protected all the way down to my short strike. Okay, two gimmies. There's got to be at least one gotcha, at least one. And here it is. Obviously, if Starbucks keeps ripping, right, if it keeps going higher, I'm not going to be able to participate in any of those gains. I'm not getting any of those gains, right, going all the way to expiration. Now, again, before expiration, if Starbucks does go higher, I may see a little bit of positive P&L because the delta on my shares is always going to exceed the delta on my short call at any moment before expiration. And so it will be at least temporarily positive for me prior to expiration. But just understand, just trying to put this in simple terms, I'm not going to be able to participate in any gains in Starbucks beyond this point, essentially. Again, I might be able to snag a few pennies around the corners, before expiration, but it's not going to be anything super duper significant. Okay, that's if I just rolled out and kept the strike the same. What if, though, I wanted to roll up? And I know this is a very common situation that a lot of covered call holders face. And so that's why I wanted to spend some time on this. What if I wanted to take my strike and roll it up? So I'm just going to examine one because we're already at the halfway mark of the show. And I do want to get to you guys, man, but I also want to spend time on this because this is important. What if I roll my strike all the way up to the 105 strike from the 100 strike? How does that change the situation? How does that change the dynamic? Well, it changes it quite significantly. So you can notice a couple of things. So number one, I've flipped from $1.25 credit to now it would be $1.90 debit. And, if you've been following Tasty for any length of time, you should immediately hesitate and kind of balk at a debit on a roll. Like, whoa, man, I don't want to do this. Maybe not. But let's actually think about what's going on. Let's examine what these numbers mean and what you might be getting in exchange for this and all of that. So number one, if I roll the strike up to the 105 strike, what am I doing? Well, I'm essentially rolling an in-the-money cover call to an at-the-money cover call. Generally speaking, right, just plucking out of a hat. If you had to choose between an in-the-money covered call or an at-the-money covered call on a position that's essentially been working for you, which would you choose? Everybody would choose the at-the-money covered call because you wouldn't be giving up as much intrinsic value, right? At the 100 strike where we are right now, I'm giving up, essentially $5 of intrinsic value. But if I roll up from the 100 strike to the 105 strike, I reclaim those $5 of intrinsic value. I recapture those $5 of intrinsic value, which is nice. That's really nice. That's a very significant gimme. And so when it comes to paying the debit on the strategy, don't immediately just hesitate and just cut rope and say, I'm not doing that. Think about what that means. I'm going to roll my strike up from the 100 level to the 105 level. It's still going to be just ever so slightly in the money by 7 cents or whatever. So it's basically at the money. I'm going to get back all 5 of those intrinsic value dollars that I'm otherwise missing out on right now. And to do that, I am basically having to pay about $3.20 because I flipped from $1.30 credit or whatever it was to $1.90 debit. So the differential there is $3.20. So in a lot of ways, the way I like to think about this, the intrinsic value is selling at a discount. right? The intrinsic value is selling at a little bit. It's kind of on the clearance rack. Maybe not clearance rack, but maybe like 20, 30% off, 40% off. We're not quite at like BOGO yet, but we're getting there. And so when you start thinking about, like what's happening, what you're getting in exchange for what you're paying, like keep in mind, there's a pretty significant gimme that you're able to acquire here if you do roll this up to the 105 strike. Now, what are some other things to consider? Well, a lot of this depends on, where do you think that Starbucks is going to go next? And nobody knows, obviously, but that's a big part of this, because if Starbucks keeps ripping, if Starbucks keeps going up to 106 and 108 and 110, then you're going to wish you were at the 105 strike and not the 100 strike. Because again, that intrinsic value that you recaptured will effectively be pretty safe. And you can essentially, put that guy in the bank. And then, buying that intrinsic value on a discount, so to speak, will be well worth it. But if Starbucks goes back down, if Starbucks retreats and goes back to 100 or 101 or 97, then, if you roll up to the 105 strike, then in a lot of ways, it'll kind of be like you wasted that, $1.85 debit, or you wasted that $3.20 differential, because you would have been better off had you not done that and just rolled out at the same strike. And so these are the types of things that you need to think about when you want to roll covered calls. Now, I am actually going to roll this guy up to the 105 strike because we haven't really done that yet. And this will give us a whole new horizon to consider when it comes to reconciling our basis and doing all those kinds of things. So let's go ahead. Let's roll this guy up to hopefully that explanation and the analysis of the gimmies and gotchas was at least marginally helpful for you guys. But it is my first day back from kind of like a faux vacation. I was basically just like cleaning up vomit and like grabbing trash buckets for 96 hours straight. Another reason why I'm so glad to be with you all. This is quite a change of pace from what I've been doing for the last 3-4 days. But let's go ahead and I wouldn't trade it for the world though, man. I really truly wouldn't. And so let's go ahead. Let's roll. Okay, so we paid $1.80 for the roll up on Starbucks, and yeah, there you go. So we did. We waxed poetic on that guy for about 14 minutes, I would say, and there you go. So, all right, where are you guys at, man? I see you guys in the house. Man, I appreciate you guys. Look at you guys here, man. Look at this stuff. I appreciate you guys. Joel James is here. Man, Jared Kramer is here. Man, I appreciate you guys so very much. Anyone C is here. Man, Harold Styles is here. E-Media is here. Can I surprise and delight somebody in the middle? I think I can. I see you guys also. I mean, Morrison is here laughing about jolts tomorrow. It's all made up. That's for sure. Whatever it is, we all know that. We can all agree that it's all made up. And so, where are we at though? Oh, here we go. Adam Armfield. Adam Armfield, will you be doing an AMD earnings trade today? AMD is today? Really? Are they today? I still have on a 440 call that I sold trying to get out of your last earnings put. Wait. You have a put or a call? Oh, wait. Okay. So you still have the short. Wait, you had the short put on from last earnings? Because that's paid off, just gangbusters in the last couple of weeks. And you sold a call against it to neutralize. So now you have a strangle on, I'm assuming, right? And so right now you're in a decent spot with, AMD at 340. If you're at 440. And so, yeah, let's get it. Let's do a little something. Is it today? Is that today or tomorrow? Hold on. I can't see. Is it today after the bell? Oh, it's tomorrow. Is it in the morning though? No, AMD's not. AMD's afternoon, right? I don't want to do this today. I mean, let's do it tomorrow. Obviously it's May 4th and May the 4th be with you, obviously. But I think AMD's not a morning. AMD's not a morning guy. That's a Johnson & Johnson play. That's a Pepsi play. That's a Goldman Sachs play. That's not AMD. AMD is going to be afternoon. So we'll do it tomorrow. I hope I'm not wrong about that. But yeah, we'll do it tomorrow. I see you guys. You guys are helping me out at the end. I appreciate you guys. Yeah. Daniel Perkins and or Denu, I appreciate you. I see Kay Bliss is here. What's going on there, Kay Bliss? I appreciate you. Trying to surprise and delight some new people. Kay Bliss, I don't recall you having been in the chat. And even though my whole family's been vomiting around me all day long and all night long, I've been keeping my blueberry intake is on point. It is 100% on point. So I appreciate you, Kay Bliss. Thanks for being here. But let's go back to the beginning. Man, where are we at? We're almost done with the show. How about that? That's crazy. It's so fast. You guys have no idea. I forget how fast it is. when I'm away for like even just a day. Like if I'm gone for like a day and I come back, I'm like, it's so fast. Like it's like boom and I'm done. Like it's crazy. It's like, you know, you do the first, second, third B minus joke and it's like pretty much over. Now you're going to the B minus outro and then you just send them on their way. And so it's pretty much like that. But Orgdenu is here. What's going on there, Orgdenu? Hello, Dr. Jim. You were dearly missed, man. I appreciate you so much. Shop has earnings tomorrow morning. Do you have any thoughts? Shop? Shopify? 127. They're in the morning. Okay. Man, I mean, they're still out there doing it. That's crazy. I don't know. Should we do something? I haven't traded Shopify in a really long time. I kind of think I want to do something. Okay, let's just do like a warm-up set, right? Because again, we've been off a little bit, and I mean, the main earnings season. Oh, I mean, we missed all the heavy hitters. I mean, I saw them like, you know, in a tertiary way. Because every once in a while I'd be like cleaning up some vomit. And I'm like, I really don't want to clean up this vomit. Let me see what the market's doing. Let me see what Apple's doing. Let me see what Amazon's doing, Meta, whatever. And so that was kind of nice. But I did miss like all the action. I saw, I can't remember. Some of them ripped and some of them dipped, and it's the same thing as it always is. But let's do a little Shopify to the upside. Or Daniel, I think let's just do a vertical spread, man. Nothing crazy. We'll just do a 125, 130 vertical spread. We'll save the butterflies for later in the week and stuff and just keep this guy kind of simple and straight-laced just because I want to get to as many of you guys as I can. But that's what I'm kind of thinking, Daniel. Again, this is what's great about earnings. You can just take a small shot. This is less than 1% of the account. This is almost a 0.5% of the account. It's like maybe 65 basis points or whatever. And so it's like you just take a little shot or you just pass. I mean, it's whatever. Just don't go crazy is always my opinion on earnings, because that's where you can really find yourself in the hurt locker. And Jeremy Renner won't even be able to save you if you find yourself in the hurt locker. Because, I mean, that was 15 years ago. And so 17 years ago. Wow, was it really 15, 17 years ago, the hurt locker? I think it was. Somebody give me a release date on the hurt locker. I think it was, I'm going to say, and I have no idea. I'm going to say it was 2011. So I'm going to say it was 15 years ago. Because I think I was married. I think Autumn and I were married when that movie came out. But I could be wrong. But Daniel Perkins is in the house. What's going on there, Daniel Perkins? Hey, Dr. Jim. I hope you enjoyed the trip to the Great Wolf Lodge. Yes, I appreciate you. It did not happen, but we're going to try to go back in, I think, August or September. So hopefully we can do that. I feel like I should let you know in the Cherries Discord, we are calling increment. Oh, man, this is it, man. This is why I'm here. This is so good. Guys, we're making a difference. So if you ever think that you're not making a difference, you are making a difference. We are making a difference. Listen to this. I feel like I should let you know in the Cherries Discord, this is, Daniel Perkins is in there, John Covington is in there, Emmett's in there, Archer Fire is in there, I think. I'm pretty sure. I might be wrong about that. I think that's right, though. And then obviously Ash Fan kind of runs that deal, and it's amazing. He says, are calling increments of $25 bonefish equivalent units, or BEUs. And this is, so we're making a difference. But this is how you make things tangible, right? And I like the fact that you did $25 increments, because you could do $50 increments, but a lot of times you're going to have to go by yourself. A lot of times no one will come with you. And so it makes a lot more sense for you to have a smaller increment on the BEU. It's kind of like having a micro contract. It's like, yeah, sure, it'd be great if we could all just trade minis left, right, and center, but we can't. Like a lot of us have to trade micros, and a lot of us will be dining at Bonefish by ourselves. And so it makes a lot of sense to to do the $25 BEU. That's some really, really good stuff. There, Daniel Perkins. Man, that's funny. Oh, that's great. Wolf is here. What's going on there, Wolf? I appreciate you. Grumpy Mike. Jim survived the alligator wrestling vacation. How about the kids? Yeah, nobody survived. Like I said, man, they're all down on the mat. I was the only one. And I'm just waiting for the shoe to drop. Because these stomach things, man, like they're crazy. Like the time release on these guys, like you'll be fine and then you'll be not fine. But then like it'll hit people at different times. Like people with small kids, whether you have them now or you've had them before, you know exactly what I'm talking about. Like it'll hit like, one of your kids, and then it'll wait like 96 hours or longer, and then hit the second one. And then it's like, okay, like the chain continues, like the experiment goes on. And so hopefully I'll be all right, but I don't know. Sam L is here. What's going on there, Sam L? Doc is back. I'm really just here for the water park stories and maybe a little market commentary. No water park stories, lots of vomiting stories, and a little bit of market commentary for you. And so I appreciate you so much. Look at N1C is here. Welcome back. I appreciate you. A Wills, what is up, A Wills? Give my best to Mrs. A Wills. Dr. Jim, I'm glad you survived the Great Wolf Law. It's not an easy thing to do. Yeah, we didn't even go. That's how we survived it. And so, Samuel says, Doc, I figured out the blocked of the blocked. Hormuz is closed, but the strait is still open. Yeah, that's right. I can't even keep up, man. I don't even pay attention to it anymore because it's all made up. It's all just made up, man. Like, and by that, I mean, it's very, very real for a lot of people. But from my vantage point, it looks pretty made up. And so point B says, point B, I thought that was Autumn texting me. That's funny. Point B says, welcome back, Dr. J. The Great Wolf Lodge riding water slides and you come back to a market. Hope Autumn and the family had a blast. We missed you, but we survived. Yes, thank you guys for keeping it above zero. Good job there, Point B. I really, really appreciate you. The chat needs you, says Point B. Yes, we're doing our best. We're doing our best to get to as many people as we can. I think we've actually exceeded the expected move so far, so that's good. Griffin Jones for the algo. There it is. There it is. I appreciate you. Point B. Doc, GLD is sitting at 414 and I'm in trouble on my May 15th 455 440 put spread. Deep in the money on the short side. I'm looking at rolling the whole spread out to June. Same strikes for $1.68 debit. Don't do it. Is paying that debit to buy 34 more days the right move here, or am I just throwing good money? Yeah. You know, I don't love it. I don't love it. Now, it's $15 wide, so you've got a pretty, like if it was $5 wide or whatever, definitely don't do it because that just doesn't make sense from a risk return standpoint. But, you're paying another $1.60 for another month plus of time to bring a $15 wide put spread back. I wouldn't completely dismiss it, but I don't really love it. Assuming that, if your position sizing is in check, and you've sized it such that it's 1 to 3% of your account or whatever, and you're like, hey, you probably collected about $5 on that guy, so you've got $10 of risk. And so it's like, hey, I mean, if you have to eat the loss of the $10 of risk, if it ends up being 1 or 2% of your account or whatever, that's just the way that it goes. And I would hate to see you, kind of, dip back into the cookie jar and get caught again. Like, don't get me wrong, there's a time and a place for adding tranches and adding risk and all those kinds of things. But I personally don't think that defined risk is the way to do that. As backwards and as ironic as that may sound, I actually think things that are undefined risk, it's going to make a lot more sense to go down that road. And the reason why is simply because if you were to layer on, additional tranches or additional risk or whatever, or what have you, but you have undefined risk, but you have a smoother pathway forward. If you get the move that you want, then you can get paid back fairly quickly and you can be out of the position much more efficiently. But because you're still going to be in a defined risk position, you're going to kind of be stuck in the mud. And that's sort of what you're signing up for with defined risk. I mean, that is actually, that's not sort of, that is 100% what you're signing up for with defined risk. Right? I mean, you're defining the risk. That's a huge gimme. But one of the big gotchas is it's just going to move a lot more slowly. And so you can roll it out and you can add the risk and what have you. I don't personally love it. If it was more like 50 or 60 cents, I think it would be an easier decision. But $1.60 is not super insignificant, in my humble opinion. So I probably wouldn't do it. A. Wills is here. Palantir earnings tonight. Palantir? I'm not trading Palantir. Which side is the butterfly going on? Yeah, no Palantir tonight. Which is, I mean, that you're kind of playing with fire, not trading Palantir, because they're listening. They're listening to me. They're listening to my words. They're listening to your thoughts. And so we probably should trade Palantir to the upside, of course. We love Palantir here on the show. But yeah, maybe not tonight. So Samuel, Big Brother Palantir earnings tonight. That's correct. They already know the results. We're just waiting for the reveal. That's true. That's very, very true. Wolf, how many Diet Pepsis did you crush during the vacay? I didn't crush any during the vacay, but I did up my Diet Pepsi intake just here at the house. Like just here at the house. And it's so funny that you bring that up. There are very strict rules in the house. Like no one is allowed to touch my Diet Pepsi in the outside fridge. I'm not making this up. Like if they go out there and they move around Diet Pepsis or they take my inventory out of the fridge, they have to replace it. You have to replenish it because I don't like putting warm Diet Pepsi into a glass of ice because it waters down the perfect chemically balanced deliciousness that's already in the Diet Pepsi can. So I like to go just straight cold out of the fridge, but people take them all the time. Like we have friends coming by drinking my Diet Pepsi. Like my mother-in-law loves my Diet Pepsi. Guys, don't you dare rat me out. But I do not love that. I do not love that at all. And she will not replace them. She won't put them back. And I'm like, Mary, I gotta give Mary a talking to, man. I really need to do that. But that'll be our little secret. I'll let you guys know how that guy plays out. But thank you there, Wolf. Sebastian is here. What's going on there, Sebastian? RML is here. What is up? There's HKM. What's up, HKM? I appreciate you. Ron Bashar, shipping containers for the Alco. Yeah, this morning with Nick and Tony, like we're trading Israeli shipping containers now. Like the market's not enough. Like even the S&P is not enough. NASDAQ not enough. Like silver craziness not enough. Oil craziness not enough. Man, what are shipping containers doing today? Like, can somebody give me a price on an Israeli shipping container? Like, that's what I need to know. And I don't need the futures curve. I need the spot market. I need to know if I wanted a shipping container in my driveway now, what am I paying? What am I paying out the door? That's what I need to know. And yeah, it's crazy, man. We've really fallen from grace. I'll tell you that. Brian Ratkin is here. What is up? Ash Finn is here. What is up? Griffin Jones, measles. No, it's some kind of stomach deal. And so we'll see. Oh, Pat, I see Daniel Perkins, Patient Zero at Great Wolf Loss. No, Autumn wouldn't do it. She wouldn't take us. And so my hat's off to her for that. Finance account is here. It's great to see you, Doc. Always lovely to join you on the show, man. I appreciate you being here so much, so very much. There's Brian Ratkin. Grumpy Mike is back. Mr. Pillows is here. Man, I see you guys, but I'm out of time. I can't believe it. Man, I cannot believe it. But I see you guys. LS Home Automation. Man, I see Grumpy Mike is back. Sam L. Viggy Zags is here. Mike Evans is here. Look at KG in the house. Man, Jason is here. I appreciate you guys so much, but I got to go and get you guys to Tim. Man, it feels good to be back. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I am jschultz at tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Hey, everybody. Happy Monday to you. Tim Knight here, and we are going to catch up with charts together. It looks like there's some more nastiness. I'm not quite sure what's going on in the Middle East, so that's got things a little bit red. Nothing huge. We're still lingering near lifetime highs, and on an intraday basis, there are lifetime highs all over the place. And this is really our last chance for Bitcoin to turn. That it's kind of put up or shut up time for Bitcoin in terms of any prospect of following its analog and of turning south. And we'll look at that closely. I'm keeping things light. This is a maddening market. Just today alone has been a wild roller coaster ride. And I'm keeping things light. This is a pretty inscrutable market in a lot of ways. And the nature of lifetime highs is that it's really hard to tell what's next because highs tend to beget new highs until they stop. And that's not much to go on. But there are some bits of clarity here and there, so let's thumb through and see what we can divine from what we can see. So let's jump in. We'll begin with a spider. And here's kind of a longish term one going back a couple of years. And we can see the two rectangles there. The left one representing the pre-Liberation Day tumble. That was a nice, fun, very clean trade market. We had our classic top, drop, retrace, and plunge. And then, as I've said over and over again, we had another beautiful top here. We're at a top, drop, retrace, and then don't plunge at all. Just keep going to lifetime highs. And so there we have it. The intraday lifetime high was on Friday. We have been red pretty much all day long on the spider, but really just kind of grinding around in the upper portions of where we were last Thursday. So really not much going on with that. We're down 1/3% today. The diamonds are down a little more heartily. In fact, the diamonds have been especially weak all through the night. Even when everything else was green, the /YM, the futures for the Dow, kept staying red. And as it is now, the ES, the NQ, the RTY, they're all down fractionally. I mean, the NQ is down all of 0.19%, whereas the Dow has actually managed a full basis point, actually no more than that, it's managed a full 105 basis points off. So there we have it. That's actually underperforming both longer term in as much as we did not achieve a lifetime high, and shorter term in as much as we've been persistently weaker than the other items out there. The small caps, IWM, was very strong earlier today, lifetime high on an intraday basis, but we're down now by about 0.5%. And so we've spent more than 10 days just grinding around in this range here after this leap we made. Last week, the low on Wednesday sealed up that gap nice and neat. And until such time we crack below that line, that is support. And it proved itself quite strongly last week. As it is now, it's just spinning wheels. What has been a little cleaner trade, we've talked about pretty much on a daily basis, has been EFA. I always talk about avoiding the domestic stuff for myself on the ETFs. So the EFA has done a number of good things for the one or two surviving bears out there. One, it has not attempted lifetime highs. Two, it has obeyed its broken pattern beautifully. This smashed wedge, it broke below it, and even at its most powerful, all it did was tag the broken trend line above it, and then it resumed going down. So right now we're down 1.37%, which relative to the rest of the market is a horrendous historic crash. And it's just behaving itself beautifully. So it's going quite well. Getting back closer to home, on the cubes, down all of 1/5% right now. There's our long range. There's our total V fake out right there, which completely negated the breakdown from the rectangle with this gap. Just went blasting higher here on, I think the magical day was April 7. That April 7 wrecked everything. And as I've said before, there's a lot of symmetry there because April 7, 2025 and April 7, 2026 both killed the bears. And it has been pushing higher ever since. On an intraday basis, yet another lifetime high today. Although it is, as I said, off just a teeny little bit right now, undoing some of the gains from Friday. And there are some individual stocks that just, they're absurd. I mean, it's just like straight up, no looking back. There will come a day that they stop, but I do not go anywhere near stuff like this. It's very much a game of musical chairs for bulls and for the bulls in particular. So here's Seagate, STX, up 13.44 today, and it's been a winner for a while here, as you can see, for well more than a year, barely a downtick in sight. Another example, quite extreme, is AXTI, which is AXT Incorporated, and they have gone up an eye-popping amount. So as we look at the left side of the chart, It's like $1, probably a penny stock, basically. Let's just call it $1. And now we're approaching 100 times that amount. So whatever they're doing right, and it just feeds on itself. It is just the virtuous cycle of price ascent. And I pity anybody who tried to get in front of this thing on the short side. I'm pleased to say I did not, because it just chewing anybody who defies it into hamburger. It's absolutely crazy. Look at that. As we back away, you can see just how sharp and merciless this thing is in its ascent. So quite the sight, and interesting when looked at from a very safe distance. Over with semiconductors, SMH, this is managing to be down a little bit, 0.6%. I had cried uncle on my position on Friday, but I re-entered today with an in-the-money September put, $520 put. And it's a little profitable so far, but I would hope that it's got a lot farther to go than this little down tick. It's very similar, obviously, as the cube setup with respect to what had been looking like a top. It broke it beautifully here and then just flipped right around in a U-turn and blasted higher. So intraday, once again, lifetime high today, but we have sunk away to some degree. Individual components within that, it's kind of a mixed bag. I mean, we look at AMD, pretty hard reversal today, over a 5% drop, erasing Friday and Thursday's gains from last week. So really the biggest red bar we've seen in this entire rally for AMD. So pretty big deal. Although Micron, MU, is having none of it. It is at a lifetime high. It is up 6.5% approximately. And I noticed, even though I talk about, we're past the earnings season, it's all going to be boring now. It's not really true. There's actually quite a few, especially semiconductor companies reporting this week. And if my calendar is correct here, it looks like Palantir reports this afternoon. I always, you can almost hear the asterisk whenever I talk about earnings calendar dates because they are famously erroneous. I try very hard to get accurate ones, so that I believe is happening. But Micron's up big time, and then NVIDIA is close to unchanged, but this definitely was a failed bullish breakout. It tried once and then just eroded away from then. So kind of interesting. NVIDIA being kind of a dog in the semiconductor group in sharp contrast to Micron, which is just storming the castle at this point. And NVIDIA's earnings are in a few weeks, and that'll obviously be a very big deal when the time comes. One idea I offered up on Friday that worked out very well was related to gold. And it does seem counterintuitive that war and geopolitical uncertainty and such would not compel gold to fly higher. But what the chart indicated to me was that we were going to re-weaken away from the strength we'd seen on Thursday and on Friday. So we're down about $112 on gold now, and I think it's got plenty more to go. As I said last week, I think 4,000 is a very reasonable target for this drop. And so we're down on the futures 2.4%. The specific chart that I had taken note of with the price gap was GLD, which tends to be gappier than the futures. But here's GLD. This was the, as you may recall from Friday, this was the stop loss. And we had a cute little shooting star here, but that gap was nice and neat. And so we've tumbled away from that. And as I say, I think it's got plenty more opportunity to sink from there. Over on the short side, as I'm glancing at my short positions, they're all down with a couple of exceptions. CNC is up a little bit. HPQ is up a little bit. And then RGTI is up less than 1% as well. Otherwise, they're red. Here's a few. There's, once again, AST Space Mobile. It's doing quite well. You can see pretty persistently dropping there. Not many exceptions. So this one's down 3.73%. And I've mentioned that pretty much every day because it's doing nicely. Carvana, CVNA, another drop there, a little more than 1%. INFY, which is my best percentage gainer on the shorts, and this is down about 1.8%. RCL, that is Royal Caribbean, which is off about 2.71%, perhaps partly because of the hantavirus they found, not with Royal, but with another much smaller cruise operator. And ADMA, which is just a beautiful chart here. Back away from that, you can see that just dynamite head and shoulders pattern. We had the picture perfect top. This absolutely textbook. Big plunge, retrace. It couldn't even get back to the neckline. That sort of shows innately how weak the stock is. And then since its failure to do so, has been slipping away from there. So that's a beauty. And then GE, which is GE Aerospace, down today over 2%. And it's starting to kind of get close to what could be a nice completion of this top. Not bad. It's a little sloppy, nothing like ADMA, but it's not terrible either. So it's heading in the right direction. As I said earlier, because Bitcoin is really toying with my heart here. It's strong. It is up. The future's up almost $1,500 right now. And as I said on Friday, I semi-cried uncle because I got rid of half of my short position. And over the weekend, and particularly Sunday night, Bitcoin just started flying. It was up thousands of dollars. That's not great, but the only sliver of good news at this point for anybody who's bearish on Bitcoin is that it did not violate the gap. The gap, for the moment, is still intact. You can see right there. I mean, it is extremely close. There's the gap right there, the low for that day. There's the high today. And it's a perfect seal. And if it keeps going higher, forget it. I will be out of there. On the other hand, let's just look at a little science fiction-y here. Let's just say today's intraday high was it. Let's say that was the peak, and we do start slipping away and the gap isn't violated. Yay. That's how it's supposed to work. It's been a little nerve-wracking dealing with it, but if indeed the gap holds, then cool. I'll be mentioning it on a daily basis, how awesome that was. But we're not going to do anything even approximating a victory lap right now because, you know, an hour from now it could go flying right by that gap. So we're going to wait a little bit. But I'm still half position on that. I really want to see something resembling a breakdown before I push back in again. Another thing that very few people, I don't see anybody talking about, but it's got to be heated here is bonds. Here's TLT down about 0.75%, slipping to this is the lowest level it's been since, good Lord, you know, last summer. This is not good. The nation is approaching $40 trillion in debt. That'll be our 250th celebration for the country, $40 trillion debt burden. The higher the interest rates goes, the more oppressive and suffocating it'll be for the nation's financial health. This is, you know, there's no interpretation here. Bonds are falling, interest rates are rising, period. And that's why, for example, XHB, which is the home builder ETF, is down about 20% over the past few months. How many sectors can you say that about? Down 20%. Whether you look at Home Depot or really one of my favorite shorts right now, LEN, Lennar. LEN is down almost 5% today, and it is a honey of a pattern. I've got January 2027 puts on this. They're up about 15% or so far, but I have much bigger hopes than that for the profit on that. So that is a beautiful pattern. Falling bonds, rising interest rates, falling home builders, and associated industries. I think that's what's in store. And in sum, as our last chart, there's the ZB, there's the bonds. Break that, complete that top, and that's going to be very big news. We're getting close. Okay, that's it. I will see you here tomorrow. And thanks as always for swinging by. Bye-bye.
first thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20 because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23 because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Jamal, my friend, we are back for the last call, and we've got another kind of mad day here. E-mini S&P 500 futures down 29. They got as low as 71.99, so about 30 handles lower from here. It's one of the bigger pullbacks we've seen in quite some time, but looks like most of that has been already reversed here. NASDAQ only down 46. It's been the strongest of the group. The Dow down 584, the weakest of the group, of a little over 1%. And the Russell down 15. Surprising strength from the Russell despite the move in bonds, which are trading 112.09 at the around the lows. They got to 112 on the dot, down almost a full point here. Oil has caught a bid /CL 105.16, got as high as 107.46, so a little bit higher from here. All sorts of stuff happening in the straight today. Volatility futures, though, it's something, not that much. 1995 here, up 26 ticks here, a little over 1%, a little bit of a bid in volatility, 2065, the high of the session. Gold and silver both getting whacked today. Gold's down 111, silver down $3. Bitcoin staging a nice little rally here above 80K for the first time in quite some time here. Spot at 80,300. Ethereum as well, down about 1%, but near the higher end of where it's been trading. What say you about today's market? Much to do about nothing, or is this something? Are we were chatting a little bit about commodities. You're looking at oil. Wheat has been crazy to the upside. I know Vecchio has been talking about that. Of course, oil is kind of the story of the group. Natty gas has been relatively strong over the last couple sessions here. What are you thinking?
Yeah, it feels like there's a little something getting started in the, well, obviously there's already something started in the energy, but in the grains area, seems like something's getting started in there. I mean, we know about the whole fertilizer situation in the Strait, and it seems as though they're starting to move ever so higher more recently in some of these grains, particularly corn and wheat. So
Yeah.
I did put a play on there late last week, got some calendars and corn and wheat. Nat gas, which has been like
dead,
has really bounced in the last 3 trading sessions. I'm glad I put on a call spread in there. So those are probably some of the more interesting trades. For me, I kind of de-risked a little bit today. I had a in the money gold call spread. It was an adjustment that I had made on Iron Condor, and it was in the 98-100, and I had just kind of decided to close that for a loss. I feel like I could express the opinion in a better way, and I did. I found in MCL, I ended up doing a wider strangle. I don't have to deal with this in the money.
Size it down a little bit.
Yeah, and it was nearer term. So the thing that I'd had on so long, and it's May, and it's like 10 days to go. I don't feel like dealing with that, and I don't think oil's going to be under 100 in 10 days. Really don't. So that was probably a smart thing to do. Same thing with gold. That was further downside, and also was an Iron Condor at one point in time, and it's now just a short put spread. I decided to close that thing because gold's looking ugly, as you mentioned. Gold and silver have had a rough go of it in this environment where inflation is heading back up and the dollar's heading back higher. So that's I think those are the bigger things that played out today. And Bitcoin. A lot of things with currencies in a way, but currencies, if you will. But Bitcoin, strong, above 80. I mean, not strong move. It's only up 2%. I mean, that's solid, actually. I mean, I think we still have in this thing in our mind of it should be up like 5 or 10%. You know what I mean?
That's the
old Bitcoin. That's the old Bitcoin.
Oh, now this is mature Bitcoin.
It's mature, and it's got these ETFs, and
this is like Bitcoin's like Berkshire Hathaway now. It just goes up like a tiny bit every day.
Well, it's not that old yet. It's more
not
like
that old.
It's like a teenager to 20-something.
Yeah,
you know what I mean?
Yeah.
Like it's
a Coca-Cola. It's a Coca-Cola.
Well, that's kind of old too.
Old.
That's Grandpa as well.
Yeah.
No, that's Gramp. That's Unc. You know
that is Unc.
But yeah, I mean, I don't know. It is kind of a nothing day though. It's kind of. I mean, we got 1.4 million in volume in the ES, but I guess it's a needed nothing day. Honestly, I think these are good days. These give you the time to sort of rearrange a few things if you needed to before more craziness comes at some point. But I was thinking. We didn't have much this week, but we got a jobs report on Friday, don't we?
I believe so.
First of the month.
Yeah, we have a handful of earnings too. I'll get through those as well. But I know we have a couple things this week. I know we had like ISM on there, a couple Fed chairs speaking tomorrow. Employment towards the end of the week. You have a couple of Fed speakers on Wednesday as well. I don't know if I buy that any of those things really matter at this point. I think it's more kind of momentum and the oil situation, the Iran situation. I think that's kind of still front and center, but who knows? Maybe those have some sort of surprise there. I will say to that point, tons of the stuff that is moving today is the momentum names. If you look at just the high option volume list, I mean, you have some of the crypto stuff like Circle is up there. Coinbase has been on the list, but you've got, SanDisk up another 75 today.
Yeah.
MBIS is up 25. AXTI, one of the photonics, glass, something or other, it's moving higher. You have CoreWeave in there. You've got Micron. Coinbase is one of the other ones in there. DRAM, which is just a DRAM. Which is a memory-related ETF. It's still that kind of story playing out. Surprisingly, on the other side of that, the big names, if you look at like SMH just in general, SMH is actually down on the session today. Down about $2 and change. First down tick I think I've seen in my lifetime.
AMD and Intel are down. I assume they're in there, right?
AMD is the 5th biggest weighting in the SMH ETF, down about 5%, has earnings coming up here tomorrow after the close, so that'll certainly have an effect there. But NVIDIA, the biggest of the group, basically unchanged. It was down $2 or $3 at one point today, got down to 194. Kind of a interesting part of the market. SMH semis have really led the way. NVIDIA, the biggest cohort of the group, got to a new all-time high last week, coming off, a little bit from highs. It's an interesting dynamic there that you get. Everybody's kind of going to the momentum section of that market. It seems like not so much the big boys.
I know, a little bit surprising to see that down. I mean, it's 4 sessions in a row. A little bit surprising to see Intel and SMH and AMD down, even though you got these other big names like SanDisk.
It's 10% from all time from the highs. Is that that's a correction?
Yeah, exactly.
10% is a correction.
20% is correction, I think.
20%
right?
is bear market.
Yeah, 20% is bear market. You're right. Yeah,
so
is correction. Yes.
So we're not quite in a bear market yet in Nvidia after 4 sessions, but we are in a correction.
Oh gosh, it's scary now, isn't it? Yeah, it's kind of quiet here. Heading. I wonder if so we got Palantir after the close.
Yes. So today you've got a handful of names. So after today and into tomorrow morning. So after the close, you have Palantir, which is probably the biggest of the group. You have onsemi, Duolingo, which I don't really think anybody's trading much of. VRT, Vertex Pharmaceutical in there. And then tomorrow morning, you got a couple more tradable names. Shop is in there. You have PayPal. You have Pfizer. CCJ, I did a position in CCJ if you want to get into the uranium names. So there are a handful of names, but Palantir for sure the biggest of the group.
So if what
are you doing in Palantir first?
I didn't add anything. I have on this Super Bowl trade I've had on for a while. It's out in June, and I'm not changing anything. I mean, I've changed it around since I've had it, but I've had it on for a while. I'm not changing anything.
Is Michael Burry going to be correct on Palantir?
Why would he say?
Didn't he buy like the 50 strike puts or something? He did the Palantir and Nvidia. Those are the two.
Well, look, again, we've seen some of those put buys recently in some of these software names. We've seen the weakness in software, right? And that's been, that they still haven't really returned. We saw Microsoft fall on earnings, so that's really what I was about to get at. I mean, if this earnings cycle has been any guide, and if you followed some of the names, like we talked about Intel, well, Texan before that had a huge earnings move. Big upside move. It seemed like Intel was going to do the same thing, and it did. And it seemed like Qualcomm probably had a chance to do the same thing, and it did. I still think AMD is possibly going to do that, especially after today with the setup moving the downside. So I'm playing it for calendar calls. So that being said,
you think AMD's to the upside after the move we've had?
I don't see any reason not to play it to the upside. Again, being small and risk defined, but why wouldn't you? When I just named off all the names in the group that went up on earnings. I know it's already crazy.
I mean, you look at this and you say, I'm buying. Oof.
That's why I do calendar calls. I wouldn't do like anything meaty. You know what I mean? But
I'm with you on that.
Just going along with what we've seen in the industry, right? Like I feel like this time around more than usual, we have seen a lot of the same names in the industries do similar things on earnings. That being the case, as much as I'm long Palantir, I think it's going to go down on earnings. Because if you base that on what happened with Microsoft went down.
Yeah.
I imagine this is going to go down on earnings, I think. Again, I got a long position, but I'm prepared. So if I had this long position further closer in time, I'd probably take it off and wouldn't ride it through earnings. But I'm in June. I'm just going to ride it through earnings and see what happens. Because again, Microsoft went down, even though it did go back up the next day, not as much, and even was up higher today and then faded at some point. So I think software is still kind of struggling for direction. And I think we're going to see that with Palantir.
Palantir, though, has the crazy founder. Nobody knows really what they're doing, but they're involved in military stuff. So you careful there too. I have an upside skewed play, but I too am kind of wary of I have risk on the tail side of the upside. I did a 1x3 crab trade, so I'm selling a lot of that front volatility. So I'm long the 150 call in June. I sold 3 of the 165s against it. I did it for a net $5 debit. So I've got risk above 170 is roughly where my risk starts in the near term, but minimal risk to the downside because I'm paying $5 for this spread. If we open lower, the short calls go to zero. I'm basically just long a June call at the 150 strike at $5. So minimal downside risk with a little bit of a kicker if we go inside the expected move really to either direction. That's how I'm playing that. And then I got long a little bit of CCJ here. I've had some success to the upside here. Uranium is kind of in focus here. Energy in general has been in focus. So I feel like that's a cheap way to play the upside. You do a diagonal spread. You could go like, 120, 125. If you're using the May weekly, I did it 1x2. So I'm selling a little extra juice on the upside, but something like that where you're doing a 5 or 10 point wide diagonal spread into earnings, kind of play into that higher volatility. But yeah, we'll see into tomorrow morning.
What was the other one tomorrow morning? There was another one that's possibly,
Shopify and PayPal.
Shopify is possibly interesting. That's the one. Yeah. That one can be interesting on earnings. We'll see what goes on there.
Yeah.
I mean, you know me. I like to play like liquid movers on earnings. That's how I like to roll. So
Shopify's a mover
for sure. It's definitely a mover,
and it has been caught up in the software service debacle. It's kind of in that space. I guess kind of, sort of.
No, it is. Yeah, it is. I know you wonder what's going to happen here. See, now you just stopped me from doing it. I was going to play upside. Now I'm worried. No. Actually, it's a cheap way to play upside. I'm doing it.
There's so much vol there. I mean,
there is.
You can play it to the.
The only question is, do I want my longs to be in June? Do I want to give it some time, or do I just want to go 11-day, 4-day? I guess I'll go 11-day, 4-day.
Yeah, you could do something.
I did one of these earlier, but I didn't in a different account. Let's go with the one.
Yeah, I was looking at like the 135, 145. I mean, you could put that on the 11-day, 4-day for $3.
Yeah.
That's a cheapie. It's 10 points wide. It's more all or nothing, though. That's the one caveat here is if you open 10 points lower, you lose your $300. But you open 10 points higher and you make 500.
I'm going 4-day, 11-day, and I'm just going calendar spreads. They're all under $1. 140, the 145, 150. Oh, I can do two of these. It's easy. I can put on some exposure for less than $500 in premium. It's easy.
I did it kind of like I did CCJ, but I'm going to do this the 11-day, 4-day. I think that's an interesting trade. I bought the 130 in the 11-day. I sold 2 of the 145s in the weekly. So I've got some upside risk above like 150-ish. But it's an upside play, neutral to bullish.
Like it.
$3.32 debit. So
you can have a lot of fun for $3.32.
That's what I'm saying. It's like you can have a lot of fun for $300.
You know what I mean?
I've spent $300.
Oh my God.
$300 on a lot of other fun things.
It's
pretty cheap.
Yeah.
So this is no problem.
Yeah.
This sounds perfect.
I think that's the thing. Like, we talk about collecting premium all the time, but like, seriously, like, I've definitely had plenty of times where I put on, especially earnings trades, and I think about it in terms of premium, honestly.
Yeah.
Like, I can live with like losing the $300 on it. Like, it's fine. Like, I think that's the way people got
the $3,000. That's when
that's yeah. Well, once you get above 1,000, you got to start thinking like, okay, this is gonna be a hit. You know what I mean? Like that's the same thing in real life too.
Yeah, yeah, for sure.
Like it's gonna be a hit.
I know. I think for earnings, especially if you're not, if you don't have a bone to pick and you're in kind of a smaller mid-size account, I think it's hard to look at a strangle and be like, oh yeah, that's the risk reward I want. Like I don't want the tail risk. It's just if I was trading this big enough to where I could roll this and manage it, or if it's like a Microsoft or a Meta, a stock that that's really liquid, that you can roll and adjust and do all that stuff, then I'm fine with it. But, Shopify or CCJ, where it's not something I'm trading all the time, I don't want to be stuck in this for months.
Yes.
So it's like,
and you're just looking at it and it's sitting in the portfolio.
I'd rather lose the $300 than have the $3,000 of tail risk.
I still got RSX in my portfolio. Can I get this thing out of here?
That is, we should probably look into that. I don't think you're getting your money back on RSX.
I'm not, and that's fine, but I just don't even want to look at it anymore.
I know.
And I can't not like look at stocks because I got some stock position. I got an IBIT stock position. I got another stock position in here too or something. I just want it out of my sheets. I just want it off.
I will talk to the powers that be.
I mean, imagine breaking up with the girl and she's like still showing up somehow. You still see her all the time.
Well, if you do get divorced, you'll have to split that too, which will be probably more costly than just giving it away. So that too. That's another reason to get rid of it.
Yeah. I just don't want to. I'm tired of seeing it. There's nothing I can do about it. It's just there. It just is painful. It takes me back to 2022. I don't want to think about 2022.
Crazy. That was a wild one. That was a wild one.
It wasn't good.
Yes. As we get into the close here, E-minis down 33, not really moving all that much. NASDAQ down 71, the Dow down 597. It's the weakest of the group. I think CAT was probably the biggest mover in that.
Wait, it's still moving?
In that index. So the Dow is price weighted. So Goldman Sachs, Caterpillar, Microsoft, those are going to be your three biggest components in the index. Just because of the price, they are all down pretty decently here. You got Amgen in there as well. So a couple names kind of pulling the group down there. I did want to throw out, first of all, the PDT rule 1 month from today. May the 4th be with you. May June 4th be your independence from the shackles of PDT. So you can get
glorious.
It's going to be glorious. It's going to be amazing. And I am scheming up some insane things. I cannot talk about them now, but something was in the water today. We might have some interesting stuff coming. So you could scan that, get a little bit more info on the PDT rule and it being done with. We also have a great promo running in the PDT realm. Of course, we have a little bit of a commission rebate. So for those of you who are looking to do some zero DTE trading that have been stuck in PDT, that, trade stock, anything like that, we've got a good one for you here. So you get 200% back on your commissions through this code here. So you can scan that, get that for 30 days, which if you do it, you should open up the account whenever you can. But if you do it now, as soon as it launches, PDT is done, or as soon as this is, you'll incorporate the PDT end date into your account. So open up an account as soon as possible.
Yeah.
It's coming.
Good stuff, man. It's an exciting time.
It's an exciting time. It really is. I mean, the PDT stuff is going to be such a huge lift for everybody. It's going to be like a breath of fresh air.
Yeah.
I know the trade desk is excited to not have to talk about, is this a day trade? Is it not a day trade? Good faith violations, all that stuff goes away.
Yeah.
It's going to be fantastic.
I mean, I think the thing that probably, one of the things that annoyed me the most, I didn't know this. You told me this is like a year or two ago, like the situation where a PDT could have happened like 3 years prior, but it would still be on like your account. I mean,
it follows you forever.
That seemed kind of ridiculous.
Ridiculous.
Anyway, it's gone. It's going.
It's going.
Not gone yet. June 4th. 1 month.
Yes, put it in your calendars. We're going to have great content towards more quick trading. We have a whole bunch of stuff. I'm cooking up some stuff for SPX specific. Like comparing being able to hold versus being able to trade versus having to hold trades. How much slippage you're giving up over time, because the problem with PDT was like you had to hold it because then you get dinged for a trade. So
I know. I think I probably shouldn't say this. Hell, I think SIBO is not going to be that happy because people are probably going to trade a lot more SPY again because now you can get in and out.
Oh,
I think one of the big things they had over them was the ability to, I mean, it's cash settled, and that's still great. I mean, that's a great thing, but like the price point, I mean, let's be honest, like those are a lot meatier than a SPY call, right?
Yeah, it's 10 times the size.
You know what I'm saying? So I think people are going to be trading those a little bit more now, SPYs and Qs, things like that. Again, I think just the notional value, if you want to do big, if you want to get bigger money, sometimes the notional value will allow you to do that SPX and NDX. But obviously, I mean, now that people can get in and out, it's going to be a lot easier to do that in SPYs and Qs. It will be.
Well,
and IWMs and
I'm sure we'll have a flurry of new option listings as well. I mean, I would think that 0-day options are going to be across the board. I mean, you have some of them in like your Apples, Teslas, NVIDIA. I'm sure that'll broaden out. I know that's not CBOE or SIBO specifically, but
And I think that's what's dope about like us and what we can do and talk about and all these things. Like, you want to find ways to be able to like offset your cost basis by selling, you know, a little upside while you have like do June, but versus some weeklies, or, you know, we got the Monday, Wednesday, whatever weeklies now, and some of those, like, you want to be able to like sell those against longs that are further out, whether it's calendar spreads or diagonals. I think those are like some of the better trades for those.
For sure.
Take advantage of like that, the pricing in some of these weeklies, man. AMD is falling into the close here.
Oh, good. I need it down. AMD down 19 here. What are some of these memory stocks?
Is it the only one, or is it? All right, so when I look at the heat map today, man, it's kind of weird. It's definitely a lot of. It's kind of weird. It's kind of confusing.
It's very momentum.
There's a lot of red. Yeah, there's a lot of red. I mean, overall, the main green I see is in the software space, which is funny.
Mm-hmm.
Software is up today. Oracle and Palantir and Now and Intuit. Amazon is up, but there's a lot of like. I feel like this.
Amazon was up like $8 or $9 at one point.
This feels kind of inflation related, you know, like when you see some of the names that are down today. Walmart's down and Home Depot and like all of those things. And it's kind of weird. It's kind of a weird day. It feels like there's a lot of just readjustment.
A little bit of a breather day.
Yeah.
Seems like there's which I think is good. I mean, I think after the rally we've had to have a little bit of a breather day, I'm interested to see what happens with oil for the rest of this week, because that's obviously a hot topic right now. But I'm surprised volatility is not higher. I still think volatility is cheap. I've been wrong for 2 weeks now, but it feels like volatility is a little too cheap.
Yeah.
Like even if we continue this blast off mode to the upside, volatility, I feel like, needs to be higher. And when you're looking at single stocks, realize volatility is through the roof.
Yeah.
Micron, SanDisk, MBIS, CoreWeave. I mean, these stocks are moving 2x their volatility. It's crazy.
I feel like the best trade I did today was close that call spread in NCL.
For sure.
For sure. I mean, that again, it's just down 500. That's an easy call. And and when you do stuff like that, it frees your mind up. Now I'm like, is there a call spread I could buy in CL?
Sure.
Right? I'm looking now to see if it makes sense, because we could be seeing above 110, 115 in oil. Maybe
this market has given you outs, and I don't think you need to get married to positions. If you put something on and it is not a good position and you don't want to have that position on, you because of how fast things are moving, you can take that position off and take the haircut. You know, it stinks to take that loss, but you don't have to. There's volatility.
Yeah.
You don't have to just sit with your positions all the time.
That's exactly it. That's the best thing about this market right now. So, I don't know. I might, maybe not today. We'll see if oil pulls back tomorrow. If it does, I'm getting a long call spread. I'm not sure where yet, though. I don't know if it's like 115 or 118, 120 in June. I'm not sure. We'll see. But
earnings after the close, you have 5 minutes after for Palantir. So if you want to get that trade on, you got about 30 seconds to make that trade. Palantir comes out 5 minutes after the close. On semiconductors, about 15 minutes after the close here. You have Pinterest in there. I don't think anybody's really interested in that all that much. VRTX comes out right at the bell, and then Duolingo right at the bell as well.
I didn't realize
morning
ON has earnings. Oh, damn.
Which one?
ON has earnings? I didn't realize that.
Semiconductors.
Ooh.
Earnings after the close, stocks had a monster rally.
Yeah.
Of 50%, or more than that, about 100% rally in a month or so. Unbelievable.
Nice. What do you think? Rest of the week, what do you think? What kind of move?
I think volatility is cheap. I think we get a little bit of a pullback in the market. I think oil is going to stay high. I think volatility is the play. I think volatility got to be in a 22 handle. I mean, the average over the last 5 years since pandemic, VIX at 25. That's been the average.
Wow.
And we're sitting here at 18. Come on. I'm not saying vol has to come with a huge downside move, but vol needs to be higher.
Yeah, right. I think it might get back up above 20. You're right.
That's it for us. We're going to take a quick little 90-second break, come back with more Tasty Live content. You got Chris and Ilya up for overtime. We'll see you tomorrow morning. Peace.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look. Can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
Stocks are in. Is the ceasefire over? It's still Monday, May 4th, 2026. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. We're here to take you through the next 26 minutes as we wind down the trading day. A trading day defined by a revival of the we're worried about the war trade. Stocks are in a little bit. Gold is off bigger. We see oil up in the driver's seat again. Crude oil prices are trading north of 105 right now in WTI, 114 in Brent's, slight different expiries there. CL's in the M6, BZ. Brent is in the N6 contract. I digress. It's a day for the dollar as well as things coming across the board. Not a lot of good breadth out here in this equity market rebound, Ilya, as Matt, we turn our attention to those charts and definitely not the Photoshop bald picture of me. Thanks for doing that. We see here an equity market that's at 72.26, which Ilya from Futures Power Hour earlier today, we were looking for whether or not the 1 week moving average would hold, which has held on a closing basis every session since March 31st. And indeed, with the close here at 72.27 or so, for now at least, it looks like we're going to get that move. Same thing for the NASDAQ, same thing for the Russell 2000. So a little a little bit of jostling here at the start of the trading week. A little bit of a risk-off jostling at the start of the trading week. We do have Palantir earnings up here after hours, which I would dare say that maybe they've been out.
Yes, 33 cents is the result versus 28 cents expected. That's an 18% beat. Revenue of 1.63 billion against expectation of 1.54. That's a 6% beat. EPS, these are nice numbers. Get ready now. EPS is up 154% year over year. 32% quarter over quarter. Revenue up 85% year over year, 16% quarter over quarter.
Fiscal year revenue 7.65 to 7.66 billion. The previous estimate was 7.18 to 7.2. So Palantir, another one of these AI adjacent names. They have government contracts.
And war adjacent ones too.
You know, they have government contracts, not just for Department of War now, I guess we'd call it, but also for DHS with the ICE enforcement. So Palantir has its fingers in all sorts of things right now. But it's AI adjacent, AI direct, you could even argue. We see here that it's reacting.
Oscillating.
147, 148 here. Not really changing the trajectory of the S&P 500, your NASDAQ after hours, which I don't think is a surprise. Last week, Elliot, we went through these companies that represent 5 of the 7 Mag 7 names, and they help produce this big swell in earnings growth that we've seen year over year, quarter over quarter, no matter how you slice it. I'm not surprised that Palantir is not leaving a footprint. It's a nice story, just like AMD and ARM will be over the coming sessions. But it's not necessarily going to be the thing that breaks the camel's back in this market. That's probably going to have to wait till NVIDIA a few weeks out if we're thinking about earnings being a big driver again.
I mean, I think that's right. And then, as you know, that's kind of been my song and dance, that the markets were disengaged. If you the stock markets in particular were disengaged from the war trade since basically the middle of April, largely around, it seemed like, the incoming earnings docket, because no other market really unclenched. There was a little bit of a correction. Obviously, that coincided nicely with the announcement of the ceasefire. And since then, the bonds are back to where they were. All of the correction in the bonds is gone. Gold is erasing its correction. The dollar is erasing its correction. It pulled back only about halfway. No asset other than Wall Street had the full move all the way back to erase the war. And obviously, in the case of the major indices, and then some. We've set higher highs. We've set record highs on S&P, on NASDAQ. So forget the war. We erased the October highs from last year. So the coincidence there, you know, a market will always find its narrative, I guess, it was quite serendipitous. I mean, you get the ceasefire, and then at about the same time, you get Netflix kicking off the meat of the earnings reporting season. They come in on the 16th after hours, 17th is the bottom. And from there, stocks diverge. They go off as though the war trade doesn't exist. Well, my song and dance has been, this is the first week that no longer makes sense, because we've got until NVIDIA to wait for another big thing to drop. And looky here, stocks are re-engaging with the war trade today.
War trade going back on, largely driven by what we're seeing here in oil. It's 106.42 open outcry close, but we're down at 105.22 here after hours. Reports all day long that ships are being shot at in the Strait of Hormuz again. South Korean, according to South Korean news, right? So this is not American or Iranian propaganda. South Korean Yonhap reports that one of their South Korean flagged vessels took fire, multiple hits over the course of today. The Trump administration announced that they've cleared some of these fast boats that are supposed to be harassing ships and laying mines in the water as well. There was likewise the news that we had about the drones and missiles making their way into UAE airspace. So is the ceasefire over? Is the ceasefire not over? In any event, oil finding some stickiness here. So oil up. You mentioned the bonds, which all of a sudden, they look really unhealthy after today. And I think a lot of that is the realization, the reflection that this is such a significant inflation impulse. The Fed is not going to be able to cut rates anytime soon. To that point,
which is what we were talking about last week, as really the the thing you didn't want to learn.
Have you seen the rate curve pricing at the close today?
It's terrible.
It's terrible. Next meeting, July, September, maximum odds of a cut are 8.5%. But then you get to October where it switches back to a hike. And by the time you get to March 27, you look at a 25 basis point rate hike right now, priced in 59% chance. Rates would stay up there.
It's worse than that, actually, because not only are you seeing exactly what you've just described for the Fed, which was spot on, but you've seen a hawkish shift, not just for the Fed, but across every major central bank. This is not a singular phenomenon. This is the market saying there's going to be an inflation issue as a consequence of this, and it's going to happen everywhere at the same time. The ECB is now to 75 basis points in hikes this year. Bank of England is to 63. The Bank of Canada now leaning in the direction of a hike, 19 out of 25 basis points baked in. RBA is coming up tonight. They'll be delivering the first of the extra hikes that they were expected to have to do as a consequence of this war. They started this year with 50 basis points. They've already delivered 50 basis points. But when the war occurred, they got repriced to 100. We're going to get the first central bank starting to deliver on wartime rate hikes today.
Yeah, that's the RBA. I have up here on the screen the March 27 contract for the SR3. So where will Fed funds be by then? Closer at 3.75, 3.86% as it's priced at the close today, which means you're getting into rate hike territory. And indeed, Ilya, 59% chance of a hike in March of 2027. Rates would stay elevated through next summer. By the time you get to July 27, it's back to favoring a cut to bringing the rate back down for that temporary hike. And then in December 27, you'd get that first cut that we originally had planned for June of this year prior to the war starting, right? Bringing the main rate down to 3.25 to 3.5. That would come in December 27. So an 18-month delay from when the market actually gets the cut that it had been waiting for, and it has to digest a hike along the way. So you have bonds breaking down, rates are going up, 10-year yields are up, 30-year yields are up, 2-year yields are up, everything's going up today. And so gold's getting smacked around. I think, like, I know that you've been leaning short at times in gold, and I know that you and I haven't. There you go. But there's one thing about technical analysis where you and I haven't always agreed. I sometimes look at inverse head and shoulders patterns at the top of ranges, and I go, that's just continuation higher. More art than science from my view. So an evening star candlestick cluster right here, it's not the proper spot for it in a trend. It's not at the top of the trend, so to speak. But when you see that type of triplet of candlesticks, it's usually a market that's saying it's going to go lower.
And I sold more last week.
Oh, and the fact that this thing is perking up against its 1 week moving average, right? This is a market that's still risk off insofar as you need cash, you need capital, you're selling down your safe havens if you're in Asia or you're in the Middle East. And this news that we have today only says that the supply chain risk is going to happen for a longer period of time.
You see it in the break evens too. Break even rates. So inflation expectations baked into the bond market higher. We're looking at levels that we haven't seen in, let's call it almost 2 years time. Let's say a year and a half. If we want to be fair to the 5-year versus the 10-year, but we're back to levels that basically we haven't seen since early 2025, February 2025, as a matter of fact. What do we remember about February 2025?
What inflation swaps are you looking at?
I'm looking at the 5 and the 10-year break-even rates.
Oh, okay. Yeah, I'm looking at the 5-year inflation rate, and that's at the highest level of 2026 now after cratering a few weeks ago. Right?
And I mean, there's going to be a little bit of a difference in pricing when you look at the sort of implied yields when you take the difference between nominal rates and tips, which is what break-evens are, and swaps, just because of market structure. But they're telling you the same thing. They're telling you that inflation expectations have been surging with oil prices.
Yeah, the inflation expectations are coming back. Originally, it was not inflation expectations. It was a move in the term premia that was driving the market response at the long end of the curve. But that started to flip in recent days. So you're getting this horrible environment in real yields. It's not great for gold. It's not great for silver. Silver's down 4% plus today. I suppose for my own gratification, not being short's not great. Obviously, I prefer to be making money, but not losing money is nice for a change in gold and silver. I haven't put longs on in several months now, going back to the end of January, and avoiding the problem, as it were. Don't need another one here, like another hole in the head. But Elliot, I suppose the question is, when do we start looking to fade oil on this most recent bounce? The cycle high that we have, not for the M6 contract, but generally speaking in crude, is 119.48 in the early days of the war. We're currently sitting at 106.42. Do you think this is a time when we start selling the calls in a Radigan sense, fade the geopolitical risk when you get those bad headlines?
No, not at all. In fact, I'm looking for long positions. I think if you were looking at this like anything else, just ticker agnostic, what are you seeing? Oh, it's an uptrend. Oh, there was a little bit of a correction. Oh, the correction has ended because we've taken out the previous ranges swing tops. We came back, retested it, and kissed it. And now, to the point of using candlesticks in a liberal way, as you might advocate, this looks like a bullish engulfing. Now, if I were the kind of pedantic purist that I am with these setups, I would say a bullish engulfing has to happen at the bottom of a trend. Whatever. The bottom line here seems exactly the same in terms of the sentiment signal. You would look at this and you would go, well, sentiment here was the preceding day's sell-off was not only completely overturned, but a lower low was set. So the market, by the way, really attempted to climb down and was thoroughly turned around.
That's the case. So very particular to be pedantic. In the M6 and the N6 and the U6 contract, we had smaller gains than we did in the Z6 contract today. So backwardation, a little less backwardation, but for a bad reason, because prices are rising across.
This is exactly. This is telling you you're spot on.
So
this is telling you it's going higher.
Z6 does give you the bullish engulfing, right? We moved below Friday's low, and look at this, 4.6% here. In the after hours, the U6 is up 4.59, N6 3.86, M6.
Well, and the catch up in the longer out months tells you the market is getting off this idea that this is going to be some sort of a temporary excursion, as the president made it out to sound at the onset. The market is saying this is going to last longer. We need to catch up faster in the months where we thought this was going to be a flash in the pan kind of a thing.
Right, which is also to say that's why backwardation doesn't mean the market's forecasting lower prices in the future. It's why the whole thing, the whole concept of roll yield exists, because you're forced to buy up more of the back months, and it rolls up the curve as you meet the current spot price over time. It's a simplistic.
How many times have we heard over the recent weeks just
misinformation?
People going, well, obviously people think this is not a problem because the back months don't show it. And you just go, okay.
Okay. So oil very much in the driver's seat again. There's no earnings this week that could help save the day that we kind of saw last week where oil was pushing higher. Right. But who cares when you're going from 15% to 27%
right
earnings growth year over year in the equity market? But we don't have that catalyst right now. All I would point to, because I'm not going to call a top here, all I would point to is the fact that every day since March 31st, you've closed above your 1 week moving average. And if you've been holding long the S&P 500, the NASDAQ, on that basis, you've been staying long this entire time, even through these little jiggles and oscillations to the downside. And so who's to say that this is anything more than a short-term oscillation and a jiggle?
Who knows?
What if this is one of Trump's escalations to de-escalate type of things? How many times have we seen that before? He's rattling.
I don't think we know that it's not that.
You know,
I don't think we know that it's not that. I think here's what I think we know, and we talked a little bit about this yesterday on First Call. This thing is transitioning from something that was being billed as a military action to now something that is being billed as a maritime enforcement action. And so that means that you don't have to go get a war powers resolution, right? The president kept talking over the weekend about the military action is, quote, terminated. Now, what does that mean for markets? It means the Strait of Hormuz is closed indefinitely. Because what are we doing? Are we escorting ships out? No. We're quote unquote coordinating with them to tell them what the good route is. Iran shoots at one of those ships. They're not going to go. And we just saw some shelling, as you mentioned, that there was a Korean vessel shot at earlier today.
You're making me wonder, right now the deficit, according to the government, according to what we see in the Middle East, is about 10 million barrels per day. That's the result of the war. So supplies have been diverted. Saudi Arabia has this pipeline that goes to the Red Sea, yada, yada, yada. So it's not, 20 million barrels per day make their way through the Strait of Hormuz. Right now, the impact of the war is net 10 have been lobbed off. If we were to keep demand static and reduce supply by 10%, we can take 100 divided by 90 and multiply it by the price of oil before the war, and you get your theoretical equilibrium price for where it's a simple economic model for how do you figure out price equilibrium after something like this, after a supply shock.
Sure.
Okay. So where does that leave us then? 10 over 9 is, we'll call it, what, an 11% increase? So 11% above $70, $67 pre-war. We're in the neighborhood of 75 to 80. So if that's the math, just very back of the envelope math for where oil would have adjusted, assuming there's no other risk in the market, are we looking at like $30 of geopolitical risk premium that's baked in right now because of risk to that additional 10 million barrels, right? You're going to have to there's now going to be longer times to get oil from major producers, longer wait times at refiners. So supplies of refined fuel products are going to be lower, right? That's obviously a knock-on effect, but we're moving another 10 million barrels per day because Saudi pipelines could be hit or UAE facilities could be hit or yada, yada. That's obviously being baked into the price still. Even if this thing settles, Ilya, I'm just looking out into the future. Selling puts, if you get the opportunity on a pullback on a headline at 75, 80, 85, it feels like it's going to be a pretty good bet for the next few months. Even if the market gives you, a day where it oil's off $10 or $15, you're going to have to just grin and bear it.
I mean, that could be. If
I'm just putting my playbook here for what happens on the other side.
I mean, the question I think that you have to ask yourself is, can you justify those numbers? Fine. Yes, maybe. That's hardly the point. Because you really don't know what the inflationary impetus is, because it's not about a particular price in crude. It's about a particular price in crude and nat gas and naphtha and
grains,
and polyethylene and aluminum and helium, right? The problem with the Strait of Hormuz is you've taken all kinds of things off the board, and if the setup is as it is geopolitically, you've taken them off indefinitely. And so this is really the issue now. If the president has said, ostensibly, and I can't believe I didn't tweet this over the weekend. I was having this conversation. If you are the president here and you don't want to seek a War Powers Act resolution, then what do? You go, well, from the very beginning, we said our job was to degrade Iran's missile launch capacity and nuclear capacity. We never said anything about the Strait of Hormuz or regime change. We said those were nice to haves. We never said those were the objectives. So, okay, we're not going to go seek a war powers resolution because we're done. Hence the president saying that the military action is terminated. So instead, what do we have? We have a maritime enforcement action. We're going to stay in the area to help ships hopelessly stranded. Why are they stranded in the Persian Gulf? We're going to help them out. How? Are we going to escort them? No. That's not what we're doing. We're talking at them and telling them where maybe there's not mines. So this then becomes an indefinite kind of thing because Iran gets a vote on
You're
this
so much more
assistance.
optimistic about how the war is going than I am. It's so funny.
Oh, I'm not optimistic at all. I don't think it's going anywhere. I think what we've done is we've just frozen this conflict in time with the Strait of Hormuz indefinitely shut. because all Iran has to do to maintain its leverage, as they did with the Korean ship today, is shoot at one boat once.
Well, they just got to get all the ships out of there, and then.
Well, and that's the whole thing. That's the whole thing. So
see if they can pull it off, Ilya.
The question now becomes, who can wait longer? And ostensibly, the U.S. can wait longer because the U.S. isn't as dependent on the strait, but the world at large is going to moan and groan, and in particular, China.
Well, China's already made the move overnight, telling its refiners to ignore the sanctions on Iranian oil. So forget the moaning and groaning. They're just saying, like, yeah, just tell the U.S. to take a hike.
Well, which is very interesting, because now we're going to see if this really comes to a head. Everybody that was sitting around here going, de-dollarization, CIPS will replace SWIFT. Well, here's your test. What's the dollar doing today? Oh, yeah, it's up.
It is up on a day where investors are looking for more cash to pay for stuff because oil prices are back higher, and they're higher across the curve. Will the war trade continue tomorrow, Ilya? I'm playing this ping pong right now in crude. I did put on a new crude position today. I figure, given where we are right now at 106, given the highs that we've seen in this market here, what are the odds that we get a big significant burst higher or lower? So I like operating around 75, 77. I like going out into the market and thinking that this thing isn't going to trade significantly to the upside. Been trying to get filled on an iron condor position. Haven't been able to, but it is in the queue. Getting through 123, 125 means that you're clearing the 119.48 high that we had at the start of the war. Getting through 75 would mean breaking the April 17th low. And currently at those levels, you're getting a 3-to-1 risk to reward at a 66% probability of profit. So right at 43 days, it's pretty close to the 45 and 21 out. I will happily take 3-to-1 and lean against a 25% rally or collapse in crude from here at these levels. Obviously, things can change, but I'm more of the view I can't wait for this market to come in, not because I'm short, but because I am going to be selling so many puts in oil below $80 when this thing comes back down. Across expirations and durations. But that's tomorrow's problem, because overtime's out of time. Ilya, you're up next with macro money, so people should stick around. I hope they do. Tasty Live will be back in 2 minutes. See you tomorrow.
You there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Is it back to the war trade for stock markets? That's what we're going to try to figure out here today. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what a way to start the week. We had quite the rally in stock markets into the second half of April. And that's had us scratching our heads for a few weeks here because that move did not seem to find confirmation in other markets. And we were looking at it and saying, well, how come just stocks seem to think the war is over? And of course, that lined up nicely with the earnings season and maybe is starting to revert now that we have a big lull in big company reporting. So first things first, we'll take a look here at the price action and what the market gave us at the start of the week. Take a look at how that fits within what has been happening here thematically. And then we'll take a look at what's coming up next to see how the story might evolve from here. So let's begin, of course, with the S&P as our go-to barometer for risk sentiment. And this is really the essence of what we were just saying as we were getting going to our conversation. So this was where the S&P was sitting basically since October of last year, going into this year, just oscillating, waiting. This is where the war occurs and things break down. As you get the announcement of a ceasefire, there is a bounce to retest the underside of the range. And then we see, of course, this dramatic rally. And tellingly enough, this bottom occurs just as we're getting news of a ceasefire. And this breakout right here, the place where we go away from this being just a correction to retest the underside of a broken range, and into a rally that then runs away, not only to erase all of the impact of the war, but also to erase all of the digestion at the end of last year and actually set new record highs. This happens at the dawn of the earnings season. So the gap here is the 17th. And of course, we begin the meaty part of the earnings season with Netflix after the close on the 16th. Now, these turns then occur across markets, but none of them have this, oh, the war is over, we're going to fully erase everything and get back to new highs, nothing matters kind of price action. And of course, as we've pointed out, there's a number of things that are standout about all of this. First, volumes are declining the entire way up. So this aggressive move higher is not sucking in greater participation. In fact, we can see most of the big volume days here on the way up are down days. These two red days right here. Otherwise, there is an almost level change from here to here right there, where this stops being a correction and starts being something that looks like it's erasing this momentum. Moreover, speaking of momentum, it's fading. Looking at relative strength here, we can see we still, as we're setting higher highs on the price, we're not setting it on this relative strength index, which is just an oscillator that I chose because I like its simplicity. You can choose whatever oscillator you like. They're going to show you basically the same thing. This one is my favorite because the arithmetic behind it is somewhere around a third grade level, and it's a single line. You could draw it in with a crayon. Very, very simple. So as we're going higher, fading momentum, the propensity for prices to close up relative to down is giving it up, even as the price itself is setting higher highs. And those higher highs are occurring on diminishing volume. So conviction here isn't showing up. And tellingly, this occurs right as we get those big earnings announcements from mega cap tech names. And that was, of course, the story of last week for the most part. We had Microsoft, we had Google, we had all of the usual suspects, Meta, Amazon. So all of these names gave us results as robust as one might expect. But now, as we start this week, and there is a lull in these names until NVIDIA reports on the 20th of this month, suddenly we seem to have taken a step back in the direction of where the breakout after those reports seem to occur. So those reports happen after the close on Wednesday. They start, then Apple comes on Thursday. We'll get the big shot higher on Thursday going into Apple after that initial first batch of 4. And then we've stalled. Now, if we were extrapolating the great and powerful AI future, you would think momentum would continue to carry forward because that's not a story for 24 or 48 hours. It's a story for years, not quarters. And yet, we don't see it and volumes don't pick up. We'll get a bit of a taste of big splash tech earnings, although, of course, in terms of market cap, Palantir is nowhere near these hyperscalers. But nevertheless, it's a company at the forefront of the conversation and at the forefront of the defense tech conversation, too. And so we see the earnings, they're solid to say the least. 18% beat on EPS, 6% beat on revenue. EPS is up 154% year over year, and revenue is up 85% year over year. So very strong numbers, certainly, on the whole. Company's doing great. But the response from markets, muted. We try to go higher, we try to go lower, we end up going nowhere. And so the markets clearly did not seem to take this as a positive sentiment marker the way the Amazon, Google, Meta numbers looked last week, Microsoft, the way that Apple looked last week. Clearly, this was not that kind of a thing, either because it's not big enough or because the sentiment story was already squeezed out of the earnings conversation last week. But for whatever reason, the markets decide to pay attention to what has been going on in the rest of the global financial universe this entire time. So we can see that crude oil is back up today, but of course it's been rising, even though stocks have been ignoring it, and is now back near the top of its range since the start of the war. There was a dramatic shift higher in interest rates. So that correction that happened to the bonds with the ceasefire, that move right here, this, of course, going into April low is exactly the same low as you see in stocks. That's this. But once you get up to the middle of the month, stocks run away. Bonds, not so much. They start going the other way. They start going back down. Interest rates start building back up because the inflation narrative coming out of oil here, again, here's the middle of the month. This is where things diverge again. Oil comes back up, stocks, not a care in the world, building higher. So it looks like the war trade has been back in effect, of course, for the better part of 2.5 weeks elsewhere, and today is just more of the same. Higher crude oil, so higher inflation pass-through risk, so higher interest rates, so lower bonds. Gold leaks lower because, of course, all of this means higher rates, and gold doesn't yield anything, so its relative appeal is diminished. The US dollar pops back up. Higher yields and a kind of defensive view on sentiment with stocks down a bit, even though they gapped open higher at the start of the week. That all works in the dollar's favor. And so here we are. So this is extending across all of the kind of classic war trade assets. And of course, in the universe uncorrelated to the war trade, apparently, Bitcoin continues to march higher. So this continues to occur seemingly with no regard for what's going on in the war trade narrative. This is not caring about what's going on in yields. It's not caring about what's going on in the dollar. It's quietly extending the range break that we've been watching here basically since early April. It just so happens that the sentiment bottom is about the same, but we can clearly see this is not exactly a story about stocks because stocks are down and this is not, at least today. Now, last week we learned just how important the hyperscalers and the AI CapEx story is for the economy at large. And so it seemed to make sense that the stock market would decouple to kind of give that its due. We saw first quarter GDP numbers tell us that although there was a rebound from this government shutdown here, it really was more a story about fixed investment of the non-residential variety, which is, of course, the bit where building data centers appears. That was the largest contribution to overall GDP at 1.39 percentage points of the 2% growth number. Now, obviously, we can see the fourth quarter of last year was unfavorably hamstrung by a government shutdown. That's why this government expenditure bit is below zero. And now we've had a rebound to 2%. Before the shutdown, we were averaging closer to 4 here. So we've only come back about halfway, but the way that that's happened is mainly because of this. Now, by comparison, consumption only added about 1 8/10 of a percent to the headline figure. And so rarely do you see this, but we can see the consumer has been slowing now for 3 consecutive quarters. Whereas CAPEX spending absolutely shot to the moon in the first quarter. And so we can see that it is really and truly data center construction that seems to be powering the economy more so than the consumer, which is an absolute shock when we consider that non-residential investment, that's this yellow line right here, it's only about 14% of GDP, whereas consumption is 68% of GDP. And so for this yellow bit to be a bigger contributor to growth, as we can see here, than consumption, it has to be going a lot faster. And we can see that. We can see that consumption here is growing at a rate maybe closer to 1%, whereas what we're seeing for business investment is now in excess of 10. And that's how you get a 14% chunk of GDP contributing more than a 68% chunk of GDP. It's just going that much faster. But as we look at what we're seeing in front of us on a day like today, we can see very clearly where the vulnerability is. Again, what did we see? Higher oil, higher interest rates, stronger dollar, weaker gold, all of that reflecting higher interest rates, and stocks in the absence of big splash earnings, once again responding, as they did at the onset of the war, with weakness. Why? Well, because everything that we're seeing emerge here suggests the very thing that would prevent the thing that we saw in the first quarter from continuing. We can see here going into the latest data, we already have inflation rising at the core, and that's before we even talk about oil. So starting from the beginning of the year, we can see housing inflation is rising. Services inflation is back to the kind of monthly gains we saw in the middle of 2025 before the bout of disinflation in the second half of the year that then inspired the Fed to cut rates last year, or helped at least to clear the way. We see that in goods, the Fed's gamble that we're going to see a rebasing of tariff inflation out of the equation by around this time. That's going away because, of course, it turns out goods inflation is not only sticky, but rising again. And some of these gains are some of the highest we'd seen since the middle of last year. So again, this idea that we were going to get continued disinflation after a relatively favorable second half of last year seems to be just not there. And then on top of this, because obviously all of this is core, as we can see, it excludes food and energy. On top of that is the oil shock. And here, as we've said, it's about a month's delay between major moves in oil and where they filter down to CPI. And we can see that perhaps the January-February uptick in oil is in the numbers so far. When we get the view of CPI next week, the April data, we might well start to see this spike. So it's not even there yet. And we're already at some of the highest levels in a few years. Now, of course, the bond market has known about this for some time. And so we see these break-even rates, the inflation expectations baked into 5 and 10-year U.S. government bonds. This is the difference between nominal rates, which is what we'd normally look at as just basic U.S. Treasury bond rates, and TIPS yields, Treasury inflation-protected securities. And if we take the difference between those yields, then we get the inflation differential to get from one to the other, from nominal to real. So that gives us a baseline for inflation expectations as they are priced into the bond market. And we can see they've been surging since this war, but even since the beginning of the year as crude oil started to drift higher. On the 5-year, we're basically now at the highest level since early 2025, since before the tariff scare. It is a similar story, not quite as dramatic, but a similar story for what's going on in the 10-year. You're pretty much back to early last year. And that, of course, tells you that the markets already perceive that this inflation risk is longer lasting. Moreover, we can see the wedge between these has widened out significantly, whereas at the start of the year, they were almost aligned. And so we can see the market start to extrapolate more and more of an inflation risk over time. Now, why is this so significant? Well, for consumers, this means they need to pay more and more and more for these inputs, and of course, energy critical among them, but also food, because the Strait of Hormuz also disrupts fertilizer and planting. Anything made of plastic, because it disrupts the shipment of those and the precursors. For example, most of the world's polyethylene that travels through a single spot, the Strait of Hormuz is the biggest single choke point. And that's the most common form of plastic. There's helium that goes into AI manufacture and the manufacture of high-end tech components. And this is really the key. The AI supply chain is a very internationalized supply chain. So yes, there is all this capex. In fact, the big announcements last week, 5 of the 7 of the Mag 7 reported, as we said, and announced something to the tune of $750 billion in more capex. But of course, that's going to have to be buying stuff that is now being disrupted by the Strait. And even if these companies, in their infinite ability to pay, decide to splash out for higher prices and say, listen, it doesn't matter what price it is, just get me the stuff I need to build my data centers, well, okay, but that just feeds inflation more. And of course, that then feeds interest rates and generates this negative feedback loop to consumers that not only have a hard time with more expensive things, but also have a hard time financing to buy those expensive things. But of course, that very same thing applies to the hyperscalers too. It applies to the cost of inputs to build data centers. It applies to the cost of doing so. It applies to financing these things, just as, for example, some of these AI companies get ready to go public and need to finance that somehow. So we're looking at these disruptions and these inflationary impulses as hampering both of these things. And so unless you can maintain this aggressive speed, if both are hampered, it starts to become difficult to envision that something that's only 14% of GDP can continue to outpace something that's 68% if both start to get more sluggish around this narrative. Now, next steps are going to come at us via the Institute of Supply Management's service sector data. We can see last week we saw a slightly weaker than expected number for manufacturing, 52.7 versus 53 expected. As ever, these are done in the logic of PMIs. So 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. When we look at what the headline manufacturing number did, ultimately it doesn't look like much. And the expectation is that the service sector number, which comes out tomorrow, is going to give us a slight cool down, but nothing really terribly dramatic. We'd still be basically in the range for growth that we've been sitting in looking at this composite model since we essentially left COVID lockdowns, things normalized. This was the big kind of COVID catch-up growth period. Then the economy sort of landed back to normal, and this would be within the range of normal. And really, where things start to get worrying is when you look at the internals. So here's your manufacturing sector. There we can see the past 3 months have given us something relatively analog as far as performance. But the big issue seems to be we have surging prices, shrinking employment, and now demand seems to be starting to come off as new orders tick down. So the question becomes, how long before this aggressive cost impulse really lands here and starts to depress this, even just because the inputs become prohibitive to get. And so this will be what we're looking at most closely as the service sector numbers come out, less so where we are for baseline demand, more so where we are for the employment and the pricing situation. Because if prices here start to look astronomical as well, as they've started to suggest, well, then all of the inflation concerns that we've been talking about just get reinforcement. And of course, we can see what the markets think of all of this. As we start this week, the expectation for monetary policy from major central banks shifting back up toward the initial highs where we were when first the war broke out and we got that inflationary shock. Notice, here's where at the kind of start of April, the market started to flirt with the idea of a ceasefire, and maybe things would get a little bit better. And so you get some moderation from the Fed. This is the outlook by year end here. And we can see the Fed maybe started to think about a little bit more in the direction of cuts. Well, all that's gone. The moderation for the ECB and the Bank of England came off from baking in 2 rate hikes to maybe closer to 1. Well, that's gone. So now we've got 75 basis points in hikes baked in for the ECB, well in excess of 50 for the Bank of England, at least 1 hike now looking likely for the Bank of Canada. The Reserve Bank of Australia, the RBA, has already delivered the 2 rate hikes they were on the menu for at the start of the year. We can see here they were in for 50 basis points. Those are already done. They're expected to start on the next batch here. We can see the war adjusted this to 1 full percentage point in rate hikes. And we're about to see the first war-inspired hike today, which will be the 3rd in the sequence, with 1 more to go. The comments from the Bank of England and the ECB clearly only reinforced this last week. And for the Fed, we're back at 0. So all of the rate cuts we were expecting before the war look well and truly out of possibilities. In fact, it seems like for all of next year, until you get until the very, very end of the year, October, December, the Fed is expected to stay on hold, but if it does move, it is likelier to hike than cut, looking at what the markets are pricing in. And so, with that in mind, I've increased my exposure on the short side of gold. I'm still long the US dollar. I've added more to the long side in Bitcoin via IBIT call verticals because it seems to be doing its own thing, and that thing seems to be still pointed higher. I'm still sitting on the short side of the stock indexes, looking for this pause in earnings reporting to bring the war trade back into the forefront, as we're seeing here today. And so I still have put verticals here with a good bit of time left in the S&P, in the NASDAQ. I approached it as selling calls when I re-upped to roll forward in the Russell. So even more time here, but a little bit of a different structure. And still long the put verticals in the long end of the curve. So short the bonds, looking for yields to keep going higher, because of course that seems to be the hallmark of this war trade being re-engaged as we see today. And that is macro money for today. As ever, we are here right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things might go therefrom. Also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.